that makes sense, it will come up on the screen. So if you want to keep watching, please keep watching. And understand that a lot of what we talk about is going to end up being visual too.
And this is Rob Reinhold. I am the risk manager at Maverick Currencies, where I oversee over 100 traders while they're trading Forex and crypto live.
And today we are answering the question, why is trading psychology important? What's the point of making an entire podcast on this one particular subject? To start us off, let's get one thing out of the way. It almost doesn't matter what your strategy is compared to everybody else's strategy. And we spend so much time on these things. If you don't have your trading psychology down, and again, this is something that so few people even pay attention to, it doesn't matter what your system even is. Would you agree with that, Rob?
I've seen some crazy shit in my 15 years of doing risk management. I've watched pretty much every strategy get implemented, and one of the craziest ones that I've seen was where a trader was using astrology to make their trades. And what I mean by that is they were literally looking up at the star charts and saying, okay, well, Venus is now in this position, and when Venus is in this position, then I'm going to be long these and short these. And I remember thinking, okay, this is insane. And I told them it was insane. And they said, no, look at the data. And they actually showed me the data. And the data showed that there was an edge there. Now look, I don't know why there was an edge there. I don't really care. Here's one of the ironies of things. The more people that are actually doing that, it is going to actually create an edge in the market. If you've got a whole bunch of people looking at Venus, where it is, and making trading decisions off of that, if enough of them believe it, there's actually going to be a track record and an edge there. Now look, I'm not saying look at the stars and make your trades off the stars, but what I'm saying is I've seen all these crazy things and some of them will work. And it's not because of Venus, or it's not because of a stochastics or anything. It's because they implement the system religiously without fail.
Yeah, and I'm going to tell you from the YouTube side, I can think of a good 2 or 3 channels off the top of my head that trade that way. And those channels actually do pretty good numbers.
I used to think it was a total joke, and I've watched some of our traders follow it, and it's no joke anymore. It's legit.
Yeah. So everybody who's listening right now, this is not an advertisement for trading with astrology. If you want to do that, that is up to you. And if you want to do that, please unsubscribe from my channel because I have nothing more to say to you. But moving on, there are, I've talked about this on my channel, and I was really happy to see Rob bring this up too. There's 3 main components of trading. You could argue 4 or 5, and maybe we'll do that a different day. But when it comes down to these 3 things, technical analysis, money management, and trading psychology, those have always been the 3 cornerstones for me, and it sounds like it is for Rob too. Fundamental analysis, some people think has a place. I have personal thoughts on this. You can always consult my channel and type in fundamental analysis to see what I think about this. We may discuss that at another episode, but let's just stick to these 3 for now. You have technical analysis, money management, risk management, and then trading psychology. Now, Rob, where would you rank those 3 in order of importance? Remember, this is a trading psychology podcast.
Okay, that's a lot of pressure. This is something I've said for years. I've been trading now for over 25 years, and I truly believe it doesn't really matter how or where you enter a trade. Now, look, I know that sounds crazy. I'm not saying if you've got a short-term scalping strategy, that's not important. Let's say that you're trading over a couple of hours or a couple of days. Your entry is literally the least important part of the trade. The most important part is your management. That is basically where you're going to take your loss, where you're going to take your gain, what is your position sizing. But really what it comes down to is if you don't have your trading psychology down, there's no way that you're going to be able to follow that. And if you can't follow your risk management, you will lose in this business every single time. I don't care if you're using Venus. I don't care if you're flipping coins. I don't care what you're using. I mean, sacrifice a chicken and make a trade off that. You won't make it in this business if your risk management isn't on point.
Okay, so you put risk management at the top, you're saying, right?
Yes, but as you mentioned, this is a psychology podcast. The point is, if you can't follow your risk management, you'll fail.
And that's exactly why I had my order the exact same as you did for a long time. I had risk management first, then psychology, then technical analysis. And then over time, I switched it. And I'll tell you why. And I want your thoughts on this. A lot of people, especially early on, would be really frustrated with me because I wasn't giving away. I was teaching people how to put together an algorithm, but I wouldn't just give them my algorithm, all the pieces in it. And all those pieces include money management. The algorithm we do on No Nonsense Forex, it focuses on entries and money management at the same time. And what I would always tell these people is like, look, okay, for one, this content's free. If I was going to give you something that I worked on for 5 years up into that point, you better bet it's going to cost money. I don't just give away my labor like that for free. Two, even if I were to give it to you, there is a very, very good chance, especially if you're somebody that asks for things like this and gets mad when I don't give them to you, there's a very, very good chance that you would take it and just find a way to screw it up anyway. And then I would hear how it's a scam and how it doesn't work, because almost nobody has their psychology locked down. So no matter what you get, it could be the holy grail. Even if risk management is baked into that cake, they will still screw it up. So without that psychology, you have nothing. That's why eventually I had to put it to the top.
It is at the top. And just to let you know, when someone joins Maverick Currencies, we actually have them, the very first thing they do is they take a trading psychology test. And it's based on the Myers-Briggs psychology profiles to where you get your personality style. And one of the big problems is, as you said, if you gave someone the exact way you trade, but they have a totally different personality style than you, they're much more risk averse, and you give them your trading system that takes on a lot of risk, there's no way they're going to follow that like you. They just can't do it. And so you're exactly right, where people have to build things themselves to fit their personality, because if it doesn't fit their personality, they can't follow it. And that's what the whole business is following your system.
Yeah, and so that kind of segues really nice into our next section here, and it's the biggest reason traders fail. We've kind of glossed over that first one. Even if you have a proven system, if you have weak psychology, it just doesn't matter because the car just doesn't go. We would be remiss if we didn't touch on this one point too, that you still have to put together a system. Let's not leave that off the table. Most people don't have one. They don't have the drive to put one together. And usually as soon as one or two little things fail, they just up and completely quit. I get a lot of it on my end, people that just don't want to put in the work. So we don't even get to the psychology part yet. What are you seeing?
Well, at Maverick Currencies, we actually force people to go through a pretty substantial process in order to trade our capital. We are getting people that have gone through a lot of the building a system, testing a system, back testing a system. We don't let them trade our capital until they have a proven system that they have developed, back tested, and demo tested before they even can go live. So yeah, we get people a little bit further down the road than you because, like I said, we force them to go through the work to build that system.
But I joined up in 2014. I'm not sure how much it's changed, but you had people who had complete systems all ready to go. And then you had people that had all the tools, that you need to be a really great trader, but just didn't quite have the system yet. Is that fair to say that's kind of still what you're dealing with now?
Yeah, we got people that join that are ready to go, and then we just basically turn them on and let them go. And some people have some work to where they get to the point where they have built a system that actually has an edge. And that's what it's all about. If you don't have a system that has a proven edge, you should be on demo. You should be on demo working on that. Once you have an edge, after that, it's just, can you not screw it up? And that's where trading psychology comes in.
That's it. For those of you guys wondering about demo, that's going to be its whole other episode. We can spend a lot of time on that. But what I want to do is maybe take this another level deeper. And when it comes to people screwing up what could be a perfectly good system, you can just say it happens all the time and then leave it at that. But we need to go deeper than that and talk about why. Because I always say, you can't really solve the problem until you identify the problem first. And we're going to identify so many problems on this podcast, but just in a really broad, general sense. One of the things I always talk about, Rob, is emotions. how even if you're not an emotional person in real life, once you step in front of those charts and start pulling the trigger on your own money, then all bets are off the table. And the best traders I know, like, don't even care if they win or lose. They're just so emotionally dead. And this is something I always shoot for, that they just let their system work for them. But it's tough. When we're watching our own money go up and down, sometimes at a very fast rate, we have the tendency to want to jump in and sit there and think that we are so clairvoyant that we can tap into these markets and know exactly where price is going to go. And that's never the answer. Speak more to the emotions that you've seen people completely sabotage their own results on, because I've done it on my end, but I'm curious to see what you have on yours.
This is such an interesting thing. I am such a science nerd. And 20, 30 years ago, there really wasn't the science there of what happens inside a human brain when we take risk. There is a whole body of research out there, and we dive into this at Maverick Currencies over and over again and tell people, hey, look, if you think that you're going to be thinking with your prefrontal cortex where rational decisions are made, all of the studies show that the second money is on the line, it goes to a different part of the brain where you're no longer processing it factually. You're processing it in a totally different section of the brain. Here's one study I found very interesting. They had a bunch of people play blackjack. Blackjack's a pretty basic game. And when there was no money on the line, they hooked everyone up to an MRI machine, and all of their neurons were firing in their prefrontal cortex, where logic and reason is used. The second they went to actually using money, prefrontal cortex no longer fired as much, and the insula, where we make decisions of fight or flight, all of a sudden that started firing. The neurons started firing there. Now, this was money that was given to them to play with. So this was like free money that they're playing with. They still had a different brain response. Then when they took out their own money out of their own pockets and put it on the line, now there was almost no prefrontal cortex activity whatsoever. We tell our traders, you're not even using the right part of your brain. You think you are, but you're not. It's what you said, Patrick, to be dead inside. That is your goal. That is your goal, to have everything happening in the prefrontal cortex, which is all very robotic, very systematic. You don't want to let it go to any other part of your brain. And if you don't even understand that that's how your brain works, you're going to be making mistakes.
I really wish I had that information that I could put on my channel that you just said. That is fire. I love that. And I think it really speaks to why the overall fail rate in Forex is so high. So first of all, the way I define fail rate is, okay, if you take 1,000 traders, 1,000 random traders, Forex traders, how many of them actually get to a place that they wanted to be when they first started? And so most of that is trading professionally and making enough money to where they don't have to really worry about it. They can just do that full time and everything's great. So out of 1,000 random Forex traders, how many of them do you think actually get to that place? And then I'll tell you my number.
Well, that's a very interesting question, and we do have the data behind this. So FXCM, the largest Forex broker in the United States, they actually took one entire year. They took 12 million trades out of their retail division, and they actually analyzed those 12 million trades. And when they broke them all down, 59% of those trades were winners. So the vast majority of retail traders could be right more than they're wrong. However, when they looked and saw how many accounts made money, it was somewhere around 7%. It was around 7% of those accounts actually had a profitable return. When they dove deeper into it, they looked at the numbers. The average gain on a trade was somewhere around 59 pips, and the average loss was around 117. Almost a negative 2-to-1 reward to risk ratio. That's why people are failing, is because they aren't getting those numbers correct.
And so out of those people who are actually in that small enough basket to where they actually made plus money over time, how many of those people do you think are able to do it consistently enough to make this their primary source of income? I mean, go back to that 1,000 number again. Out of 1,000 random traders, how many do you think it is? Is it 10? Is it less?
That is a good question. And this is where I'm now I don't have any hard data. And I always like to have hard data. So I call this cocktail talk, where it's really good to have a drink in your hand as you're talking about this, because it doesn't really mean anything. But for me, I mean, if 7% were able to do it over a year's worth of time, obviously it's going to be less than 7%. But I think if you've proven that you can do it over a year's worth of time, it is a pretty repeatable thing you can do. Sure, there was a couple people in there that probably got lucky, had a good run, but I think for the most part, it's going to be somewhere around that 3 to 5%.
Okay, so I have absolutely no data on this, but that didn't stop me from coming up with a number that I used on my channel as kind of the linchpin for everything else. And I actually said out of 1,000 random Forex traders, I would be willing to bet. And if somebody wanted to take the over or under on this, I actually would, if there was a way to know for sure, which there really isn't. But I would say it's closer to about 1 out of every 1,000 traders actually trade at a professional level comfortably, which is really where everybody wants to be. And I always call it the 99.9%. So we're up against really, really long odds.
Yeah.
And after talking to you this episode, to find out that even if you can make a really great profitable system, which is really hard in itself, we're not even using the right parts of our brain to trade. And how many people out there even realize it? If you do take the time to put together a really great system and you actually understand what's going on in your own head and you actually do something about it, I think those odds can go way up. What do you think?
They absolutely can. And I'm going to introduce a pretty bizarre concept here, and it's called the illusion of free will. And I want everyone to go out and fall down a rabbit hole. Sam Harris has some great stuff on this. Basically, it's the concept that it takes about 3 to 5 seconds for your brain to spool up enough mental energy to make a complex decision. That's about how much time it takes. They've measured it with MRIs. But ironically, most complex decisions are made well before that. Got to scientists, they asked the question, well, how is this possible? How is this possible that people are making decisions before the brain spools up enough energy to make that decision? And the answer is there's programs. Your brain, that's what your brain does. It writes programs. The first time you touched a hot stove, you didn't know anything about it. You touched a hot stove and your brain wrote a program that said, hey, next time you get next to a stove, you need to be aware. You didn't have to think about that anymore. The next time you went near a stove as a kid, you said, oh, yeah, I'm going to check and see if that's hot. You didn't consciously think about that. The whole idea of the illusion of free will is that we are just walking programs, and we're just firing off these programs that have been written in our brains. And so if you go out into the market and you start to trade, you think you have control over what you're doing, but you're just running programs that you wrote years ago. It might have been stuff your parents told you. It might have just been from your DNA, from your personality style. Until you get to the point where you can recognize that, that's the only time behavior change is even possible. Because if you think you're still in control and you still think you're using logic and reason, then you have no ability to ever fix the problem. And so this is just a very new revolutionary approach to trading psychology, is that it's really about rewriting those programs in your brain. And that's the process to become a professional trader.
Yeah, this is perfect because everything you're saying, I wish I had this information that I could put in my own videos back when I was making them and back when I wrote my book. This would have been super, super helpful. So I'm glad we're doing this.
Well, this is only a few years old.
So,
I mean, the study of the brain and why we do things, behavioral economics, it's not a very old discipline in science.
okay, because it sounds like something that would be, that go back pretty far, but you're saying it's like give me a year, like right about when.
Behavioral economics became a thing in the late 80s, but it was actually mocked quite a bit in the economics community. And it really wasn't until, I'd say, the early 2000s, maybe 2010, where it was broadly accepted as a legitimate scientific process.
That's cool. Well, I can't wait to hear more about that going forward. But for now, we've kind of identified the problem to a degree, at least. There's a lot more identifying to do. But I think we've touched it pretty good on a broad scale. Now let's talk about a really quick solution. Like I said, we're going to go over solutions 2 in future episodes. But for now, if you were not already aware of my channel and kind of the battle cry that we always use there are 3 rules that we use to at least try to combat this and at least put our minds in the right place before the game even starts. My 3 rules, and tell me what you think about this, Rob, are: rule number 1, trade your system. Step number 2, stay the fuck out of the way. Step number 3, repeat. So simple, yet so hard to do. That's why we're not just ending the podcast series here. That's why we're going further.
No, I think we did it.
But I want to get your take on it.
Just don't mess it up. It's easy. We've done it. We've succeeded at this.
Oh, we've done it. All right, guys, this has been the final episode of the Trading Psychology Podcast. Rob and I would like to thank you. But yeah, anything to add to that, or anything that you tell your traders that I might have left out?
So I can't call it eloquent the way you said it, but it is so just brutally honest. That is the goal. That is the struggle. Learning how to read a stochastics or learning how to find a pattern, okay, that takes a little time. But how to manage your emotions and how to get to the point where you don't make the mistakes and you no longer even have the compulsion to make the mistakes, to where you're not fighting any battles when you're trading, that is the goal. And the only way to get to that goal is to really dive deep inside of you. And I'm going to come back to the illusion of free will. The idea that you're going to be running programs. If you make a mistake, it's because you have a program written inside you. That's why you made that mistake. And if you just tell yourself, well, I'm just going to be more disciplined this time, your brain didn't even spool up enough energy to override that program before you made it. You're going to make it again. That's why this trading psychology is such an important thing, because it's very simple what you said. Trade your system, stay out of the way. Can you stay out of the way? And that's where the battle is.
Yep. Everybody who knows my channel knows about those 3 steps, and yet they still come back to these videos anyway and say, oh man, I really needed to watch this again because I'm really struggling with this. So, but that's okay. We got your back. We will keep this going. We'll keep it going as long as we need to. So stick around and hit subscribe, hit the bell, and we will be back next week with a brand new episode of the Trading Psychology Podcast. This is VP signing off, and for Rob,
we'll see you later. Goodbye.
This is the Trading Psychology Podcast, and this is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold.
Hey, everybody. This is Rob Reinhold. I am the risk manager at Maverick Currencies, where I oversee hundreds of traders and watch their trades every single day.
And today's episode is sponsored by something that I'm not very familiar with, but something that Rob is quite familiar with. Rob, tell us who we have this week.
Well, this week we are sponsored by TraderPersonalityTest.com. Now, this is a website that Maverick Trading and Maverick Currencies have been working on for years and years. And what we wanted to do is we wanted to develop a test specifically for traders. Now, it is based upon the Myers-Briggs personality assessments, but we wanted to make it about trading for traders. So if you go to TraderPersonalityTest.com, you can do a free test there. And basically, it's going to give you your trading personality, and it's going to give you your strengths, your weaknesses, what you need to watch out for as a trader. And it's really just to help you out to get to understand a little bit more about you and who you are when you get into trading your system.
And for those of us listening to this on YouTube, feel free to go in the comments section and tell us the results of this test. I'd be really interested to see the varied responses we get, or maybe they're really consistent. I don't know. But that's cool. Now, moving on.
Wait,
into
VP, it is a pass-fail test, just so they know. So if you failed it, then you have no personality.
That I didn't know. Okay. Well, let me know if you pass or if you fail, and be honest. I guess from here, moving on into episode 2. So we are on to episode 2. And full disclosure, Rob and I have a shared Google sheet where we put down all of our show ideas and we kind of put them in order. Now, some of these ideas are from me and some of these ideas are from him. But this is really good because a lot of my ideas is stuff you've already heard before. You know, a lot of Rob's are not. This is going to be brand new stuff. So I'm pretty excited to bring this one to you because this is definitely his. This episode is going to be on overall habits. Something I don't really cover, but something Rob does. Rob, I will let you take the wheel on this one, and you take this any direction you want to, and I will just sit in the passenger seat and do what I need to do.
Well, I definitely want you here to ask a couple questions for you. Because in the last episode, I talked about the concept of the illusion of free will. If you want more information, dive down a rabbit hole, go into episode 1. We give you a couple of articles so you can start your process. It's basically the concept that we write programs in our brain and we don't actually think about doing them. We just run the programs and do them. And I give you an example of a hot stove. Once you touch a hot stove once, your brain writes a program that, okay, hot stoves are dangerous, be careful around them. You don't have to consciously think about it the next time you're around a hot stove. So we do the same thing in trading. There are some things that we do in trading that we don't even think about. I want to ask you a couple questions, Patrick, and just to see how you started out in trading. When did you start trading?
Trading Forex, probably, I could be about 6 months off either way on this, but I want to say fall of 2009.
Okay. And when you found yourself trading, did you find yourself making the same mistakes?
Looking back on it, yes. At the time, I really had no idea what mistakes I was making. I had an indicator that was a reversal indicator, and anybody who's used those, if it fails, you just kind of sit there and wait for it to come back your way. And so that's all I would do. And when I'm doing air quotes, back tested it just by using my eyeballs, not using anything, disciplined, it worked all the time. So I'm like, well, it's just a matter of time before it works again. So I would just take really bad losses and just jump right on the horse and keep doing it because I felt like it was just a matter of time before I started winning a lot.
Okay, so you found yourself making those same mistakes, especially in position management. Did you get mad at yourself at all when you made those mistakes?
No, I wasn't thrilled that I was losing. But like I said, this indicator was so good. And it's just a matter of just keeping at it. If you lose, okay, well, the losses are out of the way. The wins are bound to come. So I just kept on with that. I had no position discipline. I didn't really understand how one pair was, more volatile than the other. I actually got excited that certain pairs were more volatile, and those are typically the ones I went to because, you can make more money there, right?
Of course.
That was my scrambled approach to trading.
That's actually fairly healthy because most traders that I've talked to that continue to make the same mistake, they just beat themselves up about it. And they beat themselves up and be like, hey, just be more disciplined. And then they find themselves just making the same mistake over and over again. But let me ask you this last question. Looking back, it's been, over a decade of time. Looking back at that point, were you even capable of following a system and being disciplined?
Back then, I would say no, because I was too excited. I learned Forex really easily, which is weird. I don't learn a lot of things very easily. And I really felt like I could absolutely just get out there and murder the markets. And so that's what I did. I just kind of jumped in head first. Didn't do a lot of prep work. I think if you would have given me a system, I'd have been like, I don't need that. I already have, this sweet reversal indicator, and it's going to take me to freedom.
We're all the poster children of the Dunning-Kruger effect. If you don't know about the Dunning-Kruger effect, it's one of my favorite things. It's when you know nothing, you don't have any expectations of how smart you are. The second you start to learn a little bit, your confidence is actually the highest it's ever going to be with the smallest amount of information. And then it dips down to where you actually start to work at it, get competent, and then you go back up to where you actually are successful at it. We all start with the Dunning-Kruger effect. I remember after just reading a couple books, I was absolutely convinced that I was going to kill it. But I would go out into the market and just make the same mistakes. And I didn't even understand why. And I just beat myself up. And I told myself, you idiot, be more disciplined. You know not to do that. You've made that mistake 5 times before. Don't make it a 6th time. Sure enough, I make it a 6th time. And I really didn't even understand why I was making those mistakes. And that's what I really wanted to talk about in this session is habits. And habits is just another name for doing what feels natural to you. A habit is just natural. It's the easiest thing. So the question is, how are these habits made? Well, science has shown us that these habits have 2 components, nature versus nurture. I'm sure most of you have heard about these things. Do we make the decisions we do and we are the people we are today? Is it because of our DNA or is it because of our experiences growing up? All the science shows is a combination of both. And so that's really what I want to focus on today. And that's really why I wanted to introduce the traderpersonalitytest.com. Basically, you're going to be able to go on and get your personality profile. And I always hate these personality profiles so bad. And I also remember when Pandora came out. Remember Pandora, the first streaming service? I hated Pandora because I always thought I was so unique in music. And I'm like, I like this genre here and I like this. There's no one else like me. And then all of a sudden Pandora's like, well, if you like these, you'll like this. I'm like, oh, that's good. That's really good. And there's like, well, then you'll like this too. And after about 10 songs, like every one fantastic, I realized I'm not unique at all. I'm an algorithm. I'm in the bucket of 100,000 other people that like the same thing. Patrick, do you find in your comments that a lot of the traders are simply repeating the same mistakes as all the other traders?
I imagine they are, but there's so many different mistakes you can make. It's hard to say which ones they're making. I mean, being undisciplined obviously is the big one, but that can go, 50 different ways.
No, that is so true. And this is where every single one of us is different. We are all very similar in certain personality styles. And this reminds me of a speech I gave at a Trader Expo years ago. And I stood up in front of a couple hundred people and I said, hey, we're at this wonderful Trader Expo. We've got all these exhibitions out here with, softwares, with education, all this wonderful stuff. But here's the problem. None of it's going to work because you suck. And I pointed at him. And then I was silent for about 10 seconds. You could have heard a pin drop. Everyone was just kind of looking around like, what? That guy just told me I suck. And I said, look, don't worry about it. I know that's in your face, but I suck too. And then I started to basically go into the first session of an Alcoholics Anonymous meeting where I said, hello, my name is Rob. I'm a trader and I'm an overtrader. No matter what I tell myself, I cannot stop clicking the buttons when I know I shouldn't. I'm really good at holding my winners, but sometimes I'm really bad at holding my losers too. And I can follow my system about 9 out of 10 times, but at 1 out of 10 time, something just gets me. And so I shared with them all of my struggles that I had in my first couple of years. And everyone kind of relaxed and said, oh yeah, you know what? I struggle with that too. And then we really talked about how to overcome this. Patrick, share with us your AA meeting. What is it about you as a trader in the first couple of years that you would share with people?
So it's almost, I guess, the opposite of what you were saying. I had so much arrogance to me that I just thought, hey, it's just a matter of time before this stuff starts working. And then I would drain one account and I'd be like, all right, well, I guess the answer is just to throw more money at this, just start the whole process over again. It really took a while for me to self-examine and say, hey, maybe you're not doing this right. That's never been my real approach. You kind of talk about that whole nature versus nurture thing. I was always the smart kid growing up. I had this big, bright future. And that was my identity, right? So that was, I wasn't the most athletic kid. I was just kind of an average athlete. I wasn't really the funny kid. Wasn't the best looking in class. So I had to have some kind of identity, and that was always it. And that carried with me, for a long time. So I always thought, and I didn't realize how untrue this was until later in life, that I was almost kind of like the chosen one. Like if I'm good at something, I am really, really good at it. And this came from me winning every spelling bee and every geography bee and every little math flashcard game to the point where they stopped letting me play because it wasn't fun for the other kids anymore. This is just what I had been programmed to think about myself, like overly high self-esteem, way too much. Those were my mistakes, is not even realizing that I was making dumb, bone-headed mistakes, and that I really need to kind of go back and start at zero again and do things right. But there wasn't anybody out there telling you how to do things right. So I had to figure that part out on my own too. So that's why it took so long to get even remotely profitable at trading. I was already getting in my own way so much. I wasn't even at the starting line yet. I was like a few miles back from the starting line, now that I look back on it.
That's an awesome story. And it just brings out to me just how interconnected everything is. And you talked about your identity you had of yourself. You were the smart one. And so when you lost money, you just had to be smarter. You just had to try harder. It wasn't until you finally were humbled enough to where you realize, oh, wait, I actually need to go back and start from the ground floor. And that's really what we all have to do. Look, I don't care if you are top of your class in spelling, top of your class in athletics, whatever it is. Everyone in trading starts at the bottom. We have a saying at Maverick Currencies that traders aren't born, traders are forged. And what that means is that when you forge something, it goes through heat, it goes through pressure. and it comes out harder than it was before. That is the process of trading. And we all have to be stripped of all of our pride, all of our ego, all the things we think about ourselves to really go ahead and start off at the ground floor. And that's really what this episode is about, is becoming self-aware. Because if you keep making the same mistakes, understand you are making them because either that's your personality. So let me give you an example of this personality. I am an ENTP. Now, I'm not going to get through all those right now, but E stands for extrovert. I am a strong extrovert. Extrovert means I like stimulus. I hate to be bored. I hate to be bored. And so as a trader, when I'm sitting there and I don't have a trade on, I'm bored. So what do I do to change that? I click a button. And now all of a sudden I have stimulus. I'm happy. I'm feeling things. Everything's great. That is really negative. Now, I didn't even understand that about myself, and I couldn't get myself to stop clicking buttons. So I had to take some radical measures to actually stop clicking buttons. I had to give my security card to my wife and say, do not give this to me. No matter what I say, don't give it to me, because I had to log in with the security card to get into my account. The first time, I talked her into it very easily. She gave me back the card. I clicked my buttons to get my stimulus, and I made lost some money. And I'm like, okay, look, no matter what I say, do not give it back to me. And next time, she didn't give it back to me, and I was so upset about it. But then I had to go do other stuff. And I developed all these other things to give me stimulus that I no longer needed that from the market. This is why at Maverick, we talk about don't try to cure it with discipline. It isn't going to work. You have to develop a lifestyle and a system where you can actually start to get there. And until you get to the point where you are self-aware of the mistakes you are making. And Patrick, I'm going to throw it back to you. Your first couple of years, you thought to yourself, oh, I just need a little bit more of this. I just need a little bit more of this. I just need to work on this indicator. What did you really need to work on?
I needed to have an actual structure because I didn't have any. That was really it. It's funny you talk about extroverts. I've always considered myself an introvert, which maybe on paper doesn't make sense because of all the media I do and how comfortable I am in social situations, probably because of, the job I had waiting tables for so long. I just want my little circle of people next to me, and then everybody else can stay as far away as possible. So I think I would fall into the I category. I just want to say, just as a quick aside, that extrovert that you talked about, it immediately led me to so many people I met from my Las Vegas days in sports betting and in poker. You have these people called action junkies. In poker, they need to play almost every hand, or else, what are they doing? They're wasting time. In sports betting, they needed to play all these different games, even though they couldn't even name two people on the team. They just had to have action because it was on TV. Everybody plays Monday Night Football, not because they have an angle, but because that was the only game on. So you have to play it, right? Like, this is the way these people thought. They would brag about it. Like, yeah, I'm just an action junkie. I'm like, oh, so you're an idiot who loses a lot of money. That's what you are. There's never any exception there. I guess I strayed away too far away from your question. Yeah, just as an introvert, I don't know if that played a part, but my arrogance certainly did. And I was like, look, I'm not going to be able to brain my way to riches. I'm going to need something that works, and I know works because I can actually test it to see if it's worked in the past, and then to see if it works in real time as well, because those are two very different things. It wasn't until I figured that part out that I really even had a place to start from. Then I had to actually do the testing, which took, another 2-3 years. So I guess that would be my journey and my very long answer to your question.
Well, with that answer, my guess is that you are a sensor. Now, that is the second letter in the Myers-Briggs test. And sensors are like engineer brains. They like to go through and test everything out. And as long as they can test it all out, then they think, oh, it's a guarantee to work. That's not how trading works a lot of the time. You win some, you lose some. But that engineer brain has its own bit of garbage that comes with it. And that's exactly why I really want everyone to go on to take their personality test, because it's going to show you this is who you are. And this is the pitfalls you're going to fall into. People that are strong S's, they build systems forever, but they never really make any real money at it. That's one of the pitfalls that the S's will get into. So again, we go through all of that stuff. I just kind of want to wrap this up because this is the first episode where I really want to start working with everyone on making changes. And one of my favorite quotes is by Carl Rogers. I have no idea who this guy is, but this is his quote and I love it. The curious paradox is that when I accept myself just as I am, then I can change. It wasn't until I realized I'm an action junkie. I literally can't not click a button. There's no way I could do it. And so I had to think outside of the box. How can I not click the button? So I started scheduling appointments during the times of the day where I got myself in trouble. I started to work out. I got a trainer. I don't need a trainer to work out. I already love to work out, but I got a trainer because if I didn't have a trainer, I sometimes didn't go because their training was good. With a trainer, I always showed up and I got myself away from the stimulus and I gave myself other stimulus. This is the kind of stuff that we're going to be talking about in this podcast. You have a problem. So let's say your problem is you are an overtrader. We're going to do a whole episode on, okay, let's not do the whole just be more disciplined, don't click a button, because that's not going to work. Let's actually give you things that will help you out and make it work. So what we really want you to do after this episode is to sit down and list the mistakes you keep making. And I really want you to look inside, why do you keep making them? For me, boredom was the real reason I made too many trades as a young trader. It was boredom. Simple as that. It wasn't because I was dumb. It wasn't because I was undisciplined. I was bored. So I really want you to look at those decisions you're making and say, okay, why am I really making them? We're going to be talking about sometimes in your life, things aren't going well in your life. You're not going to be a good trader at those points of time. Maybe your marriage is not going great. Maybe you've got some personal problems. That's going to affect your trading. Our goal in this podcast is to get you to trade successfully in spite of all those things. Let's trade with you, not against you. Let's make systems that you can follow, not ones that you are going to fail at. That's what this whole podcast is about, is to get you to the point where you're no longer fighting any more battles. Is there anything you want to add, Patrick, for people?
Well, as far as things actionable for them, I don't know anything off the top of my head. I can just say through my own experience, yours was being an action junkie. Mine was overconfidence. And I don't know where, divine intervention, whatever the hell it was, that came into me, just said, hey, I need to take a step back. Maybe I'm not that good at this. And then put a system together. And then you're right. It's that whole thing with the engineer brain. I don't know if I have that or not, but I still put it together. And it worked really well every time I tested it, but then I still wasn't getting the results because I was still messing it up. That's something I had to deal with early on in the channel, my YouTube channel, is people saying, hey, why don't you just give us your algorithm? I didn't really want to say it, but what I wanted to say all the time was, hey, I could give you everything to the letter and you would still screw it up. And then you would come back and say how trash it is. So that's not something I want to do. I want you guys to figure this out for yourselves. 100% on that. And I just think this is a really good early episode to have because it really sets the table for so many more things we could talk about. I mean, there's so many directions we can go just off of this alone. I'm glad we covered this because this is something I've never covered. There might be external factors in people's lives that are really affecting their trading. I just don't know how to address things like that. So I guess that's something I just stayed away from and say, hey, this is what you do. Go do it. But for some people, that might be really difficult.
And let me go back to that quote. The paradox is that when you accept yourself just as you are, then you can do something about it. This is the beginning. If you're struggling with anything in your trading, this is the beginning, is to say, oh my gosh, I suck. I suck at this aspect of trading. And I'm probably never going to get it. Okay, let's sit down and talk about other ways other than discipline that you can actually fix these issues. And then all of a sudden your trading gets better. The goal is to get you to the point where you're not fighting any battles with yourself and you're just able to follow the system religiously. This is the starting point. After this, we're going to get into all aspects of mistakes and go through all these ways to actually fix them.
Well, then on that note, I would like to thank everybody for listening to episode 2 of the Trading Psychology Podcast. Looks like we have a lot of directions we can go, and we're going to go in every direction we possibly can. Guys, we're going to find out the problems that are ailing you, and we are going to fix them the best we can. I think if it wasn't clear before to some of you, maybe it's starting to click now just how important this stuff is. So for Rob Reinhold and everybody here at the Trading Psychology Podcast, we will see you next week.
Bye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book, No Nonsense Forex Trading Psychology. And with me, as always, is Rob.
Hey everybody, this is Rob Reinhold with Maverick Currencies, and I'm the risk manager who oversees over 100 traders every day as they enter and exit trades in Forex and crypto.
And episode 3 is sponsored by none other than Maverick Trading. Rob, tell us all about Maverick Trading for those who don't know.
I'm going to keep this short and sweet. Maverick Trading, founded in 1997. We are a broker-dealer. We transitioned to prop trading in 2007, and we specialize in stock and options in our Maverick Trading division. In 2009, we opened up our Forex trading division called Maverick Currencies, and we added crypto recently about 2021 to our trading products on Maverick Currencies. So if you've ever thought about trading prop, come check us out, and I'll put up our websites right here.
So the best goddamn prop firm in the world just added currencies to the mix. So you can now be a prop crypto trader if you wanted to. Super exciting. Okay, let's move into episode 3 because I guess this probably plays really well off of episode 2. Episode 2, we got deep, like deeper than I ever get. It's good to have both of us here this time around. So this is another one of Rob's episodes, and so I think what we'll do is what we did last time. Just kind of let Rob go, and I'll jump in where I can, and we'll see what happens.
Thanks, Patrick. In the last episode, we discussed genetics, and I gave everyone a link to go take a trading personality test based on the Myers-Briggs profile. There's a whole lot more I could have gotten into, but time is always an issue. I'm going to throw that ball in your court. If you want to go take a look more about DNA, nature, personality styles, go knock yourself out. In this episode, we're going to cover the other side. We have nature and nurture. So nature is who you are baked in your DNA. Really difficult to change that because it's literally who you are. If you are a highly stressed person, you can't just tell someone like that, hey, just be chill. It doesn't work like that. And if you're a really chill person, you can't just tell that person, hey, don't be chill. It doesn't work like that. You can't change those attributes. That is who you are. In this episode, I really want to focus on your nurture. Nurture is basically what you were taught by other people, and then what you learned through experience in your life. However old you are to a point here that your nature, your DNA has shaped a lot of your decisions of who you are, and then you have your experiences that have shaped those even more. You're going to take all of those into the world of trading, and some of those things are going to be really good for you, and some of them are going to be really bad. Before we jump into this, I want to introduce 2 really great books. The first is called The Behavioral Investor by Daniel Crosby. This is about behavioral economics. We talked about this in episode 0. Behavioral economics is why do people do what they do with money? It is finance and psychology mixed. The second book is The Hour Between Dog and Wolf by John Coates. This is one of my favorite books. It's a pretty deep read. This is a former bank trader, floor trader, and hedge fund trader who quit in the middle of their career, went back to medical school, got their neurology degree because they wanted to know what is going on in the brain when people take risk.
I'm really glad you mentioned these books too, because people ask me for book recommendations all the time, and I only have a small handful to give them. So there's 2 more for you if you really want to get deep and nerdy. That is, I've heard of Behavioral Investor before. I'd never heard of that second one.
It's kind of a play on Dr. Jekyll and Mr. Hyde. You know, Hour Between Dog and Wolf, one is rational, and then all of a sudden at some point, the rationality goes. What is happening in the brain when those decisions are made? And that's really what I want to talk about is what is happening in your brain when you sit down and you make a trade. We all think that we're sitting down, we're clear-headed, we don't have any baggage that we're bringing with us, and we're making a logical, rational decision. Well, that may not be true. And actually, the whole point of being a trader is to get to where every time you sit down to make a decision, you are truly centered. You truly don't have any other garbage in your brain, and you actually are making rational, logical decisions. And we need to understand that that doesn't always happen. There are things in our past, our programs that we've written in our brain. Maybe you've been successful at everything you've done in your life, and you're used to winning. And you go into the market, and you say, oh, I should be winning. Why aren't I winning? And you think, well, in the past, I just tried harder, and I won. Now, Patrick, I think you kind of mentioned this in the last episode about how you just had this expectation that you were going to win in trading. Can you share that with us?
Yeah, so I came in with so much overconfidence because I learned everything so quickly, and so I had that aptitude that I usually don't have. As smart as I was, over time, there's just a lot of subjects that just never took. But Forex was, I absorbed that stuff like a sponge. And so I was just eager to just crush the market. And I felt like because I learned it so fast and I was already naturally intelligent that it was just a matter of time before that became my main job. Not the case. The market, sat me down real quick.
So Patrick, have you ever thought to yourself, all these years later, I wonder what was actually going on in my brain?
I guess I've never wondered that. I couldn't even tell you what was going on in my brain. Probably, the visions of sugar plums and mansions and yachts and all just not having to answer to a boss anymore. Things like that. Probably that was always my motivation because I was trading the 15-minute chart on Pacific Standard Time, which on the London Open was starting at midnight. So you need things to motivate you after you come home from a hard day's work. And so I think it was those dreams that I had that just kind of kept me going. So that's probably what I was thinking of. Like I said, a long time ago. I don't really know exactly what was going on up there.
And I'm going to go even deeper than that because I think you were exactly right. All of those thoughts you had, all of those are drivers of why you did things. But I want to go even deeper to the literal chemicals that were going on in your brain at the time. Like, let's just take dopamine. The first time you made your trade that was profitable and you actually won money, do you remember how that felt?
Extraordinary. Yeah, I took this big, bad market that so few people know about, and I went in there and I felt like I took it down. I went from, whatever money I started from to, a decent amount more. Now, I didn't have any really risk management, so it was actually a pretty big win, way bigger than it should have been. And then so I just extrapolated that out. I'm like, okay, if I can make this money every time I trade, oh man, this is going to be something else.
Right. So did that experience set you up for a failure in your next trade, most likely?
Set me up to fail probably for the next 6 months because I wanted that feeling back, and I knew it was, again, like we said before, I said, okay, I just got to keep going and things are going to correct themselves and I'm going to be back plus money again and it's going to be blue skies ahead. But for the longest time, just never got there.
Yeah, so you had all these ideas of, hey, I didn't want to work a job. I don't want to have a boss. It's even more simple than that. You literally were chasing a dopamine rush. And when you hit it, it felt good. And that was all that you were trying to do at the time. I want to get down to this atomic level where, we think about this in all these big picture terms like, hey, I want to have freedom. I want to be able to be financially successful. Okay, that's nice. But let's get down to what's literally going on in the chemicals in your brain. Everything you do is releasing a chemical, and that chemical is going to cause you to act differently. And I want to share with you a couple of studies out of the Behavioral Investor book. These studies blew my mind. So let's just go over the first one. This first case study is about hunger, and you can go check this report out online. And basically, it is taking a bunch of judges. They took 8 judges. All of these judges had over 10 years of experience, so they were very experienced judges. They were assigned cases randomly. Now, this was for parole hearings, people who wanted to get out of prison. And what they found was that at the first of the day, parole was granted about 65% of the time. And then it started to drop. And the hour before lunch, the parole rate almost dropped to 0. And then after lunch, the parole rate jumped to 65% again and then trailed off through the end of the day.
Wait, so what you're saying is when it dropped down to 0, that means the hour before lunch, nobody who came up to the stand was getting parole.
Correct. I shouldn't say nowhere, but it was close to 0. Now, if you were to interview these judges, they would all tell you, no, I treat all of my cases the same. I don't give any different treatment to anybody. But yet the data was showing when they got hungry, they were less likely to grant parole. When I read this crushed my soul because I'm like, can you imagine someone had to spend a couple extra years in prison because the judge was hangry? That just kills me.
Yeah, and that's so weird because it doesn't even make a lot of sense to me. I mean, does it take longer to grant somebody parole than it does if you deny them parole? It seems like it would take the same amount of time. So what's the hurry? Why are they? Is it just the mood they were in?
It is mood. It is the mood they were in, and this is where there's so many things going on in our bodies and our minds that we think in these big picture terms, but I want to get down to this atomic level where we're literally talking about the chemicals in your mind. So the question is there a difference if you trade hungry? Now, look, there's no studies for me to show, But can that hunger affect your judgment? And the answer is yes. There are studies that show it. And this is just one of many studies about hunger. The next study I want to share with you is about sleep. Now, pharmacists have a very difficult test, and they put in lots of hours going through pharmacy school. They actually followed a bunch of students, and they basically found the students that slept less, they actually scored the worst on tests, and their performance lagged. Now, look, this is just one study on sleep. I challenge you to go out to the internet and pull up all the studies on sleep. You will see that cognitive ability declines with less sleep. So the question is, when you go and sit down to make a trade, sit down to analyze potential trade, does the fact that you're hungry and tired, is that going to matter in your trading? And the answer is yes, it is. What do you think about that?
I would have to agree heavily. I mean, first on the surface, it's kind of obvious. Yeah, okay, if you're more tired, you're going to make worse decisions. I don't think we think about that when we sit down to trade, or we just don't think that factors in. I solved this problem by switching to the daily chart and only trading once a day, typically before work, so I didn't have any of that stress left over. But before that, boy, let me tell you, when you know how I said I was starting my day pretty much at midnight Pacific Standard Time, I would just get back from work tired, dehydrated, usually upset over something. And then pretty much like an hour later, I would start my trading day. And I wondered why I wasn't just taking. I wonder why I wasn't rich yet. As obvious as it sounds, I don't think we think about this stuff, which is really interesting. I would like to hear you guys in the comments down below. When you have a rough week or a rough month or even it's just a rough session, do you factor this in at all? Because I certainly don't think I ever did. I can say that now that I look back on it. But at the time, I don't think I put two and two together.
Well, while we're airing some dirty laundry, let me share with you a few things I've done. No, look, we've all revenge traded. Revenge trading. We'll do a whole episode on revenge trading. That one's pretty funny. Have you ever made a trade at like 3 a.m.? You literally just woke up, looked at your phone, made a trade, went back to sleep. Have you ever done that one? I have.
Oh, me, no, because then I have no control of the trade, so I would never do that.
Well, of course, I'm the extrovert. I need that stimulus even at 3 a.m. And you're an introvert, and you're like, no, I'm not gonna take the risk. Smart, very smart. I'd love to get to this point because, as you said, Patrick, a lot of us don't even think about, and we are thinking of much bigger things. And sometimes these little things really matter. And to be aware of them actually gives you power. If you're not aware of them, if you were just going through and say, every time I sit down in front of my computer, I am 100% clear, focused, and ready to go. That's a lie. You're not. And so before you sit down and trade, you need to go through a mental checklist of, okay, am I in the right place to trade correctly? Am I in the right frame of mind to put together logical decisions? Now, we tell all of our traders to have a daily ritual. Basically, it's a ritual to go through before you actually sit down to make trades to just make sure that you're in the right place. So you ask yourself stuff like, okay, are you trading because you're bored? Are you too tired to make a trade? Is there anything going on in your personal life that would cause you to not have rational decisions? We go through a checklist, and I know a lot of our traders, they actually meditate. Now, I have my own view on meditation. Patrick, what's your view on meditation?
I've never done it, probably because I never really thought I needed it. Maybe back then it would have served me, but I think back then I actually did think about it, but it just never got there. They didn't have the apps they have now. Recently, I feel like my mind's in a really good place, or has been probably for the last, 5-6 years. So I just don't feel like it's necessary. So I personally never have.
As I said, a lot of our traders go through meditation. And the whole point is to get to where you have a process to go through to when you sit down, you don't have any what we call baggage. Now, I'm going to be using this term baggage for all of our episodes. And baggage is stuff like what happened in your last trade. If you took a bad loss on your last trade, you are likely to bring that baggage into your next trade. Your goal is to come into every single trade with no baggage. And the only way to do that is to go through this daily ritual of, okay, am I in the right state of mind? Am I too tired? Am I hungry? What's going on? Basically, you can do that through meditation. I literally can't meditate. I've tried to meditate, and I know all the ways to do it. I know how to try to get to that point. But the entire time I'm thinking, well, this isn't doing me any good. I could be doing something better. Now remember, I'm an extrovert. I'm an action junkie. I need that stimulus, and meditation is really tough for me. So I use exercise. Exercise is my meditation. So for me, that is meditation. To go out and lift weights hard, to go do some cardio, do something that clears my mind. And then when I sit down behind my system, I'm actually able to correctly look at things and I am clear minded. Is there any daily rituals that you go through, Patrick, before you sit down for a trade?
Well, it's interesting because mine are pretty much the same. I work out about 3-4 times a week, put a podcast on, and then that's just my, personal time away from my computer, my apartment, everything. Now, I have 2 partial tears in my rotator cuff, so I haven't been able to do that a whole lot. So what I do instead is walk. I walk a lot. I mean, I don't have a step counter, but probably over 10,000 steps a day. And that has, at least for now, replaced, going to the gym. So I guess I do. I never really thought of it as anything really meditative, but I do notice a big difference if, maybe it's raining and I can't go out and do that. It's, things don't seem to fall into place the way they normally would.
These daily routines are so important. And I just want to share with everybody a couple of exercises or rituals that some of our traders go through. I have one trader that as soon as he exits a trade, he turns off the system and goes for a 30-minute walk. He does that to clear everything out to when he gets back, everything is gone. And this is my favorite one. This one's super dramatic, but it gets the point. I have one trader who writes down their trade on a piece of paper when they make it, and they keep that piece of paper on their desk. And then as soon as they exit that trade, they literally burn that piece of paper. Now, you think about it. I'm always very rational and reasonable, and I'm thinking all the stuff like, well, where does the ash go? And do you really want to sit in your office when it's all stinky with smoke? That's just where my mind goes. It's kind of a funny thing. This trader does it because it clearly shows this trade is over. It's done. There's no more. I don't have any more baggage about it. What do you think about burning up your trades?
I don't care how eccentric it seems on the surface. If it works for you, then that is exactly what you need to do. As long as you're not harming yourself or harming other people, I think it's great.
I totally agree. And this is where whatever works for you, it's going to be different for every single person. After this episode, I really want you to think about what routine you want to do. What are you going to do before every single trade where you clear out your baggage? You clear out what's ever going on in your personal life. You clear out whatever is going on from the last trades to where you are truly looking at this next trade with the correct brain chemicals. And again, I want to get down to that atomic level where your brain chemicals are in the right place. Your motivations are in the right place. Your brain is clear and free to think of things in the correct way. These little things are really going to make a difference to your trading performance. Be conscious of your brain chemistry. Be conscious of when you have 3 winners in a row, you are on a dopamine high, and your next trade is probably going to be lousy. That's my pattern. My pattern is the better I've done in the past, the worse I do in the future. So now I get very paranoid when I start to have delusions of grandeur of how great of a trader I am. I now know, this is when you fall. Be careful. These are the things you need to learn about what is going on inside of your brain because it's going to cause you to act. It's going to encourage you to act differently than you typically want to do it. That's really all I have. Patrick, do you have anything to add?
Well, I would like you to add one more thing if you don't mind. I'll throw you a bit of a curveball here to close out the show. My traders are different than most traders, as I alluded to before. I know not everybody who trades the no-nonsense Forex way does this. Most of us trade the daily chart, so we check in once a day. And often of times we have trades that are already open. So we don't have the option of saying, hey, I just had a bad day. I have all these crazy emotions swirling around in my head. I'm going to sit this one out. No, you have trades on the line and your stop loss might need adjusting. You might need to get ready to close out the trade because news is coming. There's stuff to do. You don't just get to sit out. So if you are trading that way, what are some actionable things that those traders can do that kind of fall in line with the theme of this episode?
That is a great question. It's fine if you don't need to sit out. All I'm saying is you need to be aware. And so the question is, Will that trader show up that day that they had a bad day at work, they had a bad whatever? Will they show up and continue to implement the current system? If the answer is yes, that's fine. They did it. They succeeded. If they go in and they mess with it, or they go in and make another trade, or for something else, they deviate from their system, that's the problem. And that's really what I'm talking about, is deviating from your system. These are the things that cause you to deviate from your system. You're not making bad choices. You've got brain chemistry that's trying to convince you, hey, get out. You have a profit. Get out now, or else you're going to lose it. Like, what if you literally just lost your job and you come home and you're up $1,000 on a trade? All of a sudden, that person's going to have in their brain, take your profit. You need this money. That's a mistake. That's a mistake because they're not following their system. So it all comes down to making sure your brain chemistry is correct to where you can follow your system.
Right on. Well, good. Well, we'll go ahead and close with that. Now, both of the books Rob mentioned, The Behavioral Investor and The Hour Between Dog and Wolf, we will have links to both of those books down below in the show notes, along with a link to Maverick Currencies if you want to check them out. And I guess I should just say, and on that note, thanks for joining us here in episode 3. We'll be sure to see you next week.
Bye, everybody.
This is the Forex Trading Psychology Podcast. This is BP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold from Maverick Trading.
Hey, Patrick. Hey, everybody. How's it going? This is Rob from Maverick Currencies and Maverick Trading. We're a prop firm. If you don't know what a prop firm is, I will tell you about it.
Well, good. And on that note, we are, as always, sponsored by Maverick Currencies. And Rob, what do you have for us on that front today?
Well, I wanted to answer a couple of questions that we received in the comments section. If you don't know what a prop firm is, we are a company that you come aboard with us and you trade with our capital, and we enter into a profit sharing agreement with you where you keep 70 to 80% of the profits you generate. We keep 20 to 30. Now, everyone says, oh, that's awesome. I love that idea. Hold on. We do have some requirements. And this is the question I got. What are your requirements to be able to trade your capital? Now, Maverick is a little bit different from some of the other prop firms. We start you off with a $10,000 fully funded account, where others will start you off with just a little bit or a demo account. So we want to make sure you know what you're doing. So we do have 3 requirements. The first requirement is you pass our series of online tests. You have unlimited retakes to pass a test. So look, this is an easy one. Some of you will fly right through it. Some of you might have to do a little bit of studying on some of the questions we have. Unlimited retakes, you'll pass those, no problem. Number 2, you must prove that you can trade on a demo account. So if you have demo statements, great. If not, you can have live trading statements as well. We don't care. We just need to see your numbers beforehand. And then the third thing is you must submit a written, well-defined trading plan. And what we're going to do is we're going to take a look at your trading plan and your trading statements and make sure that they follow each other. Sometimes we have people turn in a trading plan and then we look at their trades and they're wildly different. They might be profitable, but it's different. And with that person, we say, hold on, these have to match up. We only want systematic traders that follow systems. We don't want wildcat traders. You must have those 3 things. Pass our tests, turn in a detailed trading plan, and then turn in demo or live statements that show that you can follow that system and that you do have an edge in the markets. So I just wanted to answer that question as we've had that from a couple of people.
It's a question that needed to be answered, so I'm glad we did that. But let's go ahead and move on to the episode. Now, this is another Rob special where he came up with this idea, and he's got a lot of really great material. So I am just going to kind of steer the ship a little bit and let Rob take it from here. How would you open this one up?
Well, let me open this one up with where we were back in episode 1. If you remember, I gave a speech at a Traders Expo to a couple hundred people. And the first thing I said is, none of this stuff is going to work because you suck. Now, episode 1, 2, and 3 of the Trading Psychology Podcast have basically been exactly that, showing you all the reasons and all the ways that you can fail as a trader. And it really comes down to the programming that you have, the emotions you feel, and your habits. I went on to Patrick's YouTube channel and I looked through all the comments. There were a couple of comments that basically said, thank you so much. I finally understand why I keep making the same mistake. Will you please show us how? And then the next episode was like, hey, this is why you're making mistakes. And I want to get to the point where we're actually now solving the problem. That's what this episode is all about, It's about behavior change.
Yet, if I can jump in for just a moment there, Rob, if you don't mind, all the majority of the trading psychology videos I put up on my playlist are very solutions based. So you can always go there. But we, in this episode, are going to drill down much more specifically to the things we're talking about before. If you guys don't know my methodology by now, the early episodes, if you're wondering why they are the way they are, they're always the ones we end up pointing back to, because they are pretty much the core of what we're talking about, in all the episodes after. Pay very close attention to those, and then we're going to slowly start building off of those early episodes as we go.
And that's exactly what we're doing here in this podcast. Is the first couple episodes are really laying the groundwork for everything we cover after. I want to introduce to you the first concept of this podcast, and this is called the trans-theoretical model of behavior change. So there are 6 steps to it, and the first one is called pre-contemplation. The first 3 podcasts we did was really about pre-contemplation. It means that you don't even know why you're doing things. You don't know why you keep overtrading. You don't know why you keep moving your stops. You just keep doing it and you say, "Don't, you dummy, don't be so stupid, be more disciplined," and you keep doing it. You have no concept of why you're even doing it. The first 3 episodes were to get you to the point where you say, "Oh, that's why I keep doing it." All of a sudden, now you're in the contemplation stage. You're aware that a problem exists, but at this point, you have no way to fix it. And that's what this episode is all about, is, okay, we've gotten you to the point where you now are in the contemplation phase. Now I start to understand why I do what I do. We're going to be focusing on action. What actions can you take to actually change your behaviors? So it starts next with preparation, goes into action, and then it goes into maintenance. Now, part of maintenance is relapse. Relapse is the concept that you are probably not going to get it right the first time. You're probably going to have to work at it over and over and over again. I want to go through this trans-theoretical model of behavior change. This is what the psychiatric community uses for everything, and that's what we're going to be using here in our podcast.
We try to do solutions on my channel, but we're actually deep diving into this particular solution, which is really nice.
I know that a lot of you weren't expecting such a deep dive into psychology. And you thought, oh, trading psychology, we're going to learn a little bit of this. This is deep, deep stuff. You don't necessarily need to know exactly how the sausage is made in order to enjoy the meal. And I'm going to be going through this, but I just want you to grab a couple little concepts of what it is you're trying to accomplish. Understanding that will make the process much, much easier. In front of you are the 3 stages of neuroplastic behavior change. The first thing we need to change is the chemicals in your brain. All of episode 3 was all about your brain chemistry. We talked about hunger. We talked about sleep. We talked about coming home from work. We talked about meditation. We talked about everything we could do to get the chemicals in your brain the right way. Without the chemicals correct in your brain, you're going to have a very difficult time making structural change, which is the next step. It's the reason when someone goes through a traumatic experience, the very first thing they do is they focus on getting the brain chemicals right with typically some antidepressant drugs or something like that. You can't enact behavior change until those chemicals are mellowed down enough to where you can actually think. And that's the next step, is structural change. What can you do to actually reprogram your brain? This is reprogramming your brain. And then the great thing is, once you've reprogrammed your brain, you have what's called a functional change, meaning you no longer have to think about it. You are unconsciously competent at whatever you're doing. You don't have to think about it. Now that is the point that we want to get everyone to where you no longer even have any compulsion to mess up your trading system. You've spent all this time building it, and you get to the point where you literally have no desire to do anything different. Patrick, do you remember the time you got to that point?
Yeah, I do. Unfortunately, it was a long ass time from when I started, though, because the way I got there is when I no longer felt I had meaningful money or progress on the line, if this makes sense. In the past, this is going to sound so degenerate, but this is kind of how we start off. I had $1,500 in my leveraged Forex trading account. I had $400 in the bank. All right. So you can imagine the pressure I was under all the time with something like that. There's no way you can think straight. like that. I mean, you're going all in on something in like year one. It's just, I'm not even going to explain how dumb that is. I think it's pretty obvious. I finally got there when I turned pro with you guys. And then after a while, between, trading and investing and my business, I didn't have to worry about the money end of it as much. And I could just trade. So I didn't have any of that. Oh my God, am I going to run out of money? Oh my God, am I going to take huge drawdown and never be able to come out of it? Oh my God, am I not going to progress, the way I want to here? As soon as all those worries left my head, I was able to just trade and I became exponentially better.
That is such a great place to be as a trader. And I use the term, you want to get to the point where you're trading for the sake of trading. And what I mean by that is you're only trading because there's a good setup. You're not trading because you need to pay the bills. You're not trading because you're bored. You're not trading because of any other reason. The only reason you're trading is because the setup fits your models. I tell everyone, you can learn all the X's and O's of trading in 3 to 6 months. It's not that hard. This process takes 3 to 7 years. And that's where I was.
Amen.
I was right about the 5 to 7 years where I finally got to the point where I no longer wanted to screw it up. I just wanted to follow my system, do my thing. I didn't care what the market did. I didn't care what anything else did. I just wanted to do my thing. What about you?
Yeah, if I'm doing the math right, about 7 years was right for me. Like, you have to understand, though, I don't want people to get disheartened by hearing this. Oh, I got to wait 7 years. My YouTube channel's only been around for, almost 5 years. So people who've been trading in that system haven't even put 5 years in, much less 4, 3, or even 2. I had to create a system from scratch. So it did take me much longer. I didn't have anything there to help me. For me, it was definitely the 7-year mark to where I can really point to where I could just put it on cruise control and do what I was supposed to do without having all that external pressure.
I'm glad you brought that up because, look, I was profitable through those first 5 to 7 years. I made money, but it was wild. There was huge swings. There were low moments. And I tell everyone, this business has brought me to tears twice. And I don't cry a lot. And this business was really tough getting through those years. And it wasn't until year, again, 5 to 7, where I didn't experience those wild swings, where I just plugged away and did it. It was easy. It was relaxed. It was methodical. We're not saying you can't make money until you get this figured out. What we're saying is you're going to be making mistakes along the way until you figure it out. That's it. And this is part of the process of becoming a trader. Everyone thinks it's in the charts. Everyone thinks it's learning all the indicators. That is definitely part of it. But the hardest part in the world of trading is to get yourself to the point where you can manage yourself correctly. Once you do that, you're a pro.
Yeah, no, honestly, if I would have just taken some pieces of what I did in the very early days and I just traded and went for it, I would have done a lot better. You said you made money those first 5 to 7 years. Those first 3 years, I didn't make anything. At least I just kind of went for it, but I didn't have a system. So it's kind of funny. I build the system and now I don't want to go for it as much, which is stupid because I tested that system. I knew it worked. I should have just let it go, but I had all those external pressures. It just took a very long time for me to get that out of my system.
That is a very natural thing that you experienced. I see this all the time. People, when they start out, they are reckless. They overtrade. They're overconfident. And then the market humbles you. And you actually get to a point where you are the opposite of all those things. You undertrade. We have a whole episode coming up on undertrading. We're going to talk about how your confidence can be low at some points. That is a very natural thing that you experience throughout this whole process. The purpose of this episode is to really walk people through the process that they're going to go through. I wish I had a magic wand. I wish I could snap my fingers and make it to where you didn't have to go through this process. I'm sorry, but this is the process of becoming a professional trader. So let's go through the trans-theoretical model of behavior change. You don't need to know what it's called. You don't need to even remember it. But what you do need to remember is that anytime you have a problem, psychology in your trading is causing an issue with, this is how you change it. You, number one, figure out why you're making it. Number two, make a plan on what you're going to do. And the plan is not be more disciplined. If you could have done that, you would have already done it. You already blew that one. More discipline is not the answer. Preparation. We're going to have plans on how to actually change that behavior. We're going to enact that preparation into action, we're going to get a payoff from that. And that's going to cause a positive feedback loop where you say, oh, that wasn't so bad, or hey, I really like how that worked. It's going to make it easier for you to modify your behavior. Future, we have to be constantly on guard with maintenance. And look, you're human. You have to forgive yourself. You are going to mess up along the way. It's okay. I tell all of our traders, look, you're going to go from making a mistake a day to a mistake a week. You're still going to hate yourself when you make a mistake that week, but then you're going to go to making a mistake a month. And you're still going to hate yourself that you can't believe that you're doing it. But that is progress. And then you make a mistake a quarter, you make one mistake a year, and at some point, you just don't make a mistake anymore. This is the cycle of what we're going through. And we're really laying the groundwork for our next episodes because we're going to dive into very specific issues that people have. We talked about undertrading. We're going to talk about overtrading. We're going to talk about having multiple wins in a row, having multiple losses in a row. How do you deal with the slump? All of that is going to follow this model here to get you to the point where you actually create a positive feedback loop and change the behavior.
So traders, do you understand why we do episodes like this early? We just spent 3 episodes identifying some very base level problems. And now we have the blueprint for the solution. Now you might notice too, if you look at this wheel, it's a bit vague, which is fair to say. The episodes after this, we're going to be drilling down into these individual things that are plaguing you. But you need to have this blueprint first because this here is the solution. Does that make sense?
And not just the solution. We can do everything from contemplation on. We're going to help you with all these aspects. And look, some of you may listen to an episode and you say, well, I don't have that issue. Okay, maybe that didn't really help you out, but there's going to be some episodes exactly what you need. But what we need is for you to be at the contemplation stage. Aware that a problem exists. Understand why you keep doing what you're doing. Fully understand it. I shared with you in the last episode that overtrading was one of my issues in the beginning. The reason I overtraded, I had to come to a very hard realization that the reason I overtraded was because I was bored. I hate to say that. I hate to admit that out loud because that is the lamest reason to lose money. Because you were bored. I mean, heck, I should have just gone gambling. I would have had way more fun pulling a slot machine or playing some blackjack. But it was because I was bored. Once I finally got to that point, I could actually start to plan, prepare some actions to where I could fix it. Before that, I was in pre-contemplation. I didn't know why I kept clicking the button. I didn't know why I kept undermining myself. Patrick, in episode 3, you talked about your overconfidence. When did you finally realize that that was causing you a lot of pain?
When I kept losing all my money and had to start from scratch. I guess the second time, and then I still gave it a third try, and I took a couple losses right off the bat, and then I said, okay, maybe this isn't what you first thought it was, and maybe you need to take a bit of a more methodical approach where you actually test things instead of just eyeball it and say, wow, this looks amazing.
So here's the ultimate irony of the situation. So let's say today's Patrick got a time machine and could go back and talk to first-year trader Patrick. And you would tell that Patrick all the things that they need to do. Would that Patrick listen to you?
Does that Patrick know I'm from the future, or am I just a random guy?
No, it fully knows you're from the future.
He probably would, actually. In my entire life, I've kind of flown without a net. I didn't have a whole lot of guidance, even though I wanted it. Any kind of direction, I think, at that point, especially if it came from me and not another person who's not me, I actually think I would have listened.
Well, hats off to you, because if future me came back in time and told today me I need to do something, I'd tell him to F off and figure it out myself.
Yeah, I guess there is value in that, right? There's one way to learn. I guess if I would have took my own advice back then I never would have learned, and I never would have had the experience under my belt. So there is something to be said for that. You're right.
To wrap up this episode, this is really, like we said, laying the groundwork for things, and we're going to be going through everything. All the episodes after this, we're going to be talking about the issue. We need you to get to the contemplation stage where you fully understand why you do it. And it's going to be different for everybody. We are going to give you ideas of preparation, things that you can do, actions you can take, and how to maintain it. We also need you to understand that part of the behavior change model is relapse. You will mess it up again. Now look, hopefully you don't, And maybe some of you are going to flip that switch once and it's going to stick and you're going to be perfect. Others of us, especially people like me, who would tell their future self to F off and figure it out themselves, we are going to relapse all the time. And you have to be kind to yourself. And we have to plan for that. We'll talk about relapse in all the episodes, and we'll talk about things like preparing for relapse. One of the things I started to do, I recognized that when I had a long string of gains, I became very cocky, very overconfident. I started to not follow position sizing rules. I started to deviate from my system, and I took bigger losses than I should have. At some point, I recognized, oh, this is who you are. You're always going to do it. Once I had a big gain, I would take money out of my account, put it in the bank, specifically for when I blew it up, I could put that money back in my account and have a good size funding account. That is so delusional and so crazy, but guess what? I knew I had to do it. I prepared for the relapse. I said, hey, I know I'm going to screw it up again. Let me prepare for it. And so when I did screw it up, I didn't have to dig myself out of a big hole like I had to in the past. I now just could throw some of that money back in. I was back to where I was the month before, and I said, okay, I'm humbled now. Now I'm going to do it right.
It's so funny. I've never heard anybody do that on two fronts. One, say that you knew you were going to relapse, so you protected yourself from yourself. And then that little tactic with the money. I don't know how I feel about that. I would actually have to sit down and think about it. But that's the first I've ever heard. You're so spot on with the relapse part. And I hate to break it to you, traders, but if it hasn't come yet, it's going to come. And if it's only come once or twice, it's probably going to happen again. I think the most actionable thing you can do is, prep for it, like Rob said, but just understand it's going to happen anyway. Like if somebody came to me and said, hey, VP, you're going to break your leg in 2023 at some point. I can't tell you when, but I know it's going to happen. I'd be like, well, okay, I mean, that totally sucks, but if it's going to happen, let's just get ready for it and bring it on so I can start, the rehab process.
Let's build that ramp into your house right away. Let's just build that ramp.
But perhaps, I mean, what else am I going to do, right? If it's coming anyway, it's coming anyway. And I'm telling you, this relapse is coming anyway. Prepare for it. Again, like we're going to help you along with that process and drill down deeper in future episodes. But this was great, Rob. This is the type of stuff that you'll never see on my old videos. So I'm glad we're doing this now.
And frankly, I've never seen it anywhere else. I want to give a shout out to a gentleman named Brett Steenbarger. He is like the king of trading psychology. If you want to go check him out, his stuff is great. It's wonderful. It's all wonderful stuff, but when you really get into brain chemistry, programming, it starts to make a little bit more sense. It's something we do at Maverick. We want to make sure that we are at the cutting edge of everything as far as technology and as far as psychology to help our traders out.
All right, traders. So on that note, we will wrap it up here. For VP over here at No Nonsense Forex, we will see you next week.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of No Nonsense Forex Trading Psychology, the book. And with me, as always, is Rob Reinhold from Maverick Currencies.
Hello, everybody. This is Rob Reinhold from Maverick Currencies. I'm a risk manager at Maverick Currencies, which means I watch hundreds of people trade. I've been doing this for the last 15 years, which has given me a really good insight into what it takes to be successful in the world of trading.
For episode 5, everybody, we told you before, we're going to start drilling down into actual situations, which I think is really exciting because I always have a lot of commentary on things like this and some pretty strong opinions to bring. The downside is not all of these are going to apply to you. But that doesn't mean there isn't still a lot of alpha to be had. And it also doesn't mean down the road you're not going to run into these at some point. Please pay attention. But with this particular one, this is a huge Rob problem if you didn't already know. There are some reasons why. So let's start with that.
Before this episode, Patrick and I were talking, and I asked Patrick, hey, what is your Myers-Briggs personality profile? And I just laughed at it because he's an ISTJ. I, introvert. S, sensor, he likes details. T, he makes decisions with his thoughts. And J, he's a judger. That sounds bad, but what it means is he sees the world in black and white, right and wrong, good and evil, things like that. I am literally almost the exact opposite. I am an ENTP. E is for extrovert, N is for intuitive. I don't like the details. I don't need to know all the details. I like the big picture stuff. I like the macro views and economics. The only thing that we are similar in is that we both are thinkers. So we both like to use our thoughts to make decisions. But other than that, we're not similar at all. And I'm a P. I see everything in shades of gray. I think, oh, that's a little bit good, a little bit bad. Nothing is clearly black and white to me. This is actually perfect. Now, look, we didn't script it this way. We had no idea. But here's the great thing. Every episode we go through from here on out, one of us is going to be very experienced in answering those questions because that's who we are. It's very curious that that's how this ended up. The two people are absolutely different in most ways are doing this podcast together.
I didn't quite expect this to happen either. I just knew Rob and I knew he was deep into psychology and I didn't know too many other people who were like that. So I said, let's do something like this. And it just worked out. So this is good. There really are two factions here, which we will be talking about in just a moment. Since this is very much a Rob issue, go ahead and lead us off here and take this any direction you want to go. Guys, Rob and I riff more than you think we do. We do not do a whole lot of prep with stuff like this because all of these things we're pretty comfortable talking about and sharing opinions on. So let's just go.
Look, Patrick, me as an N, I don't like to plan things out. So this totally fits within my personality. I don't know what your excuse is, but this totally fits within my personality. Before we jump into overtrading, I actually want to point something out, and I pointed this out to Patrick. So I said earlier, Patrick is an ISTJ. In episode 1, we gave you the link to the personality profile test to go on and get your personality profile. And Patrick said, hey, when you're done with the test, come back here and put what you are. Patrick, did you take a look at that list of what people said they were?
I briefly looked over it, but I didn't think much of it. Did you see something interesting?
Yes, absolutely. Most of your subscribers are very similar to you. They were either ISTJs, INTJs, but very similar to you, which doesn't surprise me at all.
No, that's crazy. I don't know what to say about that. I guess like attracts like. I think when it comes to this particular topic of the day, I pretty much just browbeat and made fun of people who do this to the point where I'm like, hey, if you're going to do this, you have no chance to succeed anyway. You're an action junkie. Action junkies never win anything. I don't know one rich action junkie. Come back when you get yourself right. I don't have time for you. So I think over time, I did that enough to certain personality types and angered them to where they just didn't want to come back because that's a big personality trait to change. With this right here, you just kind of are or you aren't. And so I don't know if I should have been more tolerant or not. But again, I'm a J, I'm a judge. So tolerance is not really in my vocabulary.
That is very true. That does not fit within a J. And look, I'm not surprised at all. We attract like people. It's not a surprise at all because the language that you speak in is the language that is in your head. And when you speak a language that someone is very similar to you hears, wow, that really connects. And like, okay, this person gets me. This person is finally speaking in a way that no other person could speak to me to get through. It's actually not surprising at all. And it's really amazing how much these personalities actually control our life, like who we listen to. I am a very strong E, extrovert. Whenever I go out and speak about trading, the extroverts flock to me. Extroverts just absolutely flock to me because I'm speaking their language. And the introverts are probably like, this guy probably is a little too much for me. I'll just go talk to some of my other friends in the corner. Though it doesn't surprise me at all. This is an episode that I'm going to say I am an expert in. And look, that's like saying you're an expert in alcoholism. It's not a sick brag. It's not a great brag to say you are an expert at overtrading. But just like an alcoholic, I used to deny that I had an issue. Oh, you don't have a problem. You're in control. You can not click the button whenever you want. And guess what? It wasn't until I finally admitted that that's who I was that I could even change. Patrick, I know you mentioned you've seen a lot of action junkies in your world. Share with everyone a couple of experiences you've seen.
Yeah, I think the biggest arenas that I've noticed it in, just not growing up, but being in Vegas for 15 years, was at the sports book, like we've talked about, and at the poker table. In both of those situations, it's not like a slot machine where you just play every pull. You choose whether to bet or not. Again, like with NFL, Monday Night Football. There's certain times where that's the only thing to bet on, unless it's something like small, like a weird sport or something like that. So even if people don't have an edge there, they still want that stimulus, or they want a reason to watch the game. There could be a bunch of reasons, but a guy like me would say, I think that line is dead on. I have no edge here. Discretion is a better part of valor. I'm going to live to bet another day and let it go. But I don't feel like most people think that way. I think they want action on Monday Night Football, so they're going to put it on.
Patrick, I have friends that will purposely make a bet on a game because they tell me it makes the game more interesting.
It does. With our time, you got to think back in the day, if you are 30 or over, when Monday Night Football was on TV when you were a kid, there was literally nothing else to do except for watch Monday Night Football. It was an event. It was like a pay-per-view boxing match or a pay-per-view UFC or something like that. It was big. It took up a huge market share of the TV audience. It was that important. Now we have so many other things to do and watch. So with a game like that, I would agree. If I don't have action on it, I'd rather be doing something else. I don't know how you feel about that.
Absolutely. And let's take that exact situation into the markets. The markets are more interesting when you have money on the line. They just are more interesting. You feel more, you experience more, and it just makes it better experience. If that's why you're placing a trade, obviously that's a bad reason. If you're making a sports bet just to make it to where the game is interesting, you are going to lose. And you're just going to lose, period. There's no if, and, or but about it. You're not following a system. You're just using your emotions to run you.
Well, let me cut in there, Rob, because you can win. Let me kind of bring this into the poker side of things. I'll let you know where I'm kind of going with this. In poker, you sit there at a table and you might not get, Texas Hold'em, and you might not get good cards for 20, 30 minutes on end. What you're not supposed to do is play it anyway. There are some people that will sit there and play every hand, either because they're arrogant and they think they can just outplay everybody else, or because they're like, what am I sitting here with a bunch of strangers I don't like if I'm not at least playing poker? That's ludicrous to them, right? They just keep playing and playing and playing. Every once in a while, they will catch a really good streak, and they'll play a bunch of crap cards that still do really well. So yes, they can win short term, but this is the worst thing you can ever do because it justifies these action junkie tendencies that long term are doomed to fail. So it takes these people even longer to have that eureka moment than it does other people. And I've tried to really express this a lot in my psychology videos because I feel like there's a lot of people who are like this.
Well, that is the bane of the extrovert. The extroverts need and want stimulus now. They don't want the payoff later. This is all stuff that if you would have said this to me 20 years ago, I would have said, that's not me. That's not who you're talking about. Yeah, that is me. I finally have admitted that that's where I am, is that, that is me. I need the stimulus now. What I really want to talk about in this episode is why you overtrade. For some of you, it's not an issue. For some of you, it is the issue. When I finally admitted who I was and that I was never going to be able to change it, I now finally started to think of different ways to approach this. And we talked about the trans-theoretical model of behavior change. The first step is pre-contemplation. You don't know what you're doing. You're a program. You're just shooting off. Contemplation stage is, this is why I do it. Overtrading is about the need for stimulus. That's all it is. That's it. There's no other reason anyone would ever overtrade. It's because you need the stimulus in your brain. When money's on the line, it's exciting. Me personally, I don't have very strong emotions, Patrick. I just don't. I don't cry much. I just don't have the same emotions. I don't get cold. I don't get hot. I just don't have the same emotions as like someone like my wife has. So what that helps me is that, I'm actually very calm and collective through very stressful situations, which is a very good thing. But here's the problem. When I do feel, it's a drug to me. It's a drug to me. It feels great. When I finally feel something strongly, I love it. And that's what trading did for me in the beginning, is I loved it. It was so intense to have money on the line and a lot of money on the line. I loved that intensity. And that's really what action junkies are all about, is to get that intensity. If overtrading is a problem for you, I want you to get to the point where you've really sat down, thought about, why do I do this? It really is because of stimulus. Okay. Next stage in the model of behavior change is preparation stage. It is not be more disciplined. That would have worked. You would have already done it. You failed at that, so let's talk about different things. What can you do to replace the stimulus? Patrick, do you have any ideas here? Because I have a ton.
Well, I was just thinking, yeah, you need to replace it with something else. So when you sit down and trade, it's not there. I just can't think of too many things outside of harmful substances that would fill that void. So you clearly already thought about this, so tell me what you have.
Well, Patrick, I'm glad you did not just come out and say drugs are the answer. They're definitely not the answer.
Certainly not the answer. And I think we actually have a dedicated episode on that, but that's going to be like future. So yeah, we'll put that way behind us for now.
Is that called trading on drugs?
Technically, it would be, yes.
It is going to be a 15-second podcast where we just yell into the microphone, don't do it.
Thank you. Good night.
Hopefully you're to the point, if you are an overtrader, you're to the point where you understand, okay, this is why I do it. Put discipline aside. You're never going to solve it with discipline. Here's the problem. The intensity that trading gives you, as I said earlier, it's a drug. It's wonderful. And that intensity is everything. The question is, what can you replace that intensity with? What can you replace it with? I have a couple of things that I used. If you are an overtrader, it means you are very highly likely an extrovert. We like intensity. We like intense workouts. So for me, one of the things I do every single day, and I do it around the time I used to get myself in trouble. So I'm in Mountain Standard Time. I started out day trading equities back in 1997. I really just trade the US market up until I started trading Forex in 2007. So in the beginning, I traded the US market. I always got in trouble about 2 hours after the open. The open was always great. I was great at trading that open. The market opened at 7:30 Mountain. By 9:30, I started to give money back and started to screw things up. I actually said, okay, I need to get out of the chair. I need to get out of this chair and away from the stimulus. But I love stimulus. I love intense stimulus. So I need to replace that with something that is very intense. I love to work out. I've always loved to work out. I've always loved sports. I've always loved to be very active in sports and trying to be the biggest, the strongest, the fastest. Again, that's what an extrovert does. And so I actually hired a trainer and I did serious plyometric training. I did serious weight training. I did very, very intense weight training. I could have done that on my own. I'm very capable. I love to work out. I could have easily done this on my own. But the reason I hired a trainer is because I had to show up. And here was a great thing. When you go through that intense workout, and I am just sweating buckets, and my legs are like jelly, you know what the last thing I want to do is, Patrick?
Tell me.
Sit down in front of a computer and make a trade.
Okay.
I'm exhausted. I've exhausted myself. I've exhausted myself to the point where I actually, as an extrovert, need to recharge. That is very, very helpful. I want you just to start to think about things that you can do to get that intensity. Another thing that I have used, and this is going to be awesome for some of you, because I told my wife this and she did not believe me, but I've always loved video games and I love first-person shooters. It's because a first-person shooter is so intense. Those games are so intense. And so that's why I like them so much. And so I would actually go down and play video games. And I tried to tell my wife, I'm doing this for work. How do you think that went, Patrick?
I could only imagine it didn't go well. Is the answer going to surprise me or not?
No. You're exactly right. And so this is a warning for any of you out there that thought, oh, that's what I'm going to use. Don't use it. It doesn't work. It's a dumb reason. I want to start to give you some exercises or some thoughts about what you can do. The first thing you need to do is you need to replace the stimulus, okay? You need to replace the stimulus. If you can get yourself exhausted in some other manner to where you are just totally spent, that is actually really, really good. For any of you who have ever had a puppy before, Patrick, have you ever had a puppy?
Sure. Had a few of them.
What happened when you didn't give that puppy exercise during the day?
When you didn't, it would piss and shit everywhere.
Yep. And it would chew up everything. There's a saying, a tired dog is a good dog. I hate to say that we're dogs. It's a decent analogy, but a tired extrovert is a good extrovert. We really need to replace that stimulus. I want you to think in your own personal life, what are the things you enjoy? It has to have the same intensity. It has to be intense. It has to give you that same feeling that trading gives you, or you're not going to choose it. You're going to choose trading because it is a more intense experience. So you really have to think about what it is you love that gives you that intensity. Now that's step one, is replace the stimulus. Guess what? That's not enough. We need to create barriers. We need to create barriers from you to get the stimulus from the market because you are a drug addict. Now look, you're not addicted to heroin, you're not addicted to anything else, but what you are addicted to is the dopamine that the market gives you. You love that feeling. I love that feeling. So we do have to create barriers. Any reasonable person that had a drug problem would say, I need to create barriers to get to my drugs. I need to make it very difficult to get to my drugs. So I want you to start to think about things that you can do to create barriers. I'm going to give you some examples of what I did. First thing I did, and I shared this earlier on an earlier podcast, I have a security card that I need to log into my trading account. And without it, I can't log into the trading account. And so one day I was just sick and tired of overtrading. I was beating myself up. And so I gave it to my wife and I said, whatever you do, don't give me this card back until next Monday. And she's like, okay. A day or two later, I said, hey, just real nonchalant, like, oh, by the way, remember that card I gave you? Yeah, I need that back. She went and got it, gave it back to me. And I blew it. I overtraded. And afterwards, I'm like, you messed it up. Don't give it to me. I will try to convince you to give it to me. Don't give it to me. And so the next time I tried everything I could and she wouldn't give it to me. And I actually had to go figure stuff out and I had to go out and do other things. I found myself that in a month or two, I no longer needed to give the card to my wife. I could actually handle it because I had broken my addiction to the screen and I had replaced it with something else. Patrick, what do you think about that whole concept?
I get it because, especially when you first discover something like Forex trading or just trading in general, if you take to it, not everybody does, but if you take to it, it becomes the most exciting fucking thing in the world for a very long time. Once you catch that bug, you catch that bug. You're like, where has this been my whole life? Like my life was one way before I found trading, and then my life was completely different afterwards, just because my focus was different. Trading took up so much of my focus for a very long time because I said, this is what I'm going to do. So I totally understand it, and I had to mute those feelings in my own ways, very different from yours. Let me tell you this though, Rob, I honestly thought that you and I were going to have a really big argument here because I didn't expect you to answer this the way you did. I think we can both agree that when you sit down in front of a computer screen and start to trade with real money for a living, that all of that overstimulated action junkie nonsense must go out the window. You and I just have two different ways of getting there. Fair to say? Because I think discipline and patience is non-negotiable.
Absolutely 100% correct. It's just a matter of how you do it. As I said, discipline is great, but we've all tried to do things with discipline and failed. If you could have fixed it with discipline, you would have already fixed it. So I'm really trying to get into some other things people can do, but you're exactly right. When you sit down behind that screen, you need to be trading for one reason and one reason only. There's a great setup that fits your system, period. That's the only reason you should ever click a button, that reason alone. If there's any other reason, it's wrong. You may make money on that trade, but it's a wrong trade. You need to sit down in front of that screen and make a trade using your prefrontal cortex only and no other reason. So we are absolutely in lockstep together with how important this is.
Okay, good. I had concerns before the episode because, like I said, we don't really rehearse this a whole lot. So I was ready. I was ready for a fight. I was ready for anything. But good. No, I'm very, very happy to hear this, and it's just something I would have never thought of because I'm not in that chair myself. So I can't really speak from that position, nor do I ever try to. I talk about what I know, and that's it. I do remember looking at those scores in the comments, and there were a handful of E's in there. They do exist on my channel. E's, this is for you. I hope it was painfully relatable because these things need to be. And I hope you got some real alpha in terms of what you can do to fix it, because you're never gonna get it from me because I didn't know. So here we are.
Well, to wrap this up, there's 3 steps here. You have to replace the stimulus with something else. And I'm going to say this again. A tired dog is a good dog. A tired E is a good E. Get yourself exhausted some other way. You need to restrict your stimulus. One of the things we do at Maverick is when we have a trader that's struggling with this, I say, hey, once you've made 3 trades, I'm changing the password on your trading account. They literally can't log into their trading account. And they ask me all the time, hey, Rob, will you change the password on my account? Absolutely. I'll change it back for you on Monday. These are the things that you can do. So if you have someone in your life, if you can't do it yourself, I had to use my wife to help me out. If you have a spouse or a significant other or a family member you trust, show them how to go in and change a password on your account. Just tell them on Wednesday, hey, I'm done trading for the week. Will you go in and change my password? Get some help from other people. They will absolutely help you restrict your stimulus. If you can't log in to make a trade, you can't screw it up. And you're going to be forced to figure out how to replace that stimulus. For years, I used to turn off any TV or news service when I was trading a news event because I couldn't handle the stimulus. It made me make mistakes instead of just watch price action. Part of the behavior model change is the feedback loop. So I told you I couldn't control myself. I had no ability to stop myself from clicking buttons. So I went to these great measures to exhaust myself in this really rigorous physical training and giving my wife my security card so I couldn't log in. What that did for me is it helped me break the feedback loop that I needed the stimulus all the time. And what I did is I then created a different feedback loop to where I felt good about myself for how hard I was working out because I was faster, I was jumping higher, I was doing this, and I wanted to do that now. I wasn't doing it because I needed to get away from trading. I was doing it because I really liked the results I was getting. And all of a sudden, when you create a different feedback loop, you get positive feedback from your changes, which now cements that change in your brain, and now your brain doesn't want to fight you anymore. You've now made it a habit. And that is the basis of all behavior change, is to get to where you've run that feedback loop enough times to where your brain's like, oh yeah, this is way better. I love it. Just like you did, Patrick, at a certain point, your brain got beat up so many times and was so tired, and you finally got it to where the point where it was so positive that it was easy. What did that feel like?
You know what? I wish I could say it was like this big jump for joy moment. Like I remember the day when it happened, but I just put so many years in at that point. It was just kind of muted. And, we take so many losses, short-term and long-term as traders. I pretty much ever since that day, I've just been waiting for the other shoe to drop for the last 5 years, and, even through a really rough patch of low volume, thankfully that other shoe hasn't fallen just yet. If that makes sense, that's such an introvert answer too, I didn't go pop a bottle of champagne and do a line, I was like, okay, here we go. Let's go from here, but just always be cautious.
Well, that totally makes sense because in the end, what you should feel, I was going to use the term apathy, but apathy is not the right word. I think we use the term dead inside. You should feel dead inside. When you finally get to the point where you need to be, once you finish a trade up, you should feel nothing.
That was it. I felt nothing but just like this creeping dread for the future, but I didn't know when it was coming. So I'm like, well, why worry about it? Just go in there and do the damn thing. And if the other shoe is going to fall, it's going to fall. So you can't stop.
Well, that creeping dread was you understanding the relapse was likely coming.
Possibly. Or I just thought, markets tend to average themselves out because I didn't actually relapse into anything from that point on. I've pretty much been in a good place ever since. So I don't know if that was it or if it's just this existential thing to where you're like, okay, it's never too good for too long. So don't allow yourself to get too high because the crash is coming.
That is a very healthy place to be. And that's where we want everyone to get, is to where you don't feel anything anymore because you've gone through it so many times, you've experienced it, you've rewired your brain to where when you sit down behind a system and you make a trade, it's only because it's a good setup. That is the goal for everyone here. Overtrading is an issue for you. Replace the stimulus, restrict the stimulus, build that feedback loop. I promise you, in 3 months, you're going to feel a lot less than you're feeling now. And in 6 months, you'll be totally in control if you really work at it. That's all I've got for you.
Yeah, and I guess the best way I can wrap it up, just as an outside observer, is just understand that if you do have these problems, and like I said, a lot of these things might be hitting a bit too close to home for some of you, that it's not terminal. You can fix it, but you actually, like everything else, have to put in the steps. Putting in these steps is going to be a little tougher because your inner self is going to be screaming for you not to do this. I'm sure Rob had difficulties with this along the way too. He didn't just up and do it and everything was fine. But that doesn't change the fact that you still need to do it. So please take these things into heart. Please take action. That's the biggest thing. Listening to this and enjoying it and identifying problems is one thing, but you still have to do something about it. So we're going to give you a lot of actionable advice from this point forward. But thank you all for listening to this episode. The next episode is going to be the opposite of this episode. So if you feel like this didn't really apply to you, do we have something for you in episode 6? So stay tuned for that. And for the No Nonsense Forex YouTube channel and for the Trading Psychology Podcast, this is VP, and we'll see you next week.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold.
Hi, everybody. This is Rob Reinhold with Maverick Currencies. I've been trading since 1997 and been a risk manager for the last 15 years.
And episode 6 is sponsored by the same company every episode is sponsored by. It's Maverick Trading and Maverick Currencies. Now, Rob, you guys have a crypto branch, and I have never heard of a crypto prop firm ever until you guys came up with this. But I don't think a lot of people know about it, so tell us more.
To my knowledge, we are the only prop firm in the world. There could be one, I just don't know about it. We're the only one in the world that actually offers crypto to our prop traders. I love crypto trading because it is, in my opinion, the most pure trading you could possibly do. When people trade stocks, they always have this idea of, oh, this has a dividend or this has value, and this value gets convoluted into what they do. I love crypto trading because it is purely supply, demand, and a chart. So I'm big into crypto. I love it. And come check us out if you want to look at crypto for prop trading.
Good. I think that's huge because not only do you get like the most 5-star prop firm in the world as is. Episode 6 is on hesitating and under trading, something that is very near and dear to my heart. And I actually have a lot to say on this. Rob, why don't you kind of open us up here? Then I'll start coming in with my goofy little anecdotes and we'll just take it from there.
In the last episode we did on overtrading, it was me who said, hey, I've had tons of experience with this. Let me talk about it. This is definitely a VP episode. This is something that I haven't really had to struggle with. The one concept I want everyone to have before we jump into how to fix undertrading is the difference between missing a trade and chickening out. Now, I want to make these very clear because they are totally different. When I use the term missing a trade, it's when you are saying, okay, I think the dollar is going to have a big move higher. I can see it going up to this level. And then it happens and you say, oh man, I shouldn't have hesitated. I missed that trade. That's not missing a trade. That is just happens all the time. Moves happen all the time. You can't catch them all. That is going to happen to you your entire career, and at some point you'll stop losing sleep about it. What we're talking about here is chickening out. So missing a trade happens all the time, nothing you can do about it. Chickening out, it's where you identify the trade and hit every single one of your points in your system that you should have entered the trade. And you chickened out, and you didn't. That's what we're talking about today.
And in no-nonsense Forex parlance, every piece of your algorithm said go, but you chose not to go. Why on earth did you do that?
Well, that is what this episode is all about. Why did you do that? So let's talk about some of the reasons why.
Okay, so I'm going to kind of go broad to narrow here because this is something that affects me as a natural introvert. But I want everybody to understand that most people are introverted. If you had 20% of this planet as extroverts, it would be absolute chaos. Most of us are very insular to ourselves. And, that's one of the reasons why you see so many extroverts becoming very successful, because they're the ones who aren't afraid. They're less afraid than we are to do things and try things and take risks. That's just not us. We are the majority. It's tougher with us, and this is why we fall into these hesitation / under trading traps. All right. So first of all, understand that it's totally normal. Most of the world is extremely risk averse. We grew up to not take risks. Media and the TV shows we grew up with, didn't really encourage risk at all. They encourage safety above anything else. And that's just why we are the way we are. When it comes to trading, though, the biggest thing that I had noticed really before I started paying attention to this is what I saw at the poker table. I'm going to bring it back to Vegas as often as I can because Vegas takes advantage of people with bad money management and bad psychology. I guess the best way to say this is, and I'm going to totally stereotype here, but when I would sit down at a no-limit poker table, you had two different types of people, typically. You had your older pensioners, and you could kind of tell by their demeanor and by the way they dressed that life didn't really work out amazing for them, and they're on a pension now, and that pension probably didn't keep up with inflation, but they need to do something, so they're just hanging out at the poker table and playing. But because they don't have a ton of money, and because they don't have a ton of money coming in, they don't play very aggressively. They play very few hands, and they only play when they know they have a really good hand. And you can scare them off of those hands a lot by betting big because they don't want to put that much money down because they simply don't have a lot of it. And they know tomorrow there's not going to be a whole lot more of it coming in. They're still sitting at a 1-2 no limit poker table, so they should know better. Yet they are very non-aggressive. Now at that same table, and again, because of the ratio I just talked about, you have a lot less of these, but the second this person sits down, let's just say in Vegas especially, early 2010s, mid 2010s, men's fashion was a lot more kind of out there when it came to hairstyles and clothing. And it was obnoxious on a lot of levels. And you totally didn't get made fun of for it. It was totally okay to have crazy hair and big Gucci glasses and Ed Hardy shirts and things like that. It was just the style back then. But it was very outward, you know what I mean? And so you would see somebody like that sit down. They would bet very aggressively. They would bring a lot more money to the table, and they didn't really care if they lost it. And you could see that in the way they bet. And the old pensioners hated these people. But you have to understand why they were doing it, because they already had the money. They either came from a rich family or they were drug dealers. Either way, people from a rich family and drug dealers know that if they lose all of their money today, there is a lot more coming tomorrow. So this is a really big dynamic that I saw, and I was able to carry this with me into my trading.
Patrick, as you were talking about this whole poker, the pensioner versus the cocky guy, I realized you were talking about both of me. Now, what I mean by that is one of my favorite strategies is sit down on a poker table, be very friendly, be very jovial, be talking to people, and play very recklessly. And I'll purposely turn my cards over when I've been bluffing. Oh, you got me. And I turn my cards over to show them. And I play like I'm an idiot, which is kind of like the second guy you talked about, the drug dealer / rich kid. And then once I played a couple of those hands, then I got super, super tight. And I got the people to bet against me that thought I was the idiot. And I got them to bet against me because usually they fold against you if they think you are being a good poker player. So it's funny how you just walked through my two personalities I use on the poker table.
For the majority of my life, I was really scraping by. I mean, I was scraping by in the first world. I get that. But any money I did make was very inconsistent. I learned not to really be able to enjoy it or spend it too crazy because you never knew what the next day was going to bring. Now, that was different my first few years in Las Vegas. I was making more money waiting tables than I had ever made in my entire life. There was just so much of it. I couldn't even spend it fast enough. So this is where you heard about the overconfident version of VP blowing accounts, because to me, even though I didn't have a lot, I knew more was coming. Later in my career, that changed. I bought a condo. At the same time that happened, a lot of my waitering career just became not quite as lucrative as it was before and a lot less consistent. I might have a good week, but the very next week I might get no shifts, so it was really a struggle. And I was trying to become this great Forex trader with a completely different mentality than I had before. This almost really didn't have anything to do with introvert, extrovert. It just had to do with the money I had on hand. It was really quite a journey to me, left to right. And I don't know if this is going to relate to too many people here, but here's what I think will relate. And I know I'm kind of going on here, but I say this to get to this point. The changes in psychology that happen between demo trading and real money trading. I don't want to get too far ahead of myself here. I almost think we should do a dedicated episode on that one concept because it is intense. And this is the reason why. When you're demo trading, you're that drug dealer at the poker table. It doesn't matter what happens because you can always hit the reset button. As soon as you put your actual money on the line, unless you just have, money coming out of everywhere, which most people don't have, all of a sudden, everything, it all just hits different. You see that money go down. Let's say you finally start that real money account and you lose your first trade. You might look at that and say, oh my God, that is a day's work that I just lost in one trade. Now what are you going to do? Are you going to fight hard to make it back? Or are you going to curl up into a ball and start inventing reasons to not trade? And I'll start digging a little deeper into those reasons in a moment. But Rob, I want to get your take on what I just said because I've said a lot. And it kind of sets up what we're going to kind of drill down into deeper as far as the actual things that are going through your head as these things are occurring.
Patrick, you hit it right on the head again. And I'm going to go back to our talk on overtrading in the last episode. At the end of it, we said, you want to only trade for one reason and one reason only, because it fit your systems and your algorithm. That's it. The second you start to tie money to your trading results, where you lost a car payment, where you made a down payment, oh my gosh, you are in so much trouble. It is virtually impossible to trade that way. If you are tying money and things that it can buy or help you with, your trading is going to really struggle.
Yeah, so I'm sure, Rob, you've seen so many of these. Let's say you're sitting down. Either things are going really well and you don't want to lose the money you just made, which is also another thing. That's very common. Or, you've lost a couple trades and now you're down and you don't want to lose any more. You are going to start losing confidence in the very system you created, the very system that you backtested and did so well for you over a long period of time. All of a sudden, you don't want to play that long game anymore. All of a sudden, you think your system is never going to work ever again, which is completely illogical. This is the psychological barrier we have in front of us at this moment. And so what's going to happen now is, let's say every piece of your system is telling you to go. You're going to look at it and say, well, this one piece here does tell me to go, but it just barely tells me to go. It's not a really A+ signal. So I'm just going to go ahead and not take the trade. Like you will tell yourself anything. Like, oh, we got a news event coming up in 5 days. I don't want to be in this trade 5 days from now. You could have made at 500 pips in that time. You don't know, but you start creating these reasons, right? And as soon as you do that, you are no longer trading with a system. You are officially trading by fear. Because now, what determines a good signal and what doesn't? Have you set parameters for that? Of course not. Now it's all what your brain thinks is a good signal. Now, did you backtest your brain? Do you have any idea how your brain would have done under normal conditions? Because I have a pretty good idea of how it would have done. It would have done really, really bad. But your system does really well, yet you are so quick to divert from it as soon as real money enters the fray, whether it's on the positive side or on the negative side. This is the conundrum risk-averse people encounter. And that's just one of probably the dozens of reasons why you might chicken out on a trade as a naturally risk-averse person. Do you have any other possibilities here, Rob? Because I know I'm leaving so many out.
No, there are so many, but they all fit into one category or one bag. We call that baggage at Maverick. In episode 1, we talked about don't bring baggage into your trade. And remember I told the story about one of our traders who literally burns up the piece of paper of their last trade? And I talked about how they're doing that to really get it out of their mind. Patrick, you talked about how much prior trades can affect your decisions? What about if your system hit everything perfect 3 times in a row and you had 0 for 3, all losers? The 4th time it hits, there's going to be something going on in your brain that's not about your system. It's not about what you've already pre-planned. It's about what happened in the past. Everything is about getting rid of that baggage to where every trade is only made because it's a good setup and a good setup only, period.
And I even want to pull back on that point a little bit because I know on our spreadsheet, we have a whole episode pretty much dedicated to that one phenomenon right there. But it's such a big one. And I apologize to the audience out there that we're not really tackling it now. We're going to tackle it in the future. But trust me, once you see how much time we're going to dedicate to it, I think it's going to be worth it. But we know that's a thing too. You start losing faith in your system for absolutely no reason. Now, what you don't know, or what you probably don't remember, is when you were back testing that system, there were times where it lost 3, 4, 5 trades in a row. But when you're back testing, you didn't think about that. You just let it run its course over the span of 3 or 4 years. And that's how you got to the result you got to. So I know Rob in a moment is going to talk about ways to where you can overcome this. But what I've always said on my channel is just to think logically about it. It all of a sudden didn't just turn into a bad system. You're just taking these losses a lot more personal than you should, and you're not separating yourself from the actual result. And therefore, you're looking way too short term. And you just have to get yourself away from that. Now, I didn't really have a solution in terms of ways you could do that. I was pretty much just standing up here saying, look, you're being stupid. You're not thinking straight. So start thinking straight, which really is not a great solution. Rob, why don't you take it from here and start mentioning some of the ways we can actually take action and avoid situations like this. And then I'll jump in where I can.
All right. Now, if you remember the first episodes 1 through 4, 1 through 4 were everything about this. And in episode 4, we talked about behavior change and we talked about pre-contemplation. That stage is where you didn't even know that you had a problem. You weren't even aware of you had a problem. You thought you were coming into every single trade with a clear head, but you weren't. Once you get to contemplation, all of a sudden, everything changes. In episode 1, we talked about having a ritual that you do every single time you sit behind a system to make sure that you are clear of mind. You've tried to clear out all the baggage out of your past trades and get to the point where you are actually making rational decisions. I'm going to go back to those ideas and concepts. When you sit down, you need to be aware, self-aware, that you likely have baggage in your head. And you need to spend some time before you make any decisions saying, okay, we talked about hunger, we talked about sleep, we talked about being hungover. Is there anything in your life right now that is making it very difficult to make a decision? Are you late on your rent? That's going to really affect your decisions. Are you feeling like you've got a ton of money right now because you've had a bunch of good trades that have just happened to you lately? As long as you are aware of this, all of a sudden, now you can actually start to take some action. And that's what we're going to talk about, is how to prepare for this. We talked about, number 1, making sure that you have a daily routine, so you're coming in every time rational and ready to go. Number 2, clearing out all the old baggage, making sure that whatever happened in your past trades won't affect you in the next ones. Number 3, having the right mindset. Now, one of the things I want to talk about that we talk a lot about at Maverick is that traders that have a singular trade mindset, they really, really struggle with this. And what I mean is they look at every trade as its own event. Okay, this is my one trade today. I'm going to trade dollar yen. I'm going to get in because my system told me to get in. I'm going to get out, and my P&L was X amount of dollars. Okay, look, that is how every trade goes. But if you think, I did that one, I'm going to do the next one. Do you see how all of your focus is on every single trade, and it's going to be this fight? At Maverick, we teach our traders, trade in blocks. You're going to make 10 trades over the next month, whatever it is, however frequent you trade. You're trying to have good numbers on that block of 10. Do you see how all of a sudden, just by that one mindset shift, you no longer are trying to win every trade? You're trying to win on the group. One of my favorite stories that I love to tell people is early on as a trader. If you sat down with me and asked me, Rob, do you think you can make money on every single trade? I'd say, of course not. That's ridiculous. Nobody can. And then if you ask me, hey, Rob, do you think you're going to make money on this trade? Oh, yeah, definitely. I'm definitely going to make money on this trade. This is a good one. Do you see how absolutely ridiculous that is? I know I can't make money on all the trades, but this one I know for sure because I was so locked into that one trade. Patrick, do you see that a lot with people that you talk to?
For sure. They're either really optimistic about the very next trade or very pessimistic about the very next trade. I'm like, it's not about the very next trade. It wasn't when you back tested, nor should it be now. People just don't factor in everything. Like you even said with 10 trade blocks. I like that idea. My only issue with it is I don't think it's big enough. I would almost say look at 30, 40 trade blocks and see what you can do there. Because I've lost 8 out of 10 before and it sucked. But I don't want to let that skew my view on my own system that I know is going to work really well for me in the future. So no, absolutely. That's the only thing I would go for is just if I haven't said this enough, on my channel and maybe even on this episode is you have to zoom out because it's not about what's going on right now. It never is. So if you can separate yourself from that, then you're going to go a long way. But I probably said this until I was blue in the face and it still doesn't really take. So we need to figure out ways we can kind of maybe prep for this before the trades even occur, which is what I really like about what you were saying, Rob. Do you have anything to add on the preparatory front?
And the last one I want to add into is position sizing. Position sizing can totally change the trade. If you make this position size too large, it is going to force these feelings onto you. It's going to make it to where it is so intense that you're going to have to relieve the pressure. Where if you make a trade that's too big and it starts to go your way, when you see your P&L, that pressure is so much. And as human beings, we don't like that pressure. And we want to take action to remove the pressure. If your position size is too big and it goes against you, you're going to do the same thing. Anything that causes you to deviate from your system is wrong. If you use correct position sizing on every single trade, it is going to really help this whole thing out. And this goes back to what Patrick said earlier about can you handle the loss? If you can't handle the loss, then you can't handle the trade.
No. Like, would you want to bring somebody on to your prop firm and take on all that liability if they handled losses poorly?
Absolutely not. That's what we look for.
Yeah, right. It's probably like the number one thing you look for, right? And it kind of leads into what I was going to say. And like I said, I should have said this sooner, but there are a lot of people out there who don't trade with real money and have no plans to trade with their own real money. Even though later on in my channel, I've told people like, look, you really need to do this anyway because you need to know how it feels and you need to get used to that psychology. But I also said in my patience video, you need a lot of money already to be successful at Forex to where you can do it for a living. 10, 15, 20% of not much is still not much. So you need a lot, but there is the prop firm route. So it doesn't have to be this way. For some reason, like so many people just never thought of that. Glad I was able to bring that to them. But what that did is it made a lot of people just go straight from the demo side into the auditioning side for a prop firm. Now, this is not a whole different psychology, but it's different than actually having real money on the line. You can just keep hitting the reset button over and over again every time you fail. But let's say you're doing well, and now you're 2 or 3 months in, and your prop firm wants to see 6 months of results. Now you really can't go back without having to wait another 3 months to start over again. So you really don't want to do that. All of a sudden you tighten up and now you only want to take the most premium trades possible. Well, the most premium trades possible are what your system is giving you. There is no more premium than that. You keep putting this extra layer of nonsense over the top of things. All that does is lead to hesitation and under trading.
I think everyone can see that there is so much potential baggage out there. We could spend the next hour going over all of the baggage that you could take into a trade. We don't have time to do that. So what we need you to do is be very self-aware of every single thing that goes into what could potentially get you to change your system. We need you to be paranoid, and we need you to be on guard. And once you do that, then all of a sudden, it becomes much easier with preparation, action, and then creating a positive feedback loop. And that's what session 4 was all about behavior change, is how do you get to the point where you make this automatic in your mind? So let's go back through preparation real quick. Number 1, take proper risk. Do not make your position sizes too big. Do not make them too small, because I've made trades that are too small. Guess what? I don't care enough about them to sometimes move my stop or sometimes to adjust my trade because they're so small I don't care about them. Make sure you follow proper position sizing. Number 2, daily rituals. Make sure you got your daily rituals. Make sure that you're looking at things the right way. Meditation, whatever you need to do to get there, do it. 3, trade in blocks. Don't think about singular trades. And Patrick, you were right. 10 was just the smallest number I threw out. You really should be looking at blocks of like 25 to 50 to 100. That's going to be more indicative of your actual trading success.
I love that block theory, by the way. That's the first time I've really heard anybody say that. That's the first time I've ever really considered it. I think I could have sped up my learning curve a little bit had I had known about that in the past. So that's a killer piece of alpha.
We have traders do blocks of 25, and they turn in blocks of 25. Once they're done with 25 trades, they turn them in, and then we go through them, we analyze them. And it's all about what can we do to get the win-loss and profit factor and draw down lower out of that block of 25 trades. We don't care about your dollar-yen trade or your Aussie-Kiwi trade. We don't care about that trade. We care about that block and how well you're doing. It's very, very important to look at trading this way. Let's go on next to the concrete steps. First one, we talked about take proper risk. You must use position sizing calculators. I can do things in my head. I've always been good at math. I love math. And no, I did not say meth. I said math. I want to make sure people know that. And I can do it in my head, and I can get pretty close. Here's the problem. Sometimes you can get a little lazy. Sometimes some other things pop in your head. Use a strict position sizing calculator. Patrick, do you have any that you recommend?
No, what we do on No Nonsense Forex is, I was going to jump in on this too, because we just do 2%. It's non-negotiable, 2% on everything, because as you know, different pairs have different volatilities. So why would you risk more on one and not the other? That's almost to say that you have a better chance on this pair than you do this pair. That doesn't make any sense. So 2% all across the board, pretty easy to figure out. I'm actually guilty of not being super precise with mine sometimes because I can almost do it in my head so quickly because I've done it for so long. 2% is what we do, so that really doesn't affect too many of my traders.
Perfect. Religious use of a position sizing calculator. Number 2, we want to break any baggage that you're bringing in from your past trades. So let's have you do some sort of ritual. Something where I just got done with my one trade. It was a win or a loss, whatever it was. Who cares? What are you going to do mentally to make sure that you're not bringing in baggage? One of the things people do if you're a shorter term trader, I always like the rule to go out and take a walk. Turn off your system. Like fully power down your system. Go out and take a walk. What that does is that breaks this stimulus. It breaks this chain to where, okay, that one is truly over. That one is truly done. Now look, burn up your piece of paper. Don't burn up your office. But look, whatever you need to do, make sure that you are sitting down the next time with a clear head. And then the last one, journal everything. You've got to journal everything and focus on the blocks. Focus on the blocks and say, hey, I want to have positive results over my next 25 trades. That is your goal. You don't care about any one trade. You care about the block. Basically, take all the steps you can do to when you're sitting down, everything's clear. You're not going to hesitate because you're going to want to hesitate. There's going to be things that cause you to hesitate. You shouldn't have any problem because you've already done all the work before you even sat down. What do you think, Patrick?
I think it's great. I think that block theory, if you're just able to look at it not by a trade scenario and more, look, I'm just trying to fill a 25 trade block with trades. I think that is a good baby step towards solving what is really a major problem for a lot of people that doesn't just have a, take this pill and call me in the morning type remedy. This is something you got to take little by little. You're not just going to say, okay, I'm going to think different now and tomorrow is going to be a brand new day and everything's going to be good again. No, go in smaller steps here. And I think looking at it as a series of 25 to 30 to 40 trades, as opposed to, one trade or two trades, is a really, really big step. If you can just get yourself there, I think you're going to be in good shape. And if you can learn to do this on demo, it will be a lot easier to transition once you get into real money, because now you know what you're looking for.
The singular trade mindset is so dangerous to a new trader. I really, really want you to just think about it. It's not a singular trade. It's a group of a bunch. I promise you that in 3 months from now, you won't even remember that you made today. It's meaningless. It's totally meaningless. But if you are focused on a singular trade, then all of a sudden it has this binary outcome. I'm either going to win or lose. And that's scary. That's really scary to have to make the right decision. And then you're going to have this binary result of win or lose, feel good or feel crappy. Take that away from yourself. Take that away from yourself. No longer think as a singular trade mindset and start to think of blocks. That right there, I think, is really going to help people with hesitation.
Yeah, and I'm so glad we didn't say, okay, here, do A, then B, and then C, and then D. No, start with A, because that's a big step. If you can just do that, like where I am right now, like people say, oh, so what was your best trade ever? I couldn't even tell you. I don't remember, no matter how good the trade was. I always have this like creeping dread that I'm really just like making my account go up to absorb losses later anyway. So it's like, I don't even care if it's a really great trade. I can only recall the times I really did something stupid. I could tell you those stories, but I'm to the point now to where no matter how good or bad a trade is, as long as I did it the right way, it's just a trade. It's a fraction of the whole. But I know a lot of you guys aren't there yet, but just know you can get there. Even without this block theory, I got there, but I got there the long way. We don't want you to take 8 years to solve one problem. So start here. I think it's going to make a big difference.
Yeah, if you can just remove this binary result of every trade you make, whether it's win, loss, success, failure, that is so dangerous. Remove this binary result of one trade and put it onto a group of trades where it's truly, how good am I as a trader? How good can I get my trade numbers to be? That's going to put you in a wonderful situation for success.
And so I think that wraps it up. Does it, Rob? Let me know.
Yeah, absolutely.
Okay, good. Yeah, we've gone on quite a bit about this, but I think it's something really important, and I think this is something that affects the majority of traders. So I think it was worth spending a lot of time on. But thank you for joining us here at the Trading Psychology Podcast. We are absolutely now on Spotify. We're just hard to find, so I'm going to go ahead and put the link for that down below in the description so all you Spotify listeners can start there. But on behalf of Rob Reinhold, this is VP. Thank you for joining us at the Trading Psychology Podcast here on No Nonsense Forex. This is VP. Signing off.
Thanks, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. Link down below in the description. And with me always is Rob Reinhold of Maverick Trading.
Hi, everybody. This is Rob Reinhold with Maverick Trading and Maverick Currencies. I started trading back in 1997, back in the pioneer days of online trading. And I've been doing this ever since, and I started trading Forex in 2007.
We've seen, ever since we've been doing this, a lot of feedback and questions in the comments section about Maverick. People are very curious, and what I've learned is if one person's saying it, then dozens are probably thinking it. So take the time now. There's a place where you can go where you can get the majority of these questions answered, right?
Yes, and I've actually been pretty active on the comment section. And basically the comment I've been saying is go to the website. Go to the website, maverickcurrencies.com. If you're interested in looking into being a prop trader, trading Forex and crypto, maverickcurrencies.com. Go on the website. We've got lots of resources for you there. If you're more interested in like stock and options trading, maverickTrading.com is going to be the website. Lots of resources there. And then as always, you can come on the comments and ask them. I will try to be as active as I possibly can in answering them.
But what kind of questions do both of those websites typically answer for most people?
The most common question we have is, hey, what are the requirements to get started? What are you looking for? All that's on the website. Other than that, we have lots of what is our methodology? How do we handle our business? What are the fees? Stuff like that.
Thanks for that, Rob. Now, moving on into episode 7. This is something we have already touched on before, something Rob and I have both suffered from. But there's a lot of different ways to be overconfident. And I don't think we've really touched on them all. And I think there's one or two in particular that really need a lot more of our focus. That's going to be our focus for episode 7. Now, Rob, lead us off here, because I think even though I had my bouts with this early on, I think this is something that has probably plagued you the majority of your career, fair to say?
Definitely the beginning of my career. And this is something that you and I, Patrick, we are both guilty of. We both got into this business with big egos saying, hey, we're going to just work hard. We've been successful at other things we've tried. We're willing to put in the work. We're reasonably smart enough to get this down. And we were dedicated and we were all in. And we had confidence. very high confidence. And in fact, I had what I now label as overconfident. I've had overconfidence my entire life. Now, let me tell you what I mean by overconfidence. What I mean is that my confidence was larger than my ability. I've had overconfidence in every part of my life. People say, hey, Rob, do you know how to drive a semi-truck? Of course I can drive a semi-truck. Never drove a semi-truck before. Yeah, I crashed. Rob, have you ever ridden a motorcycle? Never ridden a motorcycle before in my life, but sure that I could do it. Thank goodness I did not crash that one. I have had some I've had 16 surgeries in my life, mostly through sports injuries, because I was overconfident that I could do it. And in trading, I went into there with the same mentality that I was going to attack it. I was going to devote all my time and energy. I would work hard for as long as it took to be successful, and I was going to make it. That actually set me up for some early failures that delayed my trading career. Patrick, how did you have that experience?
I wasn't the daredevil you were. I was always a pretty cautious kid growing up. My upbringing had a lot to do with that, I think. At the same time, I was always the smart kid, and I always found ways to work smarter instead of harder. Kind of more in my 20s, I actually started to work hard on top of that. I felt like I was pretty much unstoppable. I was a unicorn. I'm going to come into this market and I'm not only going to find a very unique way to do things to where everybody else is stuck doing things a different way. I'm going to work really, really hard and make it amazing. And so it's really just a matter of time before I turn my $2,000 into $100,000. LFG, let's go.
Why not 100 million? That's what I thought I was going to do. We were both the poster children for the Dunning-Kruger effect. I want to talk about it in this episode because it's an actual scientific effect that happens. We as human beings, we go from the place where we have no knowledge of anything and we have no confidence. And the way we work as human beings is the second we get a little bit of knowledge, our confidence grows and grows and grows until it gets to a point where we are the most confident you ever will be. You get to the highest confidence you could possibly get without any real knowledge at all, just a little bit of knowledge. And then you can see the Dunning-Kruger effect. You have this huge plummet. And I've had this plummet. Patrick, I know you've had this plummet to where you realize, oh crap, this isn't as easy as I thought. And you can see that you actually never, ever, ever get back to the peak. You never get back to the point where you were an idiot, but you thought you had the most confidence. It's pretty interesting. Patrick, do you remember your fall from the peak?
For sure. I mean, monetarily and psychologically and everything. Now, I think that peak lasted a little too long. I should have realized early on that it's going to take a lot more work internally and externally than I was giving it. But yeah, when I finally had to come to grips with the fact that I didn't find the Holy Grail right off the bat, which is absurd looking back on it, but that's how I felt. Yeah, I remember that. Like I had to sit back and question everything because I had such high hopes. I thought I had found a particular indicator. I'm not going to say what it is because it's not super common, but my audience will probably know what it is. And I was like, I don't think anybody's using this. I didn't test it, but I was eyeballing it. And I was like, wow, look at how well this thing works. Oh man. Again, it's just a matter of time. So I got so excited. I had all these big dreams. My crappy job became less crappy because I knew I had a way out. And I thought that way out was going to be a lot quicker than it actually was. And so life was actually really good. And I had to come to grips with the fact that those dreams were not real. And that's tough, especially when you've been hanging on to those dreams for a good 6 months to a year.
I have personally found the Holy Grail of trading at least 11 or 12 times. It's amazing how many times I've found it in my career.
I got you beat, yeah.
The purpose of this episode is to really lay the groundwork because Patrick and I have gone through the process. I started in 1996, kind of dabbling around, and in 97, I made a commitment that I was going to be a full-time trader. It's something that I had always wanted to be. When I was in 6th grade, I had a fantastic teacher, and the teacher was one of those teachers that they just threw the textbook away and they just taught you about real life. One day, he brought in a guy from a bank. And the banker came out and they gave us all these checkbooks. And our teacher taught us about how a bank account works and how you put money in and out of it. And we all had these fake bank accounts. And if you got good grades or if you did good things, you got money into your account. And then if you did bad things, you were late from recess or something, you had to write a check to the teacher and the money went out of your account. At the end of the month, the teacher would open up a store and you could buy all these cool, NFL football pens, erasers, cool stuff. One of the things that he taught us is he brought in a Wall Street Journal to everybody and showed us how to do the stocks. And he showed us how to read the stock tables, how to read the name, how much it changed that day. And he just mentioned you can buy and sell stocks with your bank account if you want. And he made these little fake tickets. I'm sure I was the only kid in there that cared about that, but all I wanted to do was that. And I would study on the weekends when we got the paper at my house, and it's something that I've always been into. So when I got this opportunity and I made this commitment to myself, I was all in, ready to go.
It's really funny you say that too, because we played the stock market game in school, probably not as dedicated as you guys did.
I am a lot older than you, Patrick, so let's not talk about that.
I'm older than you think I am, but yeah. So, but at the same time, it was just kind of like a little passing thing. We did it for a couple of days and that was it. But I was really into it because I loved video games back then too. And I was like, wow, this is like a game you can play and make money from it. You can't do that playing Super Mario Brothers. And I was like, hey, this is really great. So I really put a lot of thought into it. And I kept thinking about that. And I think really, honestly, from that point on, if somebody said, what do you want to be when you grow up? Instead of saying a football player, I said I wanted to be a stockbroker. And I think I probably said that for the next 15 years. No kidding. All because of that little stock market game we played.
It is awesome how much teachers really influence you at a young age. And we spent a lot of time in this psychology podcast talking about your programming. And most of it was all negative programming, but there has been some wonderful programming in all of our lives that we received that has really brought us to this point. Let's get back to this path here, because the reason for this podcast is to set good expectations for what it takes to be a professional trader, where you make a significant amount of money. I'm not saying it's the only thing you do. It's going to be one of the things you do, but you make a significant amount of money, enough to change your lifestyle choices. Let's set expectations for the path. I thought I was going to hit it big. I had delusions of grandeur right out of the gates, and that hurt me. That hurt me so much. It caused me to push too hard. I over position size, I over leverage. I did everything you could possibly do wrong. And it wasn't because I was dumb. It wasn't because I wasn't disciplined. It's because I wanted it so bad and I was so confident, because everything you work hard for, you get in the end. That was my mindset, and it really hurt me. Patrick, how did your overconfidence hurt you?
Monetarily, mainly. And I guess in terms of things that involve my brain, I've always been confident enough to where, like, no matter how bad I would do, I wouldn't quit because I knew it would turn out okay in the end. I really do wonder if a lot of you listening at home are like this too. If you're listening to this on YouTube, I think 100% of us that are still in this business really experienced some type of this phenomenon early on, to where once we discovered Forex and once we learned how charts work, and then we started applying a couple tools here and there, and we saw how they worked, like we were just euphoric over this, to where I think we all had that conversation with ourselves and said, yeah, this is what I want to do. There is a real future here. I don't care if this guy on YouTube named VP said there's a 99.9% fail rate. I don't care. I'm going to be that 0.1% because I really see the light here. So I think we've all gone through that. I'd be really curious to hear some of your guys' personal stories as far as what was going through your head when you first learned about Forex and you first started hearing other people talk about it and teach it and show you how to do things, whether it was me, whether it was somebody else, whether it was price action, whether it was indicators, whether it was fundamentals, whatever it was. I have a feeling this applies to every single person listening to this episode.
Patrick, we have a saying at Maverick, and we brought it up a few times in this psychology podcast. Traders aren't born. Traders are forged. When something is forged, it goes through heat. It goes through pressure. It goes through hammering. That is the process of becoming a professional trader. I didn't have the understanding of that when I started. I thought it was going to be smooth sailing, and it caused a lot of issues on the way there. I wanted to start this episode with this overall overconfidence of like getting into trading and thinking you're going to kill it and be great. As VP said, we've all probably experienced that fall from the overconfidence down to the trough. But there's other things that can contribute to your overconfidence. We want to go through that just so you're ready for when and if it happens to you, you know how to handle it.
So the first one that I have written down, Rob, is demo trading. Not everybody demo trades the same way or for the same length of time. So I want to make this distinction right away. The first time I demo traded, I don't even think I really did that well, but I could always just hit the reset button, and I hit it enough times to where I actually started doing really well. If you just do that enough times, you're going to have a good run. I think I had that good run. And in my mind, I'm like, well, I'm 2 weeks into this, and I mean, I'm leaving money on the table at this point, so I need to get into real money right now.
Yeah, you're ready to go.
Yeah, time is money, man. Let's get retired from this restaurant industry and let's do it in the next couple of years. So I did not demo trade for very long at all, which I think everybody knows is a really, really stupid approach. Then there's a lot of people who take a very measured approach and they demo trade for a long time, as we all know, or anybody who's done it. The jump psychologically from demo trading to real money is so extreme. You're almost doing yourself more harm than good by demo trading past the allotted time that you set, because you're not gaining those reps. You're not getting the experience of trading with real money. And I think everybody needs that. Would you agree?
Absolutely. I mean, this podcast is all about what happens after demo. Because none of this stuff happens in demo. None of these feelings, none of this baggage happens. You have to get in the game in order to feel these feelings and deal with this stuff, because this is where you become a professional, dealing with the psychology aspect. So absolutely 100%. Too long on demo trading will not help you.
Yeah. I tell people, back test this many years back and then forward trade for X amount of time. But then after that, move on, get into auditioning for a prop firm, get into real money trading, whatever you need to do. You can do this for too long, and you can also do it for too short of amount of time too. So I think that's really important.
So when you do flip that switch and you go to trade live, you're most likely going in there with a lot of confidence. You wouldn't be doing this. You wouldn't be going live unless you thought that you were that 0.1%. You wouldn't. And so you've got all of this overconfidence, you've got this back testing, you've got this demo trading, you've got who you are as a person, and you're ready to go. This is where it's so dangerous. And it's why you have to get in the game, because learning how to deal with these things is part of the process. It's part of being forged and becoming a trader.
Because let me tell you something, your demo testing results are not going to look anything like your real money testing results. Your win percentage is going to go down, and you have to anticipate that going forward. Do not ever think your demo testing win rate percentage and your ROI is going to come anywhere close to what it's going to be when real money is on the line. I think that's step one. I think that's a big reason people jump into this thing overconfident. Maybe they didn't have confidence at first, but they demo traded and they're like, oh, wait a minute. I'm actually pretty good at this. This system actually does work in real time. Okay, now it's on. Now you actually start projecting. You're like, oh, man, I just made a 20% return in 6 months. Well, shoot, 4 or 5 years down the road, what is that? Oh, my God, that's a lot of money. And then that's the mentality you start with as you transition into real money. And it's no wonder most people fall apart.
Yeah, the whole focus at the very beginning is your trading numbers. None of that money comes until your trading numbers are totally dialed in. They just don't come, because you have to put in the work. You have to get to the point to where you are not overconfident, but you are competent. That's where you want to get to, is competency. And here's the irony. In the Dunning-Kruger effect, you never get back to that high level of overconfidence, no matter how long you do this. I know lots of professional traders within Maverick and outside of Maverick. And let me tell you, you talk to a true pro trader, they will never tell you that they know exactly what's going to happen. Patrick, how many times have people told you, oh, I know what's going to happen here on this trade?
Oh, I'm not a rude person, even though I can be on YouTube. Like in real life, I don't just jump in and call people out on stuff, but I've had to call people out a number of times on this. But they're like, oh, I've been trading for 25 years. And, when I see this thing happen, in the news or on a chart, I can pretty much say with certainty that this is going to happen next. When I see X, I pretty much know Y is coming. And I'm like, that is the biggest load of horse shit I've ever heard. I'm like, please save it. All right. I see right through all that. But yeah, I don't know why that triggered a rant in my head, Rob, but yeah, I know people like that they say they can pretty much just predict the market by what they've seen due to their experience. I don't know why it gets me as much as it does, but every time somebody says that, I feel the need to jump in and correct them.
Well, let me trump your rant because your rant was pleasant. I will be ranting at a huge level here.
Here we go.
Cannot stand. Yeah, here we go. I have talked with lots of people about trading, lots of our traders. I will not let this go. Whenever I'm having a talk with a trader and we're talking about stuff and they say, well, Rob, I know that this stock's going to go from, I said, whoa, hold on. What did you say? They said, well, Rob, I know that this is going to happen here. And this is what I always say, and excuse my language, but I say this for a reason. I say, you don't know shit. And I get very belligerent about it because the thought that you know what's going to happen in a market that's full of lots of randomness and full of the opportunity of news coming out at any point, at any time that could cause things to happen, the audacity for you to say that you know, I jump all over that. Whenever you talk to me, or whenever I talk to one of my traders, if they say, I know, I don't let it go, I jump on them and I say, look, you cannot use terms like I know, because what that does in your mind, it makes it a certainty. And now all of a sudden, there's not a chance that you might be wrong because it's a certainty in your brain. You have to use things like the odds are that it's going to do this, or it's done this most of the times in the past, so that's why I think it's going to do this. You can use those kind of terms because all of a sudden that doesn't cement that certainty in your brain. It gives you the opportunity to possibly be wrong. Part of this overconfident thinking you know in a market that is random a lot of times is absolutely setting yourself up for failure. I need you to check your thoughts, check your speech. Whenever you hear yourself say that you know something's going to happen, I want you to rant on yourself just like I ranted on you, because that is setting yourself up for failure. You don't know shit. Okay, rant over. I'm back to being pleasant.
I think it really comes down to this one thing that I do know. You don't get better or worse at trading. That's not a real thing. You only get better or worse at creating systems and following systems. The creating system, the nuts and bolts stuff is the technical analysis, the money management, everything like that. Following the system is everything we talk about on this podcast. And that's all it comes down to. You get better at creating systems. And then once you've done that, you get better at following them. And that's all it is. That's all that happened to me. I'm sure that's all that happened to you. And that's why we are where we are right now. And that's why some of the greats are where they are right now. And it didn't matter how confident they were. The only thing confidence might help you in is keeping yourself going when things get bad. I think you can actually use that as a positive.
One of the things I love to talk about with our traders at the end of every year, we close up the books at Maverick and we say, okay, great job. We make sure all the payouts have been done. And then at the first of the year, I always have a meeting with all of our traders says, okay, look, the market doesn't care what you did last year or last month. It doesn't care. This moment forward, we are equal. Because I could be total shit next month. And you who were total shit last month could be fantastic this month. So I totally agree with you. At any one point, we all have the capability to be really good or really bad. The market is going to do what it does. I say the market is a wild animal. We step into the animal cage. We have no control. That is the one thing I really want everyone to take away from this episode. To truly get to the point where you know that you don't know shit. And I know that's a weird thing to say because the whole point of not knowing shit is admitting you don't know shit. But to know that at any time when you're trading, anything can happen. News could come out. The Fed could say this unexpectedly. Anything could happen. Once you get rid of the illusion that you know, and now you're just trading because, look, I have no idea what's going to happen over the next 24 hours. But my models say that this is the trade I should take. and I'm going to manage my risks because it could go horribly bad at any time. And I'm going to let this thing run as far as I possibly can that my system will allow, because I don't know that it could possibly go really right. This could be the greatest trade of all time. You just don't know.
That's it.
If you can go into every single situation, treating all trades as the best or the worst trade ever, you're going to do great.
Yeah, so I'm getting excited here, Rob, because I want to cut in because that's so right. And it took me a while to learn this too, because you're absolutely right. There's a movie called With Honors. And the only reason I remember this, like from way back in 92, it was a Joe Pesci movie where he was a bum that happened to get into Harvard. Do you remember this at all?
I never saw it.
Okay. The one thing he said, and I think it was like the climax of the movie, you have these really, know-it-all, blowhard professors, obviously at Harvard, or at least that's how the stereotype goes. He got up and he said, the one thing that makes me so smart, the one thing that makes me able to get into Harvard, the one thing that makes me a genius is the fact that I know that I don't know nothing at all. Or I don't know how he phrased it, but it was to that effect. That goes along with what you were saying. And overconfidence is the opposite of that, because that is you saying, not only am I a great trader, which to me is not even a thing, but that you have the ability to be amazing at something that really comes down to just randomness. And all you can do at the end of the day is learn how to create a great system and learn how to follow a great system. And confidence doesn't even really play a part in that. It's so binary. You just have to do those two things.
And market direction doesn't matter. Volatility doesn't matter. None of it matters because it's going to do its own thing. It's going to go up, down, sideways. It's going to do everything. Your system is what matters.
We can't control it. Yeah, we've gone through, my people are trend traders. We went through 4 years of very much below average volatility.
I remember those years.
Yeah. It wasn't that long ago, was it? But a lot of us came out the other side okay. We didn't come out rich, but we came out with our heads above water, and that's all we really need because, as we all know, things change, and we've seen that in 2022. It just comes down to creating a system and following it. That's it. Whether you think you're going to be good at it or not doesn't really mean anything. It didn't for me. It didn't for you. It did not factor into our success or our results at all.
Well, actually, thinking you're going to be really good at it might actually hurt you. It's so good to go into this whole thing humble and ready to go and just understand the process. And that's really what this episode is all about, is to get everyone in the right mindset, wherever you are in your progress, whether you're 1, you're 3, you're 7, wherever you are, just starting out. If you can get yourself in the mindset early on that you don't know shit, I guess that is the motto of this episode. You don't know shit. And then you are going to make trades with no expectation that they're winners or losers. You're just going to make them because your system says so. The faster you can get to that point, the faster you're going to be a pro.
It's it. And if you don't embrace this humility now, the market's going to do it for you. So you might as well do it now and save your money.
So true.
On that note, don't be confident because you don't know shit. Be humble because the market will humble you on your own.
You will definitely be humbled one way or the other.
Yeah.
One's going to cost you some money. One's going to cost you some pride. I'd choose the one with the pride.
Yeah, it's like this isn't the most uplifting episode in the world, but it's real, and it's a big landmine that not only have Rob and I both hit, but a lot of you have probably hit in the past. We don't want you to keep hitting it over and over. And for brand new traders, we don't want you to hit it ever. So if you can just enter this with the right frame of mind or kind of hit the reset button and then enter this with the right frame of mind, I think you're going to do really well going forward because you have overcome something that takes a lot of people a very long time to figure out. And some people never do.
Patrick, I want to share one last story with people. Now, I know that right now we have these flat screen monitors with hardly any border around them. But when I started trading back in the 90s, we had these really big monitors that were, like 15 inches deep and 15 inches wide. And they had this huge border around the screen, probably about 2 inches of border. And about 1 or 2 years into my trading, I was frustrated with me making some of the same mistakes. So I went and bought a label maker. And I actually printed out all my mistakes I'd make, like, hey, don't move your stop. And I put that on the computer monitor to where I actually had to look at the sticker, read, don't move your stops, before I went and moved my stop. And I remember that I actually had a sticker on my monitor that literally said, you don't know shit. So this is something that I've been doing for years and years and years. If you need to do this for yourself, write a sticky note, put it on your monitor, to where you are remembered. Hey, you don't know anything. And if you have any other problems that you keep falling into, put those stickers on your monitors to where you have to read those stickers before you screw it up. It's going to help.
And don't feel like that's crazy. This is a big step in your overall maturation because this is you admitting that you don't know shit. But it's also showing the self-awareness that you need to be reminded sometimes. So that's okay.
So go buy that label maker or get out your sticky notes and remind yourself.
Yeah, it doesn't make you a serial killer. It just makes you self-aware. That's really all it is. And so I think we'll wrap it up there. A really good episode. So on behalf of Rob Reinhold and myself, this is VP for No Nonsense Forex signing off. Happy holidays, everybody. Happy holidays, Rob.
Hey, happy holidays. Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me always is Rob Reinhold.
Hey everybody, this is Rob Reinhold with Maverick Currencies. I've been trading since 1997 professionally, and I jumped into Forex in 2007. Absolutely love Forex trading and added Bitcoin and other cryptos as well.
I don't know if you guys knew this, but Maverick Currencies also has their own YouTube channel. We link it down below on every episode. You can go right to it. Rob, tell us what you can find on that channel.
Our YouTube channel is really new, and for years people told us, you got to get on YouTube. And we just did our own thing with our own traders. And we started to release a few things and really liked the response that we got. So we started to release some more things. So we are now releasing some of our market commentary videos. Every week we produce 5 videos about current market commentary and current market trades. We do one on the weekend called the Currency Room. And then Wednesday we do another session. It's about an hour long where we go through the current market and we update everything we talked about over that weekend session. And then daily on Monday, Tuesday, and Thursday, we release about a 10 to 20 minute, here's what happened today, here are the pairs we're looking for, here's what you can look to expect over the next 24 hours, these are the news events you got to watch out for. So it's really current commentary for people who are trading cryptocurrency and Forex.
Nice. And so if you are a fan of Rob and you want more material, there's plenty more out there, and it is all free on the Maverick Currencies YouTube channel.
And you'll get to meet our many other members of our staff that help us produce that content.
Great staff, by the way, too. We have moved on to episode 8 in this fine podcast, and this is a subject that plagues everybody at some point, and it's something I've actually done a podcast episode on a long time ago, back in the early days of the Forex Q&A podcast. But it needs more attention, and it needs a little more elaboration, a little more clarity, and a little more action. And so we're going to be talking about that today. And the topic is how to deal with slumps, how to deal with short-term losing streaks. The way I define this is it's more short-term. You have maybe not 2 or 3 losses in a row because that happens all the time, but something like 5 losses in a row. Or let's say you go 2 for 9 in terms of wins, like 2 wins, 7 losses in a 9 trade block. What does that do to somebody? Because we've all been there. We all know what it does to us. Moments like this give you the highest levels of temptation to deviate from what you're actually supposed to be doing. Let's go ahead and drill down into this a little more. Rob, start us off here. How should we kind of approach this from a top-down outlook?
I think you gave a pretty good example of what a slump is. It's basically a period of time where your system produces less results than you were expecting. And that could be multiple losers in a row. That could be just a few winners over a large group of losers. But it's basically any period of time where you just feel like, okay, my results are not what I expected. It's not what all my hard work went into to produce these kind of results. And as Patrick said, this is when you are ripe for messing it up. This is when everything in your brain is working against you. All the chemicals are swirling around and you're doubting everything and you're doubting yourself. These are the moments where you are the most likely to screw up the psychology part of this whole trading experience that we have. So that's really why we wanted to do this episode, is to basically help you prepare. This will happen. This absolutely will happen. And if you're in a slump buster is not the answer. We're going to give you some things to work on.
And just to show how normal this is, it's the top earning traders in the world go through this too. It's super, super normal. And Rob actually has a chart explaining just how normal this is.
Well, it's just not normal. It's statistically guaranteed. So if you want to call that normal, okay, that is normal. It's statistically guaranteed that you will have a slump. Let's take a look at this chart. On the left, you have your win percentage. And on the bottom, you have your consecutive number of losing trades. So you simply say, okay, what is my win-loss percentage? So let's say you go to a 50% win-loss percentage. And then you go along that line, it says, okay, what are the statistical odds that in the next 50 trades, you're going to have 2 losers in a row? It's 100%. The next one, what are the odds you're going to have 3 losers in a row? Let's just call 99.8% 100%. What are the odds you're going to have 4 losers in a row? It's 95%. And so look at this. This is the statistical numbers. So if you think you are so smart and your system is so great, and you say, I'm not going to have 4 losers in a row, what's your win-loss? 50%. Yeah, you are. You absolutely will. What are the odds of 5? 75%. What are the odds of 6 losers in a row? 50%. You have to expect this. This isn't anyone's opinion. This isn't my opinion. This is not Patrick's opinion. This is the cold, hard numbers. Statistical probabilities say you've got about a 50% chance to have 6 losers in a row somewhere within a 50 trade period. You better plan for that, because if you don't, you will be so shocked when it happens. But by using this chart, and we show this chart early on to all of our traders, look, you better start working on this because it is statistically guaranteed to happen. What are the odds of 7 in a row? 29.2%. What are the odds of 8 in a row? 15.5%. 8 in a row. Now, a lot of you just can't even fathom that. Like, oh my gosh. Can you imagine if you made a group of trades and you had 8 losers in a row? At that moment, how do you think you would feel? I always use that because that's what you're going to be dealing with. At that moment, you will not be dealing with logic and reason. You will not be using your prefrontal cortex for anything you're doing in trading. You're going to be using your insula and other parts of the brain that deal in fear and fight and flight responses. Patrick, have you seen this before in people?
Yeah, I've seen it myself. I think that's why I make such good trading psychology content, because I've gone through all of this. I'm not talking about things I don't know or I haven't experienced. I can't remember if it was 7 or 8 losses, but I definitely had that in a row at one time. Now, the only thing that I think saved me from going insane at that point is it came after a really nice run of good trades. So it didn't put me in a hole. It just erased a lot of really good prosperity I had before that. So I was bummed for sure, because I'm like, man, it's like a month or 2 of trades all down the drain because of this losing streak. So that sucked. But I can only imagine if I was starting out and I just put real money in for the first time, and then that just happened to be the moment where I hit this losing streak. Yeah, I don't know what I would do. I haven't been there myself.
Here's the sad thing is some poor soul pulled that short straw and it really messed with them.
Yeah, I mean, this is the type of stuff you just don't come back from.
This chart can be downloaded in the link below the video. If you are listening to this outside of YouTube, you can go to maverickcurrencies.com/odds, ODDS, and you can download a copy of this here. And we want you to go through and take a look at what is the statistical probabilities. Now, we've color-coded these in this white area. This is where it's most likely going to happen, but it's not going to be common. The red area is, oh, it's going to happen all the time. You better be ready for it. The blue area is where, hey, it's still going to happen, but it's significantly lower odds and very statistically small probabilities. But it still will happen. You'll see you have 0.1% of the time, 0.4% of the time. You do have to account for these. Now, I love this chart because anyone who still has it in their brain that this isn't going to happen to them, I show them this chart and they say, oh crap, it's coming.
Yeah, and I want to add in one thing too. I do get people ask me sometimes saying, well, if money management and trading psychology is of such utmost importance, why am I doing all this work on technical analysis? This clearly takes the most work. I say, well, because if you can take a 50-50 trader and add percentage points on little by little, it really does make a big difference. And I really had no way to illustrate that except just by maybe saying, what could that do over time, year over year, if you're trading different markets, things like that. It's significant. But I think this right here, in one way, shows just how significant that can be and why we work so hard to eliminate losses on this channel. But like the chart shows, it's still going to come.
That is the point of this podcast. Well, the first point was to show you and prove to you that it's coming. The next part is going to prepare you for when it does happen. What are you supposed to do?
Everybody, at least who listens to this channel, puts together a system and back tests it heavily. Now, the problem is when you start forward testing it, there's always going to be a natural drop-off for a number of reasons. One, you can't take every trade that you could back when you back tested, but also when you were back testing, emotions never came into play, and now they do. This is what you ultimately want, is to get results as close to your back testing as you can possibly get because it was really good. That's why you're going with this system in the first place. Some of these issues can be system related. Some of these issues can be non-system related.
People who do back testing, they have a treasure trove of data. And I know that we go and look at it for win-loss percentage, profit factor, but understand in that data, you also have a record of the slumps that have happened during your system. I want everyone to, the very first step, we gave you that chart that you can download, take a look at it, but even better, that's just, hey, these are just general numbers. Let's go back and take a look at your backtesting results. You should be able to go back and find the period of time that did the worst. Okay, there was about a month and a half long where I took 15 trades and only made money on 3. You should then say, okay, that is very highly likely to happen again, and it actually might be even a little bit worse than that. Then you can start to really prepare your mind for, this is coming. What do I do when this comes? How am I going to handle it? Because as we said earlier, at that moment, that is the most dangerous moment for a trader because they are no longer using logic and reason. Their brain activity is all in the wrong spots. So you have to be at least aware, self-aware, that there are going to be psychological issues. So the very first thing we want you to do, if you see a slump, if you have a period of time where you say, hey, over the last 3 weeks, I just haven't been able to get anything right, the first thing you need to do is stop. Now, that doesn't mean stop trading. What it means is you just need to okay, it's time for a deep analysis here. The first thing I want you to do is make sure that you aren't the reason for the slump. That is really a very common thing that I see, and it's something that I deal with our traders. And when I have a trader who's had very predictable results, doing really well for a long period of time, and then all of a sudden they're wild and erratic, I call them up, I get on the phone with them, and they know why I'm calling. They know. They want to start talking about trading. I said, hold on. Before we get into trading, is there anything going on in your personal life? And they always just pause, and they said, how did you know? I'm going through a really ugly divorce right now. Yeah, I know, because this isn't you. You're behaving different. This thing that's happening in your life is making it very difficult. I've talked to traders that are having health problems. I have traders that are having money problems. These are the things that can cause them to deviate from their system. So the very first thing that you need to do is you need to stop, really take a look at you and say, am I the problem? Are you staying out late, drinking too much? Are you not getting enough sleep? I mean, there's so many things that can sabotage this. Let's make sure that you aren't the problem.
And I want to take that one step further, Rob, and not just even external problems, but could these problems be internal as well? Could you have taken maybe 2 losses in a row, and now you have this mentality to where you're going to chase? And so you might start taking trades that your system really doesn't give you a clear green light on. but it was close and you really want to get that money back. And so you just start taking these little liberties here and there. Liberties, by the way, that did not happen when you were back testing. Sometimes those externals and internals can even combine, especially you said money problems, especially if there's people out there having money problems, then, all sorts of weird things like desperation and insecurity start to kick in to where like once you're actually sitting down and trading, a whole host of things can start entering the fray that once again, were not there when you were back testing. And those results, those great results that you got all excited about, are the results we're trying to get the closest to. Yet you're doing things that are pulling you further and further away from it.
And that taking liberties, I love that saying. You're taking liberties based on how you feel at the moment. That is something that we call a confirmation bias or even a recency bias, where you take things that have happened recently and all of a sudden you now change your mind on how to analyze data that you would have done a different thing 2 months ago. Because, hey, like you said, you took a couple losses in a row. Did that recency bias of what just happened to you cause you to act differently? You took 4 wins in a row. Did that recency bias cause you to say, hey, I'm going to double my position size this time because I'm hot? All these things are going to come into it. And another one is confirmation bias. Now, we're going to be doing an upcoming episode in the future on confirmation bias. And this is where who you are, the decisions that you've already made are going to crop up in your decisions, and you're going to give yourself the ability to take these liberties. For example, let's say that I'm very bearish on the dollar, and let's say I think the whole US dollar is ready to crash. I think that the Fed is doing a terrible job. I think the dollar is just the worst thing ever. All of a sudden, I get a signal on my system that says, hey, it's time to buy dollar. Go long dollar yen. That confirmation bias, I've already built up the story in my mind that dollar's bad. When I look at the data is telling me to buy dollar. The problem is I've already predetermined that dollar's bad and going lower. And it's going to be very difficult to take that trade, and you may take liberties and skip that trade. Basically, anything you're doing that is not just following your system robotically is a problem.
Let's kind of move on from there, because I think there's a lot of people out there that think, at least maybe to this point, say, hey, okay, I understand that. That could certainly hinder my trading, especially during losing streaks when all of these emotions are heightened and magnified. But, life's going pretty good. I'm in a good place. I'm happy. I don't think I have any biases. I kind of understand that I just need to, put blinders on and follow my chart. Yet I'm still getting these losing streaks, and I did not expect this to occur. Where do we go from here?
Well, great question. You've looked into yourself. You've given yourself a very honest checklist of self-awareness of, okay, my personal life is good. I'm not staying out all night drinking. I'm in a good place. Money's okay. To where you've basically said, I'm not the problem. Once you can confidently say that you aren't doing anything different, you're not taking liberties, you're not changing the system, then we need to move into step number 2. Now, step number 2 is we're going to have to analyze the system. There's been a lot of times where I talk with traders that spend a lot of time analyzing systems. They say it's all ready to go. We plug it in, we put it in live market situations, and then 2 months later, they come in and say, Rob, this isn't working, this is broken. When you have your system that you've spent all this time developing, there are different types of systems. Some are trend following systems. Some are something like a reversal system, or some are more like a scalping system. So look, every system is going to be different. However, every system is going to perform a little bit better and a little bit worse in certain market conditions. For example, we had a long period of really weak, low trends back in 2019. Do you remember that, Patrick?
I certainly do.
There's nothing wrong with your system. Your system's great. It still might be a little bit profitable, but the underlying market just doesn't match it. What is a trader supposed to do in that situation?
So there's a couple things. First off, from a purely psychological standpoint, we alluded to this a little bit earlier in this episode. If you backtest with an automated system, with automated software, this should be even easier. You take 6 losses in a row, go back and see, did my system ever take 6 losses in a row? It probably did. Odds are that it's almost certainly did. So just understand that's just something that happens. You're going to have to find a way to absorb it. It's not something that should be a big surprise to you. It's not something that should be devastating to you. It should be something, as we talked about before, that is expected. All right, so that's the first thing. Now, if you find yourself, as we often have in the last, not 2022 really, but the 4 years before that, in an environment that might not really be friendly to, let's just say, a trend trading system like we do on No Nonsense Forex. I've made videos on this before, said, look, this is not the way we want to do things, but if it's going to be this way, we all trade the daily chart at No Nonsense Forex. We abide by that religiously. However, in certain situations, if you need to drop down a time frame, take a look at the 4-hour, maybe even take a look at the 1-hour and see, is this performing better in this particular environment that looks like it's clearly going to be around for a while? Maybe that's the move. Then you have to do a whole other set of testing to see if that's true before you get started, but you still have an outlet. If the environment itself is legitimately causing these losing streaks, and make sure that's the case, then you can still adjust down if you have to.
This is a very complex thing because when you make this decision, and this is something I've struggled with for many, many years because, look, certain systems work better in certain markets. That's just a fact. And so when you know that, you say, well, why don't I just pull out the right system at the right time? That sounds wonderful. You don't know it's not the right system until you put your system out there and find out, oh, I've had a long period of underperformance. And the worst thing to do is throw it all away at that moment and change the system. However, when you think about it theoretically, hey, if you could match up a system, like when the markets are trending strongly, have a trend trading system, and then all of a sudden at major trend reversal points, have a reversal system that you use, that would be wonderful. And I've tried that. I've actually tried to implement using different systems at different times. Here's the problem.
I bet it failed.
It failed because the decision I made was more emotional than technical. And that's the problem. And another problem is with trends, these trends might last. And let's say that I am in a trend trading system and it's going sideways for months and months and months. And I finally say, oh, it's never going to work again. The nature of trends is that they change eventually. And so a lot of times you're forced into these changes when the market is just about to turn and go your way. This is a very, very complex question here. I don't have a great answer because I think anything you do is very likely to be more emotional than logical.
So I think a solution we can both agree on, however, is that you've tested this. Think about when you back tested your system. What was that environment like? Was it also rather slow? Was it erratic? Your system should be built to withstand most situations. We're only talking about very extreme situations here, like we saw in 2019, for example. Your system that you took so long to build and test should do you right long term, regardless of what's going on. So the answer, I think for most people, just about everybody really, is just to keep trading the system. It's eventually going to correct itself just like it did when you backtested. You just didn't see that occur when you backtested. All these things were going on. Your system is going through losing streaks, winning streaks, up markets, down markets, crazy markets, all of it. But you just weren't there for it. So you just have to know that you should be able to get the results you're looking for if you just keep going. One of my worst things I ever did, and the reason I'm so loud about it is because this was probably my biggest weakness, is after losing streaks, I would stop. And then as soon as I stopped, here comes an amazing trade that would have erased all the losses I just took. But I wasn't there for it because I thought it would be right to quit. Because in my dumb head, I actually thought, oh, I just took 5 losses in a row. That must be it. I think every trade after this is just going to be a loser, right? And it's going to suck me all the way down to zero. I don't want that to happen. So, it's such an irrational thought. But again, this is what happens when emotions are heightened. And when you have losing streaks, emotions are heightened. So you think these crazy things. I guess my biggest takeaway is 99% of the time, you should just keep going. Stopping is probably not going to be the move. And I think soon after you stop, you're going to really regret it, because I know I have.
Stopping is almost guaranteed to be an emotional reaction. So the real question about this, Patrick, is that we know these slumps are going to happen. They're guaranteed, statistically guaranteed. They're going to happen. And when they happen, they're going to put you under pressure, immense pressure, to do something different. But if you don't do something different, you may not survive the slump, because that's what this is about. It's so easy to trade when your trades are doing well, you're making money, you got a nice win-loss percentage, nice profit factor, everything's great. It's so easy. It's when the market puts you under this pressure where trading gets hard. These periods are all about survival. It's not about making money, it's surviving. How do you survive these slumps? How do you get through the desert to the oasis where you don't die of thirst on the way? You really have to be very, very aware of this risk. One of the things we do at Maverick, and I agree with you, Patrick, stopping is the wrong thing to do. However, we do have rules where you can cut position sizing. Now, position sizing is just the volume of your trades. You turn up position sizing, your results get louder. You turn down position sizing, your results get smaller. So we do have rules where if there is a situation where your system isn't producing good results, not because, again, first step, make sure you're not screwing it up. If you're doing everything right and you look at your system and you say, you know what, this is just not the right market condition for my system. It's a trend following system and the market just isn't trending at the moment. We say it is okay to cut your position size down, do a half position, and then you can ramp that back up, because it's about surviving. It's not about thriving. These periods when you're out in the desert, when nothing's going right, it's about how do you make it through the desert. And that's really what this whole episode is about, is get you through this desert. Because I'll tell you what, stopping is wrong. Now, unless in the first step, where you look at yourself, you realize you're doing the wrong stuff, stop. Stop trading immediately until you can get that figured out. If you've got personal issues that are causing you problems, stop trading. We do that with our traders. I say, hey, look, get through your divorce. Let's talk in a couple months. Let's just have you cool out for a bit. And when they come back, they say, that was the best thing you could have done for me, Rob. Thank you. What do you think about cutting that position sizing, Patrick?
I'm actually really glad you mentioned that, because that's something I didn't mention a little bit ago, but I did mention it in my dead markets video, is that apart from dropping down to a lower time frame, what I would rather you do first is cut the position sizing down. If there's less of a chance because of the market, and I just don't mean like what's going on in a week or two. I mean like this is just how it is now. We actually have tools that show you what kind of environment we're in. If those tools are telling you that it's really bad, then the chances of you winning have gone down. So as a result, you need to drop that position sizing, because you're right. If you're in a desert, you got to make it to the oasis. You got to keep going forward, but you can't die on the way. So how do you do that? And so that was the best situation I've come up with for myself and my traders, was to keep trading, but to scale back a little bit on the way you do it, out deviating from the system that long-term is going to get you where you need to go. So I do like the combination of those two things.
Yeah, and like you said, this is just about surviving this patch, because you've done the work, you've done the back testing, you've done all the right stuff. You just got to get through this slump. So let's go back through these to wrap this up. When you're in a slump, number one is to take a hard look at you. Are you the problem? Are you trading your opinion? Hey, I think dollar is going to go up. Well, that's your opinion. What if the chart's going down and you're only taking short dollar trades? You're going to really lose on that. If you're causing your system to fail, you need to stop trading until you fix that. Because if you keep doing that, your system's not even a system anymore. It's just you being emotional. Save your money, go back to the drawing board, and figure it out. If you can honestly say it's not you, then you need to look at your system and say, okay, I need to get through this period. Is this period of time conducive to my system? And if the answer is no, then you say, okay, I need to keep going. That was a great analogy, Patrick. You're in the desert. You got to keep moving forward. I'm going to keep going, but I'm going to do some things to make this period of time less dangerous to me. Cutting position size, but make it through that weak patch.
And then 3, If none of those situations are occurring, if everything's going just fine in your life and that's not getting your way, if the market itself isn't getting in your way, and you just happen to be taking a string of losses, then just keep going. It should correct itself over time. Allow this thing to correct itself over a long period of time, because that's exactly what happened on the back test. We're just going through that period now. It's natural. Rob showed you the chart. It's going to happen no matter what. So just allow it to happen and allow everything else to play itself out. If you've done the work and you stick to it, everything should be good in the end.
Keep swinging. You have to keep swinging. One last little bit I want to share with you before we let you go. I have a trader. He's awesome. He's very disciplined. He never screws it up himself. This guy is a machine. He runs a moving average on his account value. And whenever his moving average gets 10% or lower below his account value line, he starts to increase his position sizing. Now, what that means is his system has been doing worse than he is expected over a period of time. So he's probably in a slump. So what he actually does is he actually increases his position size during his bottom of his slumps. So when he comes back out of it, because like I said, this guy's a machine, he's not screwing it up, he comes out of it much quicker. He does the same thing on the reverse. When he gets too far above his account value line, then he actually starts to reduce his position size because he knows he's had better results than he statistically should have. So he starts cutting position size because he knows a slump is coming. That's just how numbers work. I'm not saying go out and do that, but I love the concept because that's someone who believes so much in their system that when they have a slump, most people are ready to quit. Most people are cutting position size. This guy, he increases it. I love it. It's a great way to think as a pro.
That is a gangster approach to everything, but I would tell everybody to not do that. So that's some really advanced stuff right there. Just keep it consistent, keep your 2% or whatever your position sizing is, and just fight through it. But yeah, there's a takeaway there. That just shows that things do correct themselves. The more losses you take, the more anomalous it is. So almost always right around the corner, that next big run. That's been my experience.
Quitting at the bottom is the worst thing you can do.
All right, so that will, I think we've covered everything, haven't we, Rob? Pretty much top to bottom, the issues, what might be causing it, and then ways to fix it.
Yeah, the points we want to get across, it's going to happen. Plan on it. When it happens, do a deep dive. Figure it all out. If it's all good, keep swinging. Keep swinging. You did all the work. You back tested it. You put the system together. Trust in the system. You did it. Keep swinging.
And on that note, we'll be wrapping up episode 8. If you like this episode, stay tuned for episode 9, where we talk about what happens when these losing streaks extend for much longer periods of time. That's a whole other mindset. That's a whole other problem, and it's a whole other solution, or is it? Stay tuned for episode 9. And thank you all for joining us here on the Trading Psychology Podcast. This is VP. Thanks for joining. Thank you, Rob.
Thank you, everybody.
We'll see you next week. This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, is Rob Reinhold.
Hello, everybody. This is Rob from Maverick Currencies. Nice to see you again. I've been trading since 1997 and have seen a whole bunch of changes in trading in the markets over that time.
And it is no surprise we are sponsored this week, as we are every week, by Maverick Currencies. And I don't know if you guys knew this. Some of you have talked about this in the comments a few times. Maverick has its own options trading division. Rob, tell people more about that.
I started in 1997, and I was actually one of the very first traders at Maverick Trading. I learned there was an actual office you could go into where they provided a computer and you could trade there. And it was called Maverick Trading. And it was such a great positive experience to be able to sit next to other people and to talk about trading. It definitely helped my progression as a trader. At the time, it was all equities. We just day traded equities. And then over the years, we all started to learn about other asset classes. And I really got into options. And in 2000, I got into options and really realized this is way better, because the thing I love about options is you can completely quantify your risk to the penny. There's literally no way you can lose more than that. There's always slippage in Forex, and there's slippage in stock and options, and there's gaps overnight. But the options, you can completely quantify risk. And for me, I had a hard time in the beginning of honoring my stops. And every now and then I would move them and it would cost me. With options, I would just set it at the amount I was willing to lose, and it took care of itself. If you are interested in options trading, or you're already options trading and you want to take a look at trading prop in options trading, maveriktrading.com will be the website to go to.
Perfect. And those of you who are already with Maverick, you understand the amount of care and time they spend on you just in the crypto department or the Forex department. Imagine that same level with options trading. Give it a try if you're interested. But we are in episode 9 today, and we foreshadowed this last week in a very not so subtle way, because last week we talked about dealing with losing streaks and slumps. Those are typically temporary and sporadic. Sometimes losses extend even further. You have a bad week, bad month, or even a bad stretch of 3 months. And that's a whole different psychological mountain to overcome. Because then, you absolutely do feel like a failure. You do feel like you may not make it. You lose trust in your system. And this is something we really need to talk about, because if it hasn't affected you yet, I promise you it's going to. So, Rob, why don't you open us up here?
Whenever you have a block of statistics, let's say that I had a trader that did 100 trades, and the first 40 trades were all positive, and the last 40 trades were all positive. Now that is a phenomenal 80% win-loss ratio. But what if I took the block in the middle and I analyzed that? If I just showed you those results, you'd say, oh my gosh, that's terrible. During that block, that trader may have felt absolutely terrible. And it really is all about the time frame that you measure things over. And that's really what I want to talk about in this episode, is the time frame that you look at your actual results. Because whatever time frame you look at, it might be good or bad compared to another time frame that you could look at. It really helps to be looking at the correct time frames when you're looking at your trading results. In my first years of 1997, it would take me 30 minutes to drive down to the Maverick Trading office, and I would sit there and make trades. My mood on the drive home was completely dependent on my profit and loss for the day. Now, if I had a great day, boy, that car ride home, I got the music cranked, everything's great, I'm feeling like on top of the world. If it was a bad day in P&L, I would drive home either in silence or listening to like some goth or some Smashing Pumpkins or some sort of emo music to feel really sad. But as you can see here, every day it was a different roller coaster. After a while, I was exhausted, and I just remember thinking, okay, look, I've had bad days on Tuesday before, and by the end of the week, everything was fine. So don't overreact. Don't look at things on a day. That's stupid. You should look at them by the week. So I actually started to look a little bit longer, and now my drive home on Friday was where I either had the music blasting, having a party, I would come home to my wife and I'd say dumb, crazy stuff like, let's go shopping. And then the next week, I would come home and she's like ready to go shopping. I'm like, no, we can't even go out for dinner tonight. It's been a bad week. As you can see here, the emotional toll that places on you is really tough as a trader, and it was really tough for me in my first couple of years.
It's so funny you say that, Rob, because this didn't have anything to do with trading, because I didn't have to drive anywhere. Your money is very inconsistent day to day and week to week in restaurants, and that's what I did for a very long time. I felt the same way early on in my career. Every day was like a win or lose. There's never anything in between. And it's even funnier that this happens in restaurants, because you can't take a negative in restaurants like you can in trading. If I didn't make what I thought I should have made, then that ruined my day too. And you're right, that changed the music I listened to, that changed what I did when I got home. If I was in a relationship, it changed that whole dynamic once I got home. It wasn't until later till I realized, okay, you got to stop looking at this day to day, because that's going to drive you crazy. That's when I really started to open it up and look more week to week and even month to month. And I tried to share that with my coworkers, but restaurant workers are the most manic depressive people on earth. And no matter how much sense it made, it just never mattered. They would still find reasons to complain and try to bring the rest of us down. I've gone through that myself. The only reason why I don't have gray hair all over the place right now is because I finally made that switch and stopped looking at things on a day-to-day basis and even on a week-to-week basis too, because I've said on my own podcast before when I had my old one of the things that really made me not become a huge spender later in life was just how inconsistent everything is in my industry, just like it was in yours back then. You might have a great week, but you're afraid to spend that money because next week could be an actual zero. There's just nothing in town. You don't get called in for shifts or you get called off, whatever the case is. I understand. And the only way to remedy that is to look at things on a much larger scale.
In our last episode, we talked about dealing with slumps, and we talked about how valuable your back testing is. Patrick, will you go through just how people can look through their back testing and get a better perspective on what their actual mood is going to be during those moments?
We talked last week about how if you have a group of maybe 3 losses in a row, 4, 5, even 6, go back to when you back tested your entire system and see if that ever happened during the 3, 4, 5 years that you actually went and back tested. I guarantee you it has. It probably has multiple times. The odds are just that it did. But your back testing has no emotion, so it just stayed the course. You have the results right in front of you. You know how it did at the end of the day. And chances are those results are very good or you wouldn't be using it right now. The same goes for this. If you want something actionable here, instead of just looking for a series of losses, take any monthly period and see how many losing months you had. I guarantee you it's a lot. It's probably more than you think. And if you want to take it even further, when we talk about maybe you just had a bad quarter, take any random 3-month block and look and see how it did. It's going to win, but there's going to be times where it lost too. Your system experienced the same thing you're experiencing right now. The difference is your system didn't care. It was dead inside, like we've talked about on the podcast, and it just kept going. You can do this with longer time frames too.
And I think while you're going back through this exercise, I think a really healthy thing to do would be to think about how you would feel at that moment. If you find a block where you were really terrible for 6 weeks on your results, I want you to sit there and think about, oh my gosh, how will I feel? How do you think I would have felt at this point? Because what happens is when you put yourself in the situation of how you're going to feel at that moment, it's going to actually help you for when you actually get to that moment. You're going to remember this exercise you did and say, oh yeah, you know what? I was prepared to feel this way. I was prepared to feel dejected and prepared to feel like I might want to quit. But I remember in my back testing, I didn't quit and it actually got better from here. I think it's a very valuable thing to not only look at the data, but actually think about and really contemplate how you would feel at that moment. That's going to be very powerful to help you out when it actually happens.
I love that idea too. Like you already know it's going to happen. So prep yourself for it to happen. And then when it does happen, it won't be so shocking because it was pretty much supposed to happen. I think if you go into every month and every quarter saying, hey, there's a decent chance I'm going to take an L for this entire month, for this entire quarter. If you can not let that thought affect you and just trade the way you trade anyway, then when good results come, it's actually kind of nice. It's really surprising. And then set yourself up for losses again in the next month or the next quarter. Prep your mind and say, okay, I don't think it's going to happen, but there is a chance that I could take an absolute L here. So if it happens, it happens. I'll dust myself off. I'll go to the next one. The shock comes is when it surprises you. The power of positive thinking is one thing. I get that. But if you expect to do really well and then you don't, I think that right there is when emotions can take over because it was totally unexpected. You had a dream, the dream died, and you're like, okay, now what do I do? That's the situation you really want to avoid. I'm not saying go into everything you do in life expecting to fail. Go into everything you do in trading and understand that there is a possibility that this might not be your month, that this might not be your spring. If you can at least understand that, then it won't hurt so much when it actually happens because as your back testing has shown you, it's going to happen.
If there's anything I could remove from my trader screens, and I wish I had this ability, I wish I could completely erase profit and loss. And frankly, I wish I could also hide your account balance. And I've actually said this to a lot of traders, and I said to them, imagine that if I told you I'm going to give you this account, you have no idea how much money is in it, and you have no idea what the P&L is. And I am going to pay you $100,000 for the year if you've averaged 200 pips at the end of every month. Now, people look at that and say, 200 pips, well, I could do that. Well, that's actually fairly difficult to do. But imagine if you had no idea of the P&L, you had no idea of the account value. Would you trade differently? And the answer is yes, you would. If you are simply being paid for the amount of pips you generate, all of a sudden, that P&L is meaningless. That P&L isn't going to mean anything to you. It's meaningless. It's not going to affect you in any way. All you're looking at is pip count. Stop looking at money. Stop looking at P&L and start looking at other things. What do you think, Patrick?
No, I like that, because if you can take actual dollars and cents out of the equation, I think that does a lot, because when we see our account go down $300, we think to ourselves, wow, that's my entire bills for the week that I can't pay anymore. That's a vacation I'd planned on taking, but now I might not be able to do it because I'm 300 in the hole. It completely eliminates that end of the psychological, what's the word I'm looking for? Something that can take you down.
Pitfalls?
You guys get what I'm saying? Pitfalls, yeah. Any way you can eliminate those things, the better. I'm not sure how you would do that on a screen, but if you can program it or you can find a way to take that off, I do like that idea.
It's very easy to just delete a column. In most softwares, your P&L is simply a column. Do yourself a favor and erase that column. It's a very simple right-click, delete, and it's gone. Don't have P&L up in front of your face. Yes, you're going to have to check your account balance, but I would highly recommend you don't do it as much as you possibly can. Because then all of a sudden, you're trading for pips. You're trading for something else. The dollars don't matter. You're just trying to get it right. And now the focus is on a totally different mindset of what you're trying to accomplish. One of the things we shared in an earlier episode is the trading in blocks theory. Instead of looking at every trade as this binary thing of win or loss, no, you don't even take a look at win or loss until you get to a block of 20 trades. Once you get to 20 trades, then you stop and you say, what's my win-loss? What's my profit factor? What are my numbers? All of a sudden, you see how that takes all the pressure away from the individual trade, and it gives you this bigger perspective of what success truly is.
Now, that's a great way to get rid of that particular pitfall. But at the end of the day, we're still going to be positive or we're still going to be negative, and we're still going to be positive or negative over a longer period of time. Assuming we're negative for, let's take it even longer, let's just go maybe a month or a full quarter, a series of 3 months. What are some of the actionable things we can give our traders to deal with situations like that, where you just feel like a failure and you feel like you're starting, further back than you should? All this, long-term dread comes in. Maybe this isn't really for me. Maybe my system's not that good. How can we get rid of things like that? Because it's all nonsense at the end of the day.
Well, episode 8 basically covered that. Basically covered like how to make sure it's not you, how to make sure that the market environment is conducive to your system. And then the third thing we talked about was keep swinging, but maybe cut position size or do things a little different. There's really not much that you and I can say, Patrick. We can pat people on the back and we can tell people it's no big deal. It'll get better. That doesn't really help. You just have to believe in the work that you've put in, trust in your system. Make sure you're not the problem. Make sure that the market is the right environment for your system. After that, you really just have to put your head down and trust that all the work you put in is going to pay off. The first thing you need to do is shift your paradigm on what success is. Now, a lot of people always think it's about the money. And look, I know it's about the money. But the money brings with it all sorts of psychological problems. So if you can frame success differently, all of a sudden, you're going to have a lot less pressures on you. One of the things we do at Maverick is we say, if you have a positive win-loss and a positive profit factor by the end of the month, we'll bump you up. We'll bump you up to more capital. What happens is that trader is no longer worried about the money. The trader's worried about their trading numbers. When you're worried about your trading numbers more than the money, you do things right and you don't get all the psychological pitfalls. Change your goals. This is not about money. The money is simply a byproduct of your system. Another thing we talk about is success is, did you correctly implement your system religiously every single time for the entire month? If the answer is yes, that's a win. You did a great job. You may not have made money, but that was perfect trading.
And I think that's really great too, especially if it's your first probably 2 years in trading, because if you have journaled properly and you have made comments where comments need to be, you're going to see that you rarely have a clean month of trading to where you didn't make any mistakes at all in terms of following your system. So even having a goal to where, okay, I'm going to pare my mistakes down by half, or I'm going to take it all the way down to zero. That's a giant step. I don't know if you realize it or not, but just simply having that as a goal puts you so far ahead of most people that stumble and bumble over systems or don't even follow a system. If you have a good system and you can follow it cleanly without making any mistakes, regardless if there were wins or losses or how many of each there were, that is huge. I don't think you understand how rarefied air that is. So even aiming for something like that, even when real money's on the line, especially when real money's on the line, that's a great goal too. Reframing that level of success, whatever it is, to me, I think that's bigger than money. I think it's a lot bigger than money. What do you think?
Absolutely. How you frame success is exactly how you're going to react to the results. If you say that I'm a successful trader because I implemented my system perfectly, you're going to feel great at the end of the month. If you're saying I was supposed to be up 15% for the month and I'm not, you're going to feel like a failure. They were the same results, but one was a success and one was a failure. Now, another thing I did early in my career, I started out day trading equities. That's what I started out with. And my first year and a half, that's pretty much what I did. And then I started to learn about options trading. And I said, hey, let me dabble over here. And I started to learn some other strategies that were very different than day trading equities. Day trading equities was this intraday trading. You were in, you were out. That was your P&L. But then I got into options where you were making trades that would last a week, 2 weeks, 3 weeks. It was much, much slower, but it was also much more consistent. And then I started to get into some longer term trading, stuff that lasted a couple of months to maybe 6 months. And you can see that there were periods of time where my day trading was doing terribly, but my options trading was doing well and my longer term stuff was doing well. And all of a sudden I didn't feel the pressure anymore because I said, hey, these other two are performing well. I don't need to freak out. I just need to follow my system. What do you think about trading other markets, Patrick?
Yeah, I mean, I'm glad you brought that up. And for one, I can concur with you. When I made the switch personally, and like I said, this isn't for everybody, from trading intraday to the daily chart, so many psychological, bugaboos just completely fell off. And that was such a big move for me. And I'm sure a lot of people who listen to this channel as well. But trading other markets, gosh, if I haven't said this 100 times on my own channel, I do get comments from people saying, hey, I've had a losing 3 months, 6 months, an entire losing year. And I'm like, in what? And it's always one market. It's Forex, it's crypto, it's indices. It's because that's all they trade. And I think people are under this weird misconception that I need to get really good at this one thing first before I transition somewhere else. Well, no, if you understand technical analysis, it works across the board, maybe with just a couple cosmetic changes here and there. If you need help, on my channel alone, I show you how to trade Forex and metals and oil and indices and crypto. And it's the little subtle differences between the two. So there is no excuse for not doing this because there are going to be times, and we've spoken about this before, how the market just doesn't allow you to do well. But if you're trading other things, something is always moving if you're a trend trader, for example. So if you feel like a failure in Forex, for example, but you've been a success in metals, then you don't feel so bad because you always know you have something you can fall back on. And that's a bit of a transition into something we're going to talk about down the line. If you put all of your eggs in one trading basket, well, of course, it's going to affect you when it doesn't go well. But if you're doing other things and those other things are showing a bit of success, it totally offsets the losses, even if those losses are higher. Can't recommend that enough. What are your thoughts on that?
That is a natural evolution of a trader. Everyone gets into one asset class and they think, oh, this is it. This is what I'm going to do. And then over time, you start to realize this asset class can be a little unpredictable at certain times. And by adding on different asset classes, all of a sudden, you have this whole world. I've been trading now for over 25 years. I trade everything. Anything that's a ticker symbol that has a price that moves up and down, I trade. I don't care what markets I trade. So in 2018 and 19, when the Forex market was not all that great. Guess what? I traded very little Forex and I traded other markets, and it was really great. And then when Forex came back, it was great to pop back into Forex. It didn't matter. I was basically like a moth to flame. Wherever the activity was, that's where I went. And I had no allegiance to one or the other because I understood all the markets. I could have never done that my first couple of years because I just didn't have the experience. But the natural evolution of a trader is that you are going to start to add other markets. You're going to start to add other time frames. You're going to start to add other strategies. Options trading is great in the fact that we do lots of theta strategies, meaning time decay, where they're not directional. You're just waiting for time to bleed out. That is totally different than the Forex market. And you could see that while the Forex market maybe is dead and the equity markets aren't really going anywhere, that strategy is going to make a lot of money while you're waiting for things to change. Highly recommend to learn other markets. Give yourself some time. I didn't get there my first year. It took about a decade until I was really trading multiple markets.
And you said something that I want to touch on towards the end here. That's experience. No matter how great the market treats you, let's think of like crypto in 2020 or 2019, something that like if you were a trader, it would have been really hard not to make money if you had any discipline. That first year, I would not expect you to be a winning trader. You know why? It's because of experience. If you go back and look at your very first year in a journal and look at how many of those trades were losers because of something you did that you were not supposed to do. And on our channel, we heavily focus on eliminating losers because they really factor in big to the bottom line. And you had, let's just say you had a large chunk of trades there that probably shouldn't have even happened, or trades you passed up on because of your lack of experience or your timidness or whatever the case is, that should not have happened. And how much did those factor into your bottom line? Maybe that's the reason why you're losing too. But look, it's expected. So all of you first-year traders out there, all of you traders that are in your first 2 years, I would expect you to lose mainly because you don't have any experience down yet. And I can't even express how extreme that is until you get to the 4 or 5 year mark and you're able to look back at those first two. And for all of you who are 4 or 5 years in, you know exactly what I'm talking about. All of those dumb mistakes that shouldn't have been there in year 1 or 2 are probably leading to these bad months, these bad quarters, or at least some of them. So remember that too. It's going to get better. You just have to stay the course, 1, and 2, recognize those mistakes and fix them. Let's not rule that out.
Every trader gets to a point where they are good enough to make money, but there's 1 out of 10 trades that they let go against them that ruin all of the numbers. That is a point where everyone gets to, and that's usually around year 1 to 2. For a lot of you, you don't need to learn anymore. You've already learned enough. What you do need to learn is how to eliminate that 1 trade out of your 10 that you just screw up. That's the toughest part, and that's where this entire podcast comes into play, the trading psychology. It is very easy to learn what I call the X's and O's of trading. It's not hard to learn a chart. It's not hard to learn what a breakout is. It's not hard to learn Elliott wave theory. Do you know what's hard? It's when you've had 3 losers in a row and your position is approaching your stop and you want to move it so bad. That's hard. There's no books to teach you how to do with that.
Okay, so without burying the lead, Rob, should we tell them about another way to make this all not hurt so bad?
We talked about how important it is to have other markets. And really, the other markets are there to bring in potential income while your main strategy is not doing so well. Well, let's talk about other things we can do to bring in money because it is so much easier. Imagine if you had $1 million in the bank. Well, $1 million is actually not that much anymore. Imagine you had $100 million in the bank. Would you treat your current trades that you're in right now differently? And the answer is yes, because you have no pressure. There's no pressure there. Having these other streams will absolutely help to take the pressure off you.
And by streams, he doesn't just mean trading other markets. He means other streams, which is a perfect segue into episode 10, which, as you know, is going to be next week's episode. So stay tuned for that. We'll go ahead and wrap this one up. Rob, is there anything you wanted to say on that note now that we're towards the end here, or should we just go ahead and wait for episode 10?
I just want to remind everyone, reframe what success is. Reframe it from money, take away P&L, and reframe it in a different way. I promise you, you will feel better about what you're doing than if you take a look at P&L.
I think that's perfect. If you take money out of the equation, or if you just equate getting better at what you're doing with success, so much of this goes away overnight. I totally agree. For episode 9, thank you for joining us. This is VP. I will see you next week.
Goodbye, everybody. That'll do.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me every week is Rob Reinhold.
Hey, everybody. This is Rob from Maverick Currencies and Maverick Trading. You know me by now, so that's all I'm going to say.
But what they don't know is you have a little promotion going on over there just for our listeners over at Maverick Currencies. Talk about it.
Well, for your listeners, we do have a promotion here. We've had a couple questions on what we do inside of Maverick Currencies. So we want to offer everyone a 2-week trial membership to the website. Inside of our website is all of our training videos. We don't release a lot of these out to the public. We keep them all proprietary inside of our firm. We want to open up the door a little and let people come in and peek for it. The way it's set up is we have instructions with building a trading plan, and then you do your trading plan development, which means that you practice that, and then you take a test. So every single thing you're doing is going through learning about it, developing your trading plan about it, writing it out, what you're going to do, you practice it, and then you take a test. Now at that point, you know that you are at least proficient enough to go on to the next level. So come on to the website, take some of the tests, see how you do. It's just a really good experience to get a little bit better idea of what we do internally.
Now for episode 10, we alluded to this towards the end of episode 9. It's not something that has like a real direct effect on people's trading psychology, but it's something that just makes everybody feel a lot more secure and just a lot better with the ups and downs of whatever it is they're doing, whether you have a job like waiting tables or whether you're trading, which is something I've experienced, on both sides. If you have other things going on, even if those things are successful or if they aren't, the whole idea of having those fallbacks really, really does wonders for your overall well-being going forward and your trading results too, doesn't it, Rob?
Yes, this episode actually has nothing to do about trading, but it has everything to do about being successful at trading. One of my favorite discussions to have with our traders is whenever we have a trader that has been trading part-time, like they've had a job or had a business or some other thing, and they let me know that, Rob, I'm quitting all that and I'm going to be dedicating full time to my trading. I always jump on the phone with them and have the same conversation. And the first thing I say is, listen, you don't want to do that. Now that always shocks them. And actually, they don't like to hear that because this was the moment. The reason they got into trading was to get to the point where they could quit their job, where they're making enough money to where they could do other things. And I tell them, look, I know that sounds good in theory. Problem is, you don't make more money in trading because you worked more hours at it. That's not how it works. And if you go from working a full-time job where you have 8 hours a day where you're actually doing stuff and producing, the worst thing you could do is then sit down in front of a computer and do nothing for 8 hours because your signals didn't trigger. And what's going to happen, you might be able to sit through it for a day, maybe 2 days, but on that third day, you're going to look down, you're in your sweatpants, and you're going to say to yourself, I got to do something. And you're going to take a trade you shouldn't. All because you need to justify to yourself that you are actually still working. So I tell everyone, I know you think it's going to be easier to trade when you don't have all these other things. But what I'm telling you is it's going to be harder to trade because you're going to be fabricating reasons to click a button to justify you sitting in front of a system. The worst thing you can do is quit everything and sit in front of your system. You have to do other things. And I tell them that, look, I know you want to quit your job, but do you think they'll keep you on as a consultant? Well, yeah, they probably would. Could you work there for 10 hours a week? Yeah, I probably could. Great. Do that because it's going to give you stuff to do, and it's also going to give you income that you can count on.
And that's the biggest part too. I mean, let's not forget, probably the biggest psychological hurdle of them all, going from having that safety net of consistent income to not having it at all. Do you really think that's not going to affect you?
There's no way you can't.
Exactly. So what we're going to talk about today is maybe ways you can take the job you have and maybe transition out of it a bit more slowly, a bit more responsibly, how having other streams of income can actually make that happen and make this transition nice and gentle, so much to the point to where it doesn't even really affect you, and also to where you always, no matter what, have some type of income stream there, because as we all know, trading, no matter how good you are at it, is remarkably inconsistent. Dealing with all the psychological stuff we've talked about in the last two episodes can be either extremely lessened or completely go away altogether if your bank account is still okay no matter what happens.
Patrick, I want to share just the first few years of my trading life just to let other people know what to expect and what people go through. I've been doing this now for over 25 years, and I've built up a nice nest egg. I built up nice retirement. I've built up everything very nice. But it wasn't like that in the beginning. When my wife was 7 months pregnant, I actually came home and told her that I wanted to be a professional stock trader and that I was quitting everything and dedicating myself to that. What do you think she thought about that, Patrick?
I'm sure she loved it.
You know what? She actually did. My wife is awesome because she said, "Great. I believe you. I trust you." And she knew that if I failed, I would simply just work 3 jobs to make ends meet. We wouldn't have starved to death. I was the kind of person that I would have absolutely made it good work. But she got behind me and trusted me. And that first year was great, except for the times it wasn't great. And all of a sudden, I started to look at our finances and say, oh boy, I just took 5K out of our account to pay off, mortgage bills, all these things, and I didn't make any money this month. And all of a sudden I started looking around saying, okay, the math doesn't make sense. So I started doing other things. And some of the other things I started to do is I would take temporary jobs. If anyone had a weekend job that I could make a little money, I took that in the lean months. I also bought houses, fixed them up, and sold them. So I always had a project going on. And sometimes that project would save me when my trading wasn't doing so good because I'd flip that house, I'd sell it and get a big chunk of money in. And then all of a sudden the pressure was off for my trading again. I had to do other things for the first couple years in order to make the income all even out, because the income is really inconsistent, especially in those first years, and especially if you are undercapitalized. You need 6 figures minimum to make even a dent in what it would cost someone to live. You need a little bit more than that to really make a lot of money at this. So the reality of trading is, in the beginning, you have to have other income streams or you won't make it. This isn't something you can option for. You have to. Unless your family's super wealthy and they drop $1 million in your bank account, you have to take other jobs that have other income to smooth out the income stream coming in. Patrick, did you have to do that?
Oh, for sure. Yeah. And my journey, I guess, is in 2 parts, really. I would say that first part, for context, you guys all know I started writing about 2009. I had my waitering job. I was approaching, I was into my 30s, and I realized I was like, holy crap. I'm not good at anything else except for waiting tables. I have no other credentials. Like I'm really, unless I want to start all over again, which, I obviously didn't want to do, I got to figure something else out. Then I discovered trading. I also knew too that even if I made 20% year over year, 20% of my bank account wasn't going to cut it. I was realistic about it. I was like, okay, I need to trade for a company. Believe it or not, I don't know if I ever told you this, but I did apply for a really kind of fly-by-night prop firm back in 2012 when I barely even had like a realistic system to put together. But, you want to get out of the industry so bad, you'll do anything. And I failed, and it was horrible because I was like, man, the Forex to me was my one shot. That's my big mistake. It was my one shot. It's not your one shot, but I thought it was my one shot to really get out of this industry and have a happy life as a professional trader. Once I got that nonsense out of my head, and I joined up with you guys, you're not lighting the world on fire your first year. You don't get enough money to do that. So I knew that I was going to have to make other streams of income, because this is right about when my restaurant career started getting very inconsistent. Like instead of having shifts 5 days a week, it would be 5 sometimes, then maybe 2, maybe 3, maybe 0. So I was like, shoot, I had businesses in the past, they failed, but I was like, I got to start doing them again. So not only did I take another waitering job and a banquet job, just to make sure I would always stay afloat, I started 3 other businesses in that time. And it did 2 things. One, it did keep me afloat when everything was inconsistent. I was just getting my feet wet in the world of professional trading. And two, if I was having a rough go at trading, or if I was having a rough go at my main waitering job, it didn't feel so bad anymore because that wasn't all I had. I had this other thing I can fall back on. I can fall back on my other waitering job or my banquet job. Or, one of my businesses was actually starting to generate some income. That's a really good feeling. I no longer felt stuck like I did in the early part of the 2010s, to where it was either this or nothing. I think that's a terrible way to go. I think the degree of difficulty from a psychological standpoint that you're going to have if you have that mentality and you don't have any other ways out is always going to be way higher than it needs to. And so I can't advocate this method enough. I mean, as of right now, I have probably a dozen different streams of income, and I'm very grateful for them because they don't always pay out. I don't see any downside to doing this.
So while this episode is not about trading, it is such an important episode. We really want to lay the groundwork of the reality of the path of becoming a trader. And this idea that you're going to only trade, that's going to be the only thing you do, you click buttons and then you're sitting on a beach drinking margaritas for the rest of your time, that's bullshit. That's not how it works. Now look, maybe there's one person out there that's their life, but for the rest of us, we're going to be building wealth across our whole life. And trading is one of the things we do to build wealth, but it's not going to be the only thing because it's so healthy for you to, number one, have other income coming in, but number two, have other things to obsess about. I shared with you a little bit about me in the overtrading episode we had. I believe that was episode 5, where all I wanted to do was trade. That's it. And I obsessed over it and how devastatingly bad that was for me. Other things that you can obsess over, they will take mental energy that you would have just wasted staring at a screen and moved it into productive things that actually help your overall wealth grow. Let's spend just a little bit of time here talking about other things you can do to bring in money that isn't going to hurt your trading. Because look, there are going to be some jobs that hurt your trading. For example, if you want to be an anesthesiologist and you also want to trade the US session, sorry, you can't. You just can't. You're going to have to find something else. But there's a whole lot of other things out there that you can do that will work very well within trading. Patrick, what are some things that you have on your list?
So let me just add to your point really quick. If you're going to be something like an anesthesiologist, you may not even have time to trade the daily chart because those hours are long. So you may actually have to pick one or the other there. But I don't think this should be a tough transition for most of you listening right now because traders are doers, all right? All the lazy people I know would never take to something like trading to where you actually have to take time to build a system and test and then actually put it into motion. Like, we're pretty much a minority. So wanting to do more should not be difficult for you, even if it's something that you may have never done before. You never know until you try. So yeah, we have a list of different types of things you could do right now, actually, to up your income streams. Again, you would be amazed the positive effect it has on your overall psychology in ways we can't even really explain here. The first one, let's be glad we live in the times we do where this opportunity is now so available. That is to take a second job or to go down part-time to a full-time job and then even add another part-time job to it, giving you 2 different streams of income. Rob, what are your thoughts on this?
I agree that it's a golden age for working remotely. My son, who is very young, he's learning how to trade. He's in his early 20s. He's not going to make any real money at trading, but he's got a job. Now, he actually just sits on his laptop and works for most of the day, and he can absolutely spend time learning about some trading concepts, read some things. The whole time he's actually making enough money to pay all of his bills. There's so many things out there that you could do. Work from home is absolutely exploding.
You guys know I'm a nomad. Pretty much everybody I meet works from home in some capacity, whether they're a business owner or whether they actually have a remote job. And a lot of these guys have, and I'm doing big air quotes here, 40-hour-a-week remote jobs, where a lot of that time is spent sometimes doing another job. They're burning the candle at both ends. And they probably put in maybe a legitimate, 35, 40 hours of work, but they get 2 incomes. That is kind of the beauty of this right now. Even if you have to stay in front of a screen for 8 hours, you can still be doing other things. And the people I know are hustlers, and they want that double income, because it's there now. It wasn't always there before, but it is now. And if your job is taking up too much of your time, just know there are so many remote jobs out there. I actually saw a tweet, Rob, that said how to get a remote job. Look up remote jobs on Google, find 100 of them, apply to all 100, look at the 20 that actually give you the time of day, pick your one or two favorites, and go from there. It's not hard. It's so much, people make it so much more daunting than it actually needs to be. But this chance is available in spades right now. And I'm not sure how long it's going to last. If you have ever thought about doing this and adding that second income stream, I think now's the time.
And one of the things to really think about is getting a job or a contracting gig in a related field of trading. I have a lot of traders that they actually will work on a help desk for like TD Ameritrade or E-Trade, or they'll be in some sort of aspect of the financial world. And while the trading and other things in this world are vastly different, they are similar enough to where they can take a lot of the things they've learned about trading and apply it to their current position, or vice versa. Take things that they've learned and apply it to trading. I always advise people to take a look at things in the trading industry or in the financial services industry that interest you, that might actually help you out in your trading.
I love that so much, because I talked about brick and mortar jobs on my videos too. But I said, hey, the downside is the salaries usually aren't great, and you actually have to relocate and go there every single day. And that's not something most people want to do. Some of my traders did it anyway. But working remotely on a help desk or something like that, you're right. That's something that may not have been available back then, or else they outsource it to another country. A lot of those jobs are domestic now. That's a great point. That allows you to kind of have your cake and eat it too.
And staying upon this same theme, why don't you start a business in the trading industry? Now, look, if you're a brand new trader, I'm sorry, you don't have a ton of marketability to offer. But if you've been in this business for any number of years, you have skills that other people are looking for. If you know how to program and program trading systems specifically, there is a market for you. Go out there, get clients, they'll tell you what they want to code. That is going to help you and help them. It's going to bring them some money. You're going to learn a whole bunch of new stuff that might actually help you. You're in the related field. It's helping you out with your trading and helping you out with your bills. Think about trading businesses you can start. If you've been doing it for a while, there's always a need for coaching. There's always a need for people that can do all aspects of this business. Think in terms of other jobs or other business opportunities in the trading space.
I can second this too. Do you guys have any idea how many offers I have had for me to personally tutor somebody on how to trade the system that I teach? If it's coming from somebody else, maybe you can't fetch the same price that maybe I could, but they just want somebody there to hold their hand and help them through. This is out there. And this can go for just regular price action trading too, which we don't even do. As a matter of fact, I would say you would have a better chance teaching that, because that's what most people are trading. It just comes down to you putting yourself out there and offering these services. And with social media right now, there are so many ways to do that. If you just put yourself on maybe 3 or 4 different social media platforms, show you actually know what you're talking about, and I guarantee most of you do, you all of a sudden put yourself in a very high tier of expertise just by default. Then you start offering those services. Rob, I know so many people just that do nothing but stay on Twitter and offer services, or they take people to something like Substack and say, hey, you guys already know what I know, but if you want to know the real good stuff, go to my Substack. And so if you guys don't know, Substack's like a blog that you can charge for. I follow 2 Substacks. One is $250 a year. One of them is $130 a year. And I know both these people pretty much make their entire income off these Substacks.
Patreon is another great website.
Yeah, Patreon's great too if you just want to rely on donations. But if you want to rely on steady money, and I think you can do this with Patreon too, actually. Like I said, just with Substack alone, $130 a year, which goes down to, just over $10 a month. It's nothing at the end of the day. If you have taken a few months to establish your expertise on a few different social media platforms, you want to bring people to a Substack. Now, you're probably not going to get a whole lot of business because you haven't really been doing this for a long time. But if you could get 2 people a month, let's say 3 times $130, $390 a month. How much of a burden in your life with that alone ease. And all you had to do was spend 20 minutes blogging maybe once or twice a week. Things like that. And if you just keep at it, these numbers just keep going up and up. The bigger audience you reach, the more experience you have, the more you start bringing to the table. This is how these things start. A lot of you out there are experts on something. And if you're not, you can become one fairly quickly. Just little things like this. I could go on, Rob, about multiple streams of income. But when it comes to starting a new business, it's not like it was 15 years ago, to where you have to take out a small business loan and buy a space in a mini mall and set up shop there and buy inventory and do all that. It's so easy right now. Every business I have started has been so cheap to where if I failed, I lost almost nothing. But it had a really good upside. Now, I've failed on a lot of those businesses, but so what? I didn't fail at all of them. And now I have these extra streams of income completely independent of everything I do with trading, investing, and broadcasting.
I have a saying that I've said to my kids for years. You'll only do your best work if you're doing something you love. You love trading. You wouldn't be here if you didn't love trading. Why don't you make other areas of trading your business? That's why we've really been talking about find other opportunities in trading. And look, you're going to have other interests as well. Use that passion to turn into a business. My nephew, who is a literal rocket scientist, he's a literal rocket scientist. He loves D&D. Hey, I love D&D too, actually. He started making those little characters. He got into 3D printing, and he started printing these 3D little miniatures for his D&D games, and people said, hey, I want to buy some. And he's actually turned that into a business. And he loves it. He absolutely loves doing it. It never feels like work to him at all. Take a look at your life. Take a look at your hobbies. What are you passionate about? Figure out a way to make some money off of it. If you're one of the rare people that I talk to that say, Rob, I really don't want to work. I really don't want to start a business. I've got enough money. Then I always tell them, put your time and effort into your hobbies. You cannot sit in front of a screen all day. It's the worst thing you could possibly do. You have to have hobbies. Doing what you love will always yield you the best results.
And on that note too, if what you love doing is sitting in front of the screen and watching movies or music videos or whatever the case is, and you have a little bit of charisma to you and you don't mind being on screen, most of my time spent on YouTube that isn't research involved is watching reaction videos. There's even a market for that. So like Rob said, take what you're passionate in now, and I'll even do you one better. There might be things that you would be passionate on if you knew more about it. Like this is just a random example. I actually wish I had somebody I could follow, and I would actually pay for this information if I could find a really good expert on copper. Now, I'm a nerd, so I think copper would be pretty fascinating. If all else fails, maybe I'll become a copper expert and charge for it. Who knows? Something like that. I have another podcast that deals with investing with metals and things like that. If you like that even a little bit, maybe go down a rabbit hole on one of these things. And there could be a real need for that. There's so many directions you can go. You might sit there and say, well, I'm not passionate on much, and the things I'm passionate about don't really sell. Take the things you're curious about and go learn and see what that community's like. See if there's an interest there. And even if there's not, create one. Most of my people are doers, so I don't think I need to have this conversation with the majority of you. But I think there's these limiting beliefs, especially when it comes to multiple streams of income that a lot of people have. Like, oh, what if I fail? Well, if you fail, so what? I failed 100 times. It doesn't mean anything. Oh, well, it's going to be a bear market. Nobody's going to be spending money. Nonsense. There's always people spending money, even in bear markets. Rich people spend money no matter what. Americans have disposable income, compared to other countries, no matter what. There's always a market out there. Oh, AI is going to take over. I'll never rank on Google. That's such nonsense, guys. I say this because I run into these people in restaurants all the time. I would tell them about all the cool things I'm doing, and they would share their ideas, but they would never pull the trigger on them because there's always some limiting belief that was complete nonsense. I would tell them it was nonsense, and they just never did it anyway. So those people are the ones that only work in restaurants and complain about it every day. And I'm glad that's not me anymore. So take that for what it's worth.
I hope this episode has taken anyone who still had this illusion of a trader sitting behind their desk. They're making all this money, and then that's all they do. And they go sit on a beach or do whatever they get in their Ferrari. That's a lie. That's a lie you've been sold. That's not how it works. Traders are focused on generating wealth over their lifetime. Trading is one aspect of it. In my first couple years, I made good money trading. And about 5 years into it, I stopped and I looked around and I had made good money. But I didn't have a lot to show for it. And I remember thinking to myself, oh, this isn't good. I don't have a lot to show for it. And I realized it's really easy when you're making good money to spend it and to let it go places. And I realized, no, I need to make this money stick. And so I developed my make it stick concept. And my concept was whenever I had a good month, whenever I had a period of time where I had excess earnings on any of my income streams, I took that money out and I put it in a hard asset. Now, the reason I say hard asset, because at the time I was young, I was in my 20s, I didn't yet have the discipline to not trade it. Because at first I remember thinking, I'm going to trade every dollar I ever have. Every dollar I ever get, I'm going to trade it. And I got to a point where I realized, no, you can't do that. You have to put it in other asset classes. Because I didn't have that discipline, I thought to myself, what can I put this money into that's really hard for me to get to? I can get to it if I need to, but it's really hard. The first thing I did is I actually found a company where you can buy the literal stock certificate of McDonald's, of Pepsi, of Coke. And you literally send your money away. It takes about 2 months, and they send you a certificate in the mail. And if you lose this certificate, you're kind of screwed. And for me to get that back to cash, I literally had to mail in the certificate, wait a couple of weeks. They would mail me a check, and then I could deposit it in my bank. I did that for a reason, because I knew I was too impulsive, and I needed to make it stick. Now, I started doing this with just a couple $100 a month, then I went to a couple thousand. At one point, I totaled up those stock certificates, and I had close to $350,000 after 5 years.
Jesus.
I didn't even notice because I was just making it stick. And so I started to do this with other things. I buy gold all the time. I'm not a big fan of gold. Pretty worthless. It sits in a safety deposit box. But you know what? It sits in a safety deposit box. And over time, that thing goes up in value. And if I ever need that money, I can go get it. I now buy art. I own lots of real estate. I own collectibles. Every so often, again, whenever I have a good period of time, I go out and I buy an asset that goes up in value. That is my making it stick. Trading is going to be a little bit of what you do in your life. Focus on the whole thing, and you'll see where you can be when you get older.
So let me present to you the alternative after all we've said, and how great multiple income streams are, how great divesting some of your money into some of these other assets are. Let me present you the alternative of what a lot of people think the end goal is. Let's say you become a professional trader, even with a lot of money, and that's all you do. And you're able to pull in, let's say, $100,000 a year as a professional trader, which is just God tier level trading. So it's not 100K. You're going to have to pay taxes on that. And capital gains taxes being what they are, there's probably going to be a little more than you're comfortable with. On top of that, you are no longer rolling over your profits. So that 100K, unless you don't spend it all, is probably going to be where you top out at for the most part. Is that really the dream? On top of the fact that, Rob, you said, that people have this delusion that retiring and go spending the next 30 years on a beach is somehow the dream. I would say for most of us traders, I can't speak for you, but I can certainly speak for myself. I lived in a beach town for 2 months. After day 3, I was bored out of my mind. I need stuff to do. I could not imagine a life to where I was only doing one thing and then everything else was just me chilling out. I would lose. I would feel like I was in prison.
Patrick, I've told people for years, they will have to pry the mouse out of my dead hand before I stop trading.
Yeah.
I will never retire, ever.
No, I mean, I'll be doing something I love, whether it's trading, investing, researching, starting businesses, making videos. It took me a while to get all this down and to get these things where I want them. But let me tell you, everybody, it is so worth it when you have, like right now, like content creation is dropping in numbers right now pretty hard because the markets are down. But thank God I have other things. It just doesn't affect me at all. I have faith it's going to go back up again, and I'll just keep cranking these things out until they do. It's life is just as good as it was before, even though markets are down. My biggest wish for you is for you to have this level of comfort and security and happiness as well. And this is one of the biggest ways to do it.
And remember, you will only do your best work if you're doing something you love. Take what you love. If it's D&D, jump into that. If it's trading, jump into that. Focus on that. And I promise where you are in 20 years is going to be a very good place.
Amen, Rob. And that's going to wrap it up for episode 10. Thank you, everybody, for listening. Please take action and let us know down in the comments section. If you have multiple streams of income, what are they? And how well are they doing? And do you like them or do you not like them? Or do you wish you were doing something else? Let us know down below. So many people read the comments on YouTube. Even people who listen to us on Spotify, for example, come back to YouTube just to see what the comments say. So let them know. I have a feeling our community does a lot of things. They just don't do one. So let us know what those things are. And we will see you next week. Thank you for joining us here on the Trading Psychology Podcast. This is VP.
This is Rob. Take care, everyone.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold.
Hey everybody, this is Rob from Maverick Trading and Maverick Currencies. Maverick is a prop firm where we let people come in and use our capital to trade. We enter into a profit split agreement with them to where the trader keeps 70 to 80% of the profits. We keep the rest.
And on that note, I have traded for several prop firms and through sponsorships and offers and things like that, I've gotten to know really well. And I could honestly go 20, 30 minutes telling people how different Maverick is from your average prop firm. But Rob, if you can do that in like 30 to 60 seconds, let everybody know what separates you guys from everybody else.
First thing I want to say is, look, there's great prop firms out there. Every one of them is different. And every single person out there is different as well. We actually have interviews with the people that are looking to come aboard Maverick. And there's times where we say, hey, look, you're not the right fit for us. We are looking for a very specific type of trader. You may want to go to some other places because we're not quite the right fit. The way we work is that we start our traders out with a pretty good significant amount of capital. In Forex, 10K, in stock and options, 25K. And then we adjust them from there all the way up to six figures pretty quickly. As I said, there's lots of good firms out there. We may not be the right pick for everybody, but we really want to have people hit the ground running.
And this leads in really well to episode 12, because I want to ask you out there, not you, Rob, but the listeners, what is your end game with all of this? Do you want to trade your own money? Do you want to trade another person's money? Do you want to show other people how to trade a certain way? Do you want to be a prop trader? There's a lot of ways. A lot of people thought the only way to succeed in the Forex game was to trade their own money. And then I hit them with the reality that said, hey, you probably don't have enough money to make that happen. And it's going to be a long time until you do. So let's focus on a more of a step-by-step approach. So I had always recommended a step-by-step approach that can lead to a host of different outcomes, depending on where you want to go. But that first step was always to demo trade and to see how you can do with that. One of the things that very early on, I really wish I would have said, I didn't say it until later, was that whole aspect of moving from demo into real money trading. Some people don't have a lot of money to do that with, but it's still equally important because there is a gigantic psychological shift between demo and real money, assuming that you're doing it right, and then maybe taking that step even further over to other people's money or whatever different direction you want to go. That real money stage is supremely important for so many reasons. I think, Rob, a lot of people get there either too quickly, like they rush it. I actually think that's what most people do. Or some people just demo trade forever. And no matter how good they are, they never feel like they're ready for the big time. We're going to go over that today. And Rob, what are your thoughts on that? You've seen it all, so you're the best person to ask here.
I don't know if I've seen it all, but I've seen a lot. Most people can learn how to make money on a demo account. Most people can. There's no question about it. And I've seen it firsthand, myself and everyone else. It's very hard to make money in the real market. Literally, the reason why we are having this trading psychology podcast is that this is part of the learning process. People think that they developed their system, they learned about the charts, they learned about all these Fibonacci sequences, and they think, I got it. No, you don't. That is like 10% of learning trading. There's a whole lot more to go, and you can't learn it without using real money.
100%. Because if you're going to trade real money, then you have to learn what it's like to trade with real money. So not only do you have to trade your own money to experience what that's like, it has to actually be a meaningful amount, or else it's pointless. There's a lot of nuances there in terms of timing and how much and all that. And that's what we are going to get into today.
And one thing that I found out just watching people, you have to understand that trading $2,000 is wildly different than trading $20,000. Trading $200,000 is wildly different than trading $20,000. Trading $2 million is wildly different. Now look, people say, look, they're just a zero. I'm making the same amount of trades. They shouldn't be any different whatsoever. Here's the reality. They are different. It absolutely is different trading a $2 million account than it is a $2,000 account. Totally different. You can't learn that step until you get there. So you literally have to go through all the steps. That's the way we structured Maverick, is that we start you with a little money, we give you a little bit more, we give you a little bit more. Not because we're trying to slow anyone down, because that's literally part of the process to becoming a professional trader.
So Rob, let me throw you a curveball here. Yeah, I agree. Those things are different to me because my background and my income level, especially when I started out, was at a certain point. Some people's are much higher. Some people's are much lower. To some people, trading a $500 real money account is life and death. To other people, that's a Tuesday. What do you say to that effect? Is there a sliding scale people can deal with? I know that's a tough question. I don't always believe that trading a $200,000 account is really significant if you're just rich to begin with. Maybe that doesn't mean a whole lot to you.
The one thing I've learned in my life is money is relative. What I thought was a lot of money in the past, I don't think that today. What I think is a lot of money today, someone is laughing at me. They're saying that is nothing. It's all relative to where you are. And that's really the point of this podcast episode, is that when people get into trading, they learn the stuff, they get into demo, and then they make that jump. For some people, it's actually going to be a lot more intense. So for example, the person with $200 to their name, they put $200 on the line. That's going to be wildly different than the rich kid with super loaded parents that puts $200,000 on the line. It's a totally different experience. That's the point of this podcast, is to get everyone ready for that switch, because I'll tell you what, the rich kid is just going to have different problems. They're not going to have the same problems as a person with a little bit of money. They're going to have different problems. To understand that, to where you don't self-sabotage and get into this business the right way, is the purpose of this episode.
Good. And I'm glad you said that too, because we should be sensitive to that. I know it's a little bit off topic, but we always feel bad for people who were born poor, grew up poor, because they didn't choose that. That wasn't on them. Well, at the same time, that rich kid didn't choose that either. And there are a host of problems that come with stuff like that, especially the way they look at money. It's up to them to make money, but if they have a flawed concept of it, they're just as screwed as anybody else. So I'm glad you brought that up. And in my opinion, and I want to see if yours match with mine, there are two main problems when it comes to the time when it is officially the moment that you need to be switching from demo trading to live trading. Let's talk about this first before we get down into numbers. When it comes to switching over to live money, give me your perspective. When do you think that's appropriate? What are some of the pitfalls that people run into when making that decision?
One of the answers to this question I've heard is when the trader feels they're ready. And that is wrong. That's just wrong.
No, wrong. So wrong.
And let me tell you why. Remember in one of my episodes, it was the episode we did on overtrading, and I talked about my overconfidence. How I was confident I could ride a motorcycle even though I'd never been on a motorcycle before.
Oh, yeah.
When someone tells me, hey, when you feel you're ready, go for it. Guess what? I'm ready now. I've never done it before, but I am absolutely ready now because I'm going to figure it out. The answer cannot be when you feel ready. We are going to have two groups of people that we're really dealing with here. People like me, who are very aggressive, who don't want to wait for the time. And then there's going to be a group of people that are hesitant and they actually wait too long. We cannot give the answer that it's time when you feel ready, because that is totally subjective to you and who you are as a person. So let's talk about the actual answer to this question.
Okay, good, because I've seen it all just through my own YouTube comment section. That's usually the cross section that I deal with the most. I had so many people jump right into prop firms after learning my system for 3 months, which is insane. And I was like, well, congratulations. I wish you the best, but you're not going to make it. And then I've had some people that have been with me since 2018 who are still demo trading, not because they're not doing well. They're doing well. They just don't want to pull that trigger. They don't, either they're very risk averse and this is what feels comfortable to them. I don't know. So if you have more clarity on this, I would really like to know.
I have a ton of clarity. Let's talk about just the facts, the numbers. Obviously, everyone needs to learn the business, develop a system, backtest the system, and backtest the system to where they get a decent set of numbers. All right, a decent set of numbers, that is a very subjective thing to say. Obviously, a profitable system is the minimum requirement, the absolute minimum. If you don't meet the minimum requirement of profitable when backtesting, you are definitely not ready to go.
Okay, so I think that's an obvious one. Yeah, if you're backtesting and your system gives you a negative return, chances are you're only going to do worse. So, okay, I've got my system together. I've backtested it. It looks great. Now I'm starting to demo on it. What do you think I need to do from there now?
Before you jump to the demo, there's one thing I want to talk about. This isn't going to apply to everybody, but I've seen this enough all my years of doing this. Depending on what period of time you chose, your backtesting results are going to be either good or bad based on the time period we chose. One of the things that always drives me crazy, and I'm probably going to offend some people here, but I don't care. I hate, especially with options, a lot of times I get all these option sellers. All these people that sell naked options. After the market has gone up for like 18 months in a row with really low volatility, I get all these people out of the woodworks being like, Rob, check out my numbers. Check out my numbers. Okay, what do you do? Okay, I'm an option seller. I just sell naked puts. Okay, yes, you've been in the perfect environment for this strategy. But did you test it in 2008? No. Because guess what? You wouldn't have made it. I can look at your trading plan right now, and I can tell you this wouldn't have made it. You would not have survived this period. So why would I bring you aboard when I think that could easily happen again, knowing that you're fully going to blow up an account? So you really have to go back a proper duration of time and be very thoughtful about it. Be very thoughtful about, let's take, if you have developed a trend following system, I need you to backtest that during a period of time where there was very little trend.
All right, so let's put a little finer point on that. As somebody who evaluates others for a prop firm, what kind of backtesting would you like to see for Forex, for example? The majority of people listening to this are Forex traders in some capacity. For trend traders, which is what we do on the channel, we have had, ever since my channel really started, 2018, 4 years of a very underperforming volume, followed by 2022, which was a lot better. Given those parameters, give somebody something to work with here. How far back would you like to see them backtest and during what years? Can they go maybe from 2020 to 2022, or would you like them to go further back?
One of the biggest misconceptions about the profession of a trader is we've seen all the movies, Wolf of Wall Street. That's not what it's like. What it's like is most of the work is done developing a system. You have to go back and be very thoughtful about how and when is this going to fail. And that's really what it is. If you have an engineer brain, and let's say you are like an electrical engineer, and you're designing this system, part of your job is to think about all the ways it could fail. If you're designing an electrical system, you have to say, what if a kid climbs over the fence? Now look, probably unlikely to happen, but what if they do? Okay, we need to now change our design in case this does happen to where we now have a fail-safe. Most of the work in becoming a trader is doing this kind of work. It's not clicking a button, slapping high fives and making money. It's in the trenches thinking about all the things that could happen. So basically, you need to troubleshoot your system and look at all the vulnerabilities to it and fix those in advance, because what happens is people take systems too fast into the market and then they find out, oh, It fails. A kid did climb over the fence. Oh, the Fed did this unexpectedly. And then the system fails. You've got to be really thoughtful about that. I don't have anything real concrete other than you really have to give a deep dive to your system.
All right, well, can you expand on that just a little bit? Because one thing you said triggered a bit of an alarm bell. I think a lot of people's systems, quote, failed when there was a rogue Fed meeting that went the opposite way of what people thought. When you say fail, how long of a duration do you think that has to take for us to say, okay, this system has failed in this particular circumstance?
That is a great question. Failure is a relative term because it really is about one of two things. Number one is drawdown. How much of a drawdown did it create? Now, if it created a 15, 20, maybe even 25% drawdown, okay, you know what? Someone can recover from that. Did it produce a 50, 75, 80% drawdown? You can't recover from that. It's really about the depth and the duration of the drawdown, much more so than anything else.
Okay, so that's actually a really good answer because on my channel, I give people kind of a guideline of what to avoid in terms of maximum drawdown. So this is really good to also hear this from somebody who runs a prop firm. It's okay to have different numbers here because it just kind of depends on what you're doing and which direction you're headed. We don't throw actual numbers out here because this is more psychology than it is money management. Yeah, good to know that, what I say is sometimes different from the requirements an actual prop firm might have because you guys all have different ones. So that's a good way to do it because you're right. Yeah, if you're sitting there trying to find out like where all the fail points were, you'll be doing this forever. So using actual numbers like that, I think that's the actionable play. Yeah, I really like those points. That's something everybody can really use. But then once you're done with that, you still have to forward test on demo. I've always thought that was non-negotiable. Don't just jump right into regular money. What are your thoughts on that, Rob? And you've probably already heard everything I've had to say about forward testing. What can you add or what would you change to any of that?
I'm going to give you an answer that really surprises you and others. 2 months.
2 months? That does surprise me. That's very low. Why do you say that?
Because everything we just talked about, until there's real money in the line, you're not really learning anything. What you need to learn in the demo period is how to execute an order, how to put in your order correctly, how to change it, how to manage the stop, how to do these things. Other than that, you're not really learning anything. You're not learning anything about the actual business of trading. So you have to learn how to do the mechanics of it. How do I identify a signal? How do I put in the order? How do I execute the order? How do I put in my stop? How do I manage my stop? How do I manage my trade? That doesn't take a lot of time to learn. You have to get to the money part before you really start to learn about trading.
Okay, so this is good. Like you and I have pretty much agreed almost in lockstep on everything for 11 episodes. I'm glad we have a little bit of a difference here. Hear me out on this, and maybe I'm not understanding this correctly. So I've always said to go longer because what if during those 2 months, was just a period of absolutely no volatility or a period of wild volatility. We've all seen 2-month spans where that has happened. I say go longer so you can experience more market conditions and get used to how to trade those. But what I think you're saying is yeah, you're still going to do that. You're just not going to do it on demo. You're going to do a lot of that actually trading real money and getting yourself in that game a lot sooner. Am I close here?
Yes, and let me give my previous with a small amount of real money.
Well, how small? Because if I'm trading $100, that doesn't mean anything to me, and I'm not going to trade it like real money. I'm pretty much going to trade $100 like I would a demo account. So, like, what are we talking about here?
Great question. We talked about how money is relative. So I'm going to go back to the Yerkes-Dodson law. There's something called the Yerkes-Dodson law, which is basically a graph that basically maps out for us in humans where the optimum level of performance is made. If you risk too little, so let's say that you are fairly loaded and you decide I'm going to start out with $200. Guess what? You're not going to make it. It's not even remotely interesting enough to you. However, let's say that you only have $200 and you start with $200. That is way too intense. That's so intense that you're never going to manage it as well. I wish I could give you the right number, but it's all relative to where you are with your situation. So for some people, it may be $200. For some people, it may be $2,000. It might be $20,000. But look at this chart of the Yerkes-Dodson law. If you are listening to this on Spotify or another podcast, just simply Google Yerkes-Dodson law. Look at the chart. There is a point where you have the optimum level of stress, but not too much stress. You need to find that level. I wish I could give everyone a hard number. You've got to really figure this out for yourself.
Okay, good. And we will link you to that very study down below in the description if you'd like to take a look at it. And that's good. I'm glad you didn't give a hard number because like you said, this is a very nuanced thing. But I would just say it has to be an amount of money that's not going to break you if you absolutely lose it, because we don't want anybody, having a financial hardship here, but it still has to be enough to actually mean something to you to where you really don't want to lose it. If you did, that might actually set you back a little bit, because in real life, that's probably going to be what you're dealing with. Is this fair to say?
I think it's healthy for everyone to go into their first account with the expectation that they're not going to make it big and that they're likely going to lose a portion of it at least, if not a significant portion. I think you have to go into your first account with that expectation. If you're wrong, I'll slap you high five and say great job, but I think it's a very healthy place to be.
Okay, good. I had this in my notes. I meant to bring this up earlier, but I didn't. But I think a really good actionable thing you can do in the forward testing stage, whether this is demo or real money. We spoke, and you can go back and just kind of type in to my channel the word journal. I did a whole old podcast episode on how to set up a really great journal. I said the most important column in that journal, journals are spreadsheets to me, is the comments section, where you're going to write down where you went wrong, assuming you made a mistake not following your system to the letter. I would say as far as when to pull the trigger would be when you have absolutely minimized the amount of comments in your journal, because that says you're actually doing what you're supposed to be doing. And that's a really good thing. If you can show that you can trade a system that has been proven to work, you're probably pretty close to ready, in all honesty.
I'm going to come in with an even more definitive answer. Look, there's been a lot of ambiguity in this episode. What we've talked about, hey, it's really based on you and your money levels. But look, there are two hard answers here. Number one, if your backtesting doesn't produce a profit, you aren't ready. You cannot go any further. Here's the second definitive. If you're still screwing up on a demo account with not following your system, you cannot go to live money. If you even have 1 time out of 10 where you did something you shouldn't and it's just demo, you are in a lot of trouble when you get into the live market with live emotions. So for me, those are two hard lines. Number one, you have a system that produced profitability in the backtesting. And number two, you don't screw things up in your demo. That's a hard line for me.
And I think that's great when you said 1 out of 10. I mean, traders, do you have any idea what taking 1 unnecessary loss out of 10 does to your bottom line? I mean, do the math. It's extraordinary. I think that's a really good guideline to go by. Rob, anything else you want to add to this? I know we've been a bit all over the place, but I think we ended up in a pretty actionable and easy to understand place, which is good, because this is just one of those topics that it's not super black and white, but there are very black and white things you can do.
We need to talk about account size. For any of you that play poker, there is a certain amount of money that you need to have in your bankroll in order for you to sit down at a poker table. Now look, anyone can sit down at a poker table. I could have $20 in my pocket. I could have $200. Anyone is allowed to sit down at a poker table. Anyone is allowed to put money in and to trade the financial markets. Anyone. However, if you really want to learn poker properly and play poker properly, you need to have a certain amount of hands in your bankroll so you can sit through long streaks to where you lose money. You have to have that, or else, statistically speaking, you're very unlikely to win at that table because you don't have a big enough bankroll. Trading is the same way. In our Dealing with Slumps video, I gave everyone a download that they could download. If you don't have it, go to maverickcurrencies.com/odds. Download our chart of the odds of you having consecutive losses in a row. You need to be able to survive these. So you've got your back testing, you've got that chart. You basically have to get enough money together to where you can actually sit through those drawdowns. One of the things we talked about is go back into your back testing and see the worst period of time. What was the worst period of time that you had in the back testing? Apply it to trading today and see if you could survive that. If you can't, you need more money. You need more money or you need to change something up. Account size is really a big deal when you start out, because if you don't have enough money to weather the drawdowns that are statistically guaranteed to happen, not to mention the emotional mistakes you're likely to make in your first go around, you are guaranteed mathematically to lose. It's not even about you didn't have enough information or data or intelligence. It wasn't about that at all. It was just math, and that's why you lost.
That's really interesting. Maybe $200 is a lot of money to you. I'm certainly in no place to judge. The problem with that is you're going to have a really hard time practicing proper money management because sometimes micro lots just don't go low enough in certain situations. So you're probably going to need more than that. Again, we don't like to give numbers here, but all I can say is if the amount you're putting in doesn't allow you to trade like you're supposed to trade with real discipline and real account sizes, then you're just simply going to need more. I'm sorry, I don't make the rules. That's really all I would have to add to that. But there's something else we spoke about in an episode not long ago that can also alleviate a lot of this in a way, but is something, and for that reason, I think is something you should probably have or start working towards before you go live, or even really before you decide to join a prop firm, especially. And that's going to be having those multiple income streams as well. What are your thoughts on that? I almost think that's a prerequisite.
One of my sayings over the years has always been, you need to trade for the sake of trading. Having other income sources allows you to have the freedom of trading when the setup is correct. Having these other income streams coming in or having other monies to where you can actually make no money for 3 months is going to put you in a situation in trading where you can then trade for the sake of trading, meaning just trade because the market is there and the market is giving you a good setup and it fits all your rules. Anytime you're put in a situation where you have to make a trade for another reason, you have to make your rent, or you're bored, or you lost a lot of money last time and now you got to make it back. Anytime you put yourself in that situation, it's really tough. I don't want to say it's impossible, but I'm going to say it's almost impossible to make it because trading is hard enough to just get good trading numbers. Then you throw on all of those minefields of psychology problems. It's going to be very, very difficult. So build those other income streams. Think about what you can do to where your trading isn't going to pay the bills. It's just going to grow and grow and grow.
Okay, good. Because I know I was taking a bit of a risk bringing that up, but all I can say is if I owned a prop firm, I don't want people coming in trading desperate. You better have your act together in that regard. So that's a good one too, in terms of when to actually make the jump. Don't make the jump because this is an all or nothing proposition and you're going to live and die based on your results. Make sure you're in a good place first. And that's tough because a lot of us aren't, we started out, we weren't in a good place and we trade so we can get out of it. But yeah, don't come into a prop firm with any level of present or future desperation because that's not good for anybody. That's not good for you. That's not good for the firm. That's bad for everybody. And having multiple income streams does go a long way in alleviating that burden.
One of my favorite questions to ask people, whenever they're having a hard time making a decision or they don't know what to do, I always say this. Imagine your best friend who you deeply care for and love. Your best friend came to you and said, hey, I'm thinking about doing this. What do you think? Whatever advice you would give that person is the advice that you should give yourself. And it's funny because I'll even use this on small stuff like someone says, oh, I think I might want to buy Tesla. Okay, imagine your best friend is wanting to buy Tesla right now. What would you tell them? All of a sudden they're like, you know what? I think I'd tell them to wait a little bit. I think I'd tell them to do a little bit of this or buy a little bit today and then maybe buy a little bit more later. All of a sudden, their answer changes to what they would actually do because now it's external. You are now having to put yourself out and give advice to someone else, and that advice might hurt them. So you're very, very delicate. I would really recommend you go through that exercise and think to yourself, okay, if my best, dearest friend came to me and said, hey, I'm ready to go from demo trading to live trading, what do you think? The advice that you'd give your dearest best friend is exactly the answer to this question.
What if I secretly hate my best friend?
Well, then that's not a best friend.
Yeah, that's true. Okay. Well, good. Well, on that note, we'll go ahead and wrap this episode up. I hope you got a lot of actionable advice out of it. Depending on where you are in your trading journey, this might have been just the thing. Thank you for listening to episode 12. This is VP, and I will see you next week.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of NoNonsenseForex.com and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold.
Hello, everybody. This is Rob. Nice to see you here again. In case you don't know about me, I've been trading for over 25 years, and I trade all the markets.
And Rob, we had a promo a couple weeks back regarding Maverick Currencies. We have a different promotion this time around. Why don't you tell us about that and how this one's different?
In the last episode, we talked about trading multiple asset classes and how that's just a natural evolution for traders. Now, a lot of your traders, they're really focused on Forex and crypto. We love that. Our whole division, Maverick Currencies, is Forex and crypto. Our other division, Maverick Trading, that's been around for over 25 years, we focus more on equities and options. And I say equities is a way to hedge out our options trade. So it's almost 100% options trading. For anyone who's interested in becoming an options trader for Maverick Trading, jump over to maverickTrading.com/NNFX for No Nonsense Forex, and you can get a 1-week free membership. And it will allow you to go in and check out what we do for courses, check out our tests that we require our traders to take, really just to test out and see if this is something you want to do.
And so, yes, you can become a professional prop trader many times over with the same great company. Now, moving on to episode 11, we're talking about confirmation and recency bias. These are two different things, and they are easily confused, I must admit. I cross these things up a lot. Not like it really mattered, but we should probably define them now. This is going to be a mostly Rob-heavy episode because he really does focus a lot on confirmation bias and what it can do to traders, to where I'm kind of more in the recency bias camp, which we have already glossed over a few times on this show. So Rob, why don't you get us started, talk about kind of the difference between the two and, kind of lead us into this episode.
Let's just start off with a bias. A bias is a pre-held belief that gets in the way from you analyzing the data in a clear-headed way. Back when I was a kid, I had a teacher talk about how we all have this invisible plane of glass in front of our eyes. And every time something happens in our life, we write something on it. And so the next time we look through that glass, we've written something on it and we're going to treat it differently. That's basically all the biases that you could possibly talk about. It's from there's something basically written on that piece of glass that is going to cause you to look at data differently. In the past, you might have looked at data much more honestly, and now you've written a couple things to where you now no longer honestly look at the data. That is a problem as a trader. We need to be very data-driven.
And I think you're right, because there's that old saying, what doesn't kill you defines you. And so all of these little data points that you get on any given day, however you interpret them or however you have grown to interpret them, does shape you. I mean, everybody who listens to this, or most of you probably know, I have an investment podcast, and I'm extremely biased on pretty much everything. But as a result, that gives me conviction in my investing. At the same time, I could be wrong. And so I have to keep reminding myself of that and take actions accordingly, and really, really stress the fact that I do this, because I know that most people don't do that. They all have biases, and it drives everything they do, including things when it comes to their money, which can be very, very dangerous.
The person that says they have no bias probably has the biggest bias of them all. What do you think about that?
Amen. Yeah. Not to get into too sensitive topics, but the people who act like they're completely neutral in everything are usually the worst offenders deep down inside.
We just all need to admit that we have them. It's fine. And we're going to get into some really deep stuff, and we are going to get into some pretty sensitive topics, and we're going to have to kind of dance around. But look, we all have them. The best thing to be is aware of them. As long as you're aware of them, then all of a sudden you have a choice. And it goes back to our whole episode we did on behavior change. Pre-contemplative means that you have no idea what you're doing. You're just a robot shooting out answers. You're not even seeing that you have writings all over that glass in front of your face. Once you can see them, then you finally have a chance to change that. So the first one we wanted to talk about and cover is recency bias. What does recency bias mean to you?
It's easier to give examples, I think, than it would be to define this, but it's letting the things that just happened in the past influence your decision now. And we touched on this quite a bit when we talked about losing streaks and slumps. I think what we're about to talk about here is a nuance that doesn't really fall into that category specifically.
That's a great definition. Let's just share a couple of examples of what recency bias is, because as you said, I agree. It's easier to show examples of it than to explain what it is.
Yeah, and I think the best examples, because if you have been trading for any amount of time, you have experienced this one for sure. It would be, and this is an emotional thing, and it shouldn't be, but it is, and it's happened to all of us. It probably still happens to a lot of you, is falling in love and or hating certain currency pairs in Forex, for example. For clarity, I have put out a couple of videos on my channel saying, hey, these are my favorite pairs as a trend trader, and this is why. Because at their core, they have this ability to want to trend more and without a lot of nonsense bringing them down. Now, these videos were made like 4 years ago, 5 years ago even. And people ask me out like, hey, are these still your favorite pairs? I'm like, well, yeah, at their core, they are. They may not have performed as well as they have before, but I try not to look at that because I used to always look at that. So I'll give a couple examples here. Way back in the day, before I'd really figured out, kind of found my way, I was trading pound CAD on the 30-minute chart. I was searching for that magical combination of, my indicators and time frame and pair and everything like that. And I really felt like I had found it. I kept winning, and if I lost, it would be a small loss. Even if I would make a mistake, like a bad mistake, whether it was position sizing or time, or I would go early because I was getting antsy, whatever the case was, I would still win on the pound CAD 30-minute chart. And I used to say this thing, there's a line from The Wire that says, even if I miss, I can't miss. And so I just felt on top of the world. I'm like, man, if I just keep sticking to this one pair on this one time frame with this one little hastily thrown together algorithm, there's no stopping me.
Ah, the holy grail of trading. I've found that many times.
Yeah. If somebody would have said that to me, I'm like, yeah, oh, actually, okay, that does sound really stupid. But there's nobody around to say that to me. So I thought I had found the right combination to open this lock and find the Holy Grail. I must have done that for, no kidding, Rob, probably about 6 weeks straight with nothing but success and just a few losing days that weren't even that bad. And then crash. And then I lost it all in a matter of probably 4 days. Because I was saying, okay, if I'm doing this well, I'm leaving money on the table by not risking more. And so I allowed myself to do that. And as is always the case, fate has this funny way of punching you in the face just at the perfect time. Right when I started doing that, here comes all the losses. But, everybody does have their favorite pairs out there because they remember, how well those pairs have treated them in the past. But that doesn't make them a whole lot better or worse than other pairs. Now, on the other side of that, and I think this actually happens more, we have certain pairs that we hate. There's pairs out there that they refuse to trade just because of how poorly these pairs treated them in the past. And sometimes, for example, if you're a trend trader, just how long certain pairs have given you absolutely nothing to work with. But my response to this, yes, it might be this way now, but it won't always. So I can talk to you about this, Rob, because you know this very, very well. Take the dollar yen. Throughout the entire 2010s, that pair, if you're a trend trader, that pair was either an absolute pig or it could make you rich overnight. It just depended with the whole Shinzo Abe reign and all Abenomics and all the crazy stuff they did to just hammer that currency into the ground. And then you would just have months of nothing. It was this crazy little roller coaster. And depending on when you got into the Forex market and really started trading it, you either loved it or you absolutely hated it. But the right thing to do was just to trade it anyway, because those moves were so big that it could make your entire career. Do you remember this at all?
Absolutely. And the pair that pops into my mind is Euro Swiss franc. Euro Swiss franc is usually pretty highly correlated, so they don't move a lot until they become uncorrelated. And then they are fantastic trading pairs, but then they go back to being correlated again. So you really have to just move with the market. As the market gives you opportunity, you can't have any allegiance to one pair or the other because it's going to change, just like you saw with pound CAD.
Yeah, that's a really good one, because that for a long time didn't move at all because of the peg. I said, okay, we trade every combination of the major pairs except for this one because it has not uncorrelated yet. And then it finally did, and I'm like, okay, game on. And then it got all weird again, and people kept asking me what to do. After a while, I was like, you know what? Just let it be. Don't try to change with the winds. Just let these things be. People are really concerned about things like that because they are looking for reasons to avoid these things simply because they're just tired of taking losses when they don't move. They assign that futility to the pair itself. And I don't always think that's right. I actually think most of the time that's not right. They should just power through it.
I have a saying, and it doesn't really make a lot of sense when I first say it, but my saying is trading is trading. And what I mean by that is that in the end, every single thing that you trade is a symbol that has a bid and the ask, and the price moves from supply and demand, period. That's all trading is. Everything you trade works along that same premise. Now look, some are going to move faster than others. I use the analogy of driving a car is driving a car. Yes, it might be a steamroller that is very, very slow, or it might be an Indy 500 car. It's just how much volatility it has. Other than that, the mechanics of trading is the same regardless what you trade. It doesn't matter what the symbol is. What it matters is what's the direction, what's the supply and demand, and what's the velocity and volatility of it. Period. Trading is trading.
And I absolutely love that because when I started my material, I made it for a beginning trader. Because if you weren't a beginner, you were at least a beginner in my particular system because nobody had ever seen it before. Over time, I started getting a bit softer on the rules. I'm like, okay, I told you to do this all the time, no matter what. However, if this situation occurs, and the reason I did that is because the worst thing you can do as a newer trader or as an inexperienced trader or as a trader who's not consistently profitable just yet is to try to put a fine point on things and to try to cherry pick things and say, yeah, I'm going to trade this, but I'm not going to trade that. I'm going to trade this time frame, but I'm trade this time frame on certain days and when this session's going on. No, whatever you do, whether it is intraday or the daily chart or the weekly, whatever it is, just be stupidly consistent about it. I think that's one of the biggest takeaways here because everybody wants to try to fine-tune things by eliminating certain pairs, a certain this and that. And I just do that when you're 5 or 6 years in. Don't do it now. And most of you guys just aren't there yet.
The one example of recency bias that I want to share, which I think is the most dangerous one, is where you make a trade, the setup hits, everything looks good, you put your stop in, and it goes down or up to your stop, and it barely stops you out and then reverses the other way. And then you say, okay, I'm just going to keep plugging along. Your next trade, same thing. Barely get stopped out, would have gone your way. Third time, stopped out, would have gone your way. That fourth trade, you are going to be in so much trouble because your brain is going to be going crazy. The last 3 times you got stopped out too early and it reversed and you would have had a good trade. That fourth trade is going to be very, very difficult to do perfect. Not because of your system, not because of your backtest, not because of anything, only because of what has happened recently is going to cause you to do something different. Patrick, have you seen that one?
Yeah, and I was really trying not to be heard laughing, but I was laughing. I didn't know if the mic picked it up or not because your brain is going to be mush by that fourth trade. There's almost no way it can't. And this is good to talk about this because we really didn't talk about this during the last episode talking about slumps because this is a pretty nuanced thing. But again, it's something that happens to everybody. And yeah, you got to be ready for these too because this is going to screw with your bias in particular. And we could even take this the other way. If you find yourself with a very disciplined system and because of impatience or frustration or whatever the case is, you become a little bit undisciplined, maybe out of those 5 or 6 things that tell you when to go, you waited for maybe only 3 or 4 of them and you just went. And that trade ended up being a great winner. Now we're talking about a whole other thing here. You just justified your undisciplined trading. Now you might even start thinking, oh, wow, this whole disciplined system I was following, the hell was I doing? I could have just done this the whole time, especially when you're new. You want that taste so bad. And if you're just not getting it, but then you finally get it over here by doing something else, it's so easy just to allow yourself to move back and forth all over the place and you never end up in one spot, which means you're never, ever going to be successful long-term because you just keep jumping from thing to thing. And I think that's a reason why a lot of people do jump from thing to thing because the first time they jumped to that thing, it rewarded them. Am I making sense here? Have you seen that?
Yeah, and then when it stops working, they abandon it. It's all
Right.
recency bias. It's all recency bias. Other examples of recency bias, things like having multiple winners in a row, that causes me trouble. That one has been my Achilles heel in my early days. Was I made the worst trades after I've had the best streaks. Revenge trading, we've all done revenge trading. You've done that one, Patrick?
Mm-hmm.
Yeah, because you have to get that one pair that took your money. You got to go get it back from that pair. This is all recency bias. We could go on and on about all the things that could happen. Whatever's happened the most recently is going to have the most effect on your current trading decisions. So let's talk about how to stop recency bias. I'm going to go back to episode 4, where we talked about behavior change. One of the things we talked about was doing a daily routine. And the whole point of the daily routine was to eliminate the baggage. When we talk about baggage, it's all of this stuff, all the stuff that you're bringing into this current trade. You need to have a daily ritual where you really think about it and flush that out. We talked about meditation, we talked about walks, we talked about a lot of things to basically just clear that baggage out. We've already kind of covered the how to get rid of it, but I really wanted to make sure everyone was self-aware, because remember, if you're not self-aware, you have no chance at all of ever changing it.
One of the ways I would always tell people, and it's not quite as eloquent as yours, it's very blunt and piggish, was to say, don't fall in love. Because everybody knows when you first fall in love, you're blissful, and anything your partner's doing that might be a red flag, you don't see, you try to look past it, and then it's going to probably get you in the end. Don't be so scorned by a currency pair that did you wrong that you just completely ignore it. Because I'm telling you, the second you do that, it's going to start treating you really well, and you weren't there for it, and you're going to lose twice. Understand that all of this ties down to emotion. And if we've told you anything, either on my channel or on this very podcast, these are things you absolutely have to avoid.
And this is really about when it comes down to the point where your system said go. Everything that you programmed or backtested says go, and you chicken out or you deviate. These are the things that can get into you. As long as you know about recency bias, you understand it, all of a sudden now you can actually combat it. For me, when I have a big winning streak, I know that I am so dangerous. I am paranoid. I am taking money out of my account and shoving it under my mattress because I know what's about to happen. Before, I did the exact opposite. I went bigger and harder, traded more because I was so on top of the world. Once I finally understood it, now I don't have that problem anymore because I do different things, because I was self-aware. So that is the point. Be self-aware of all these things you're coming into.
Agreed. Yeah, I think that's just our experience talking, because I experienced the same thing. As soon as I start winning, I almost feel worse because I'm like, oh man, this is about to end, and when it does, it's going to be bad. So let's just bank these wins while I can.
That is the healthy way to do it. The next one we want to talk about is confirmation bias, and this is where I'm going to get personal. I actually might ruffle a few feathers here, because we're now no longer talking about what happened to you. We're talking about you, who you are, and what are your core beliefs. Now, we're not going to get too deep into politics or too deep into religion or too deep into these really sensitive topics, because look, everyone can have any belief they want. If you want to be far left, far right, in the center, I don't care. If you want to be the most fervent believer, a zealot, or you want to be a total atheist, I don't care. It doesn't matter. It doesn't matter to me, but in your trading, it does matter. And who you are, when you take that into trading, all of those things you wrote on that window in front of your eyes, you're taking them in and you cannot see data correctly. So let's talk about the first one, politics. Now, I'm just going to give you one little study here, just to show you how big of a deal politics are. In December of 2020, Donald Trump was still president. Pew Research did a survey, and they went out and asked people, what is your opinion of how the president is handling the economy? And how do you think the economy is going? In December of 2020, 81% of Republicans said that the economy was doing great and was favorable. Only 39% of Democrats said the economy was favorable. Now look, if you remember, December 2020, the market was doing great. The economy was doing great. Everything was great. And yet, Democrats thought it was not so great. They thought it was bad. 3 months later, after Biden took control of the presidency, they did the same research study. Republicans were now 35% favorable of the economy. Democrats were 58% favorable of the economy. Do you want to know how much GDP changed during that period of time? Zero. Do you know how much the cost of gas went up or down during that time? I think it was about 10% was the range. Nothing changed. Not one thing changed except for people's perception. And I remember back in like 2008 to 2016, all of my Republicans were bearish and the stock market was going up. There was a great period of time for the stock market from 2009 to 2016. And I was just hammering on them like, hey, look, I know you don't feel like the country is going in the right direction, but look at this market. It's a bull market. You have to be bullish. And I swear the second that the presidency changed in 2017, all of my Republican traders, they got bullish. All of my Democrat traders got bearish. And I had to do the same thing on the other side. I couldn't believe it. Like, oh my gosh, this is the exact same thing. Nothing has changed. Obama had 2.1% GDP through his whole presidency. Trump had 2.3% up to the first quarter of 2020 before COVID started. The economies were the same. They were the same, but people's opinions were wildly different. Politics is one of the ones I see really big. Now look, not as much in the Forex market. The Forex market, I love Forex because everyone understands it's just money moving around. In stocks, options, bonds, all the other asset classes, this really can mess with people. What's your opinion on this one?
Yeah, I'm glad you said that last part at the end because I just kept thinking, I was like, how does this apply to Forex at all? Forex just does what it does. But you're right. Yeah, as somebody who runs an investment podcast, like deep down, I'm saying, well, okay, in 2017, the Democrats were probably a little bearish because Trump was tough on China. And when Biden got in, the Republicans were probably more bearish because he closed down the pipeline. So few people are even really aware of stuff like that. So I think you're exactly right. Everybody just all of a sudden stopped ignoring the data, the actual numbers that were right in front of them, and completely defaulted to their own confirmation bias. So yeah, I kind of now see how this plays in.
And another one that I suffered from. Are you an optimist or are you a pessimist? I'm a pessimist. When I started trading in 1997, I really fell in love with shorting. I love shorting, and I did really well when the dot-com bubble burst, and I just loved it. At that point on, I never wanted to buy or go long again. I only wanted to go short. That's it. And I became what is called a perma-bear. I see them bring on perma-bears all the time in CNBC. Every single time they bring a perma-bear on, the market's on the verge of failure, everything's going wrong. In the meantime, the market's ripping their face off, going higher. And then, of course, they bring the other side on, the perma-bulls, where everything is rosy, like at the top of the biggest massive bubble we've seen in years. They're still saying, buy Bitcoin at 50,000, 60,000, buy this, it's great. No, it's not great. You have to be able to look at data correctly. And if you can look at data without having those biases, then all of a sudden you're going to make a much better decision at the point of the trade. This is one where, again, I think whether you're an optimist or a pessimist is really going to determine how you look at data. If any of you have ever been married or in a long-term relationship, one of the things that blows me away is how when two people literally see and hear the exact same thing happen and come away with two totally different ideas of what just happened. Totally opposite. It blows me away. It still surprises me to this day. That's how markets work. Everyone's looking at the same data, but they have two totally different opinions sometimes. Patrick, what do you think?
I 100% agree with that. And it really kind of plays off of what we were talking about a few minutes ago with people just ignoring the data like that. The one thing I will say is that anytime I see a perma bear on CNBC, I'm really surprised because their sponsors are all financial products which rely on the market doing well. So it's not in CNBC's best interest to bring on bearish people. I do see them do it from time to time, but it's pretty few and far between. Then again, I really try not to watch CNBC or Bloomberg because they usually are such bulls. And that kind of leads me to what I was, I want to kind of ask you this question. I guess it's maybe not super helpful to most people, but maybe it will be. So let's see what happens here. I am probably known as a perma bear. I've been bearish since about 2019, maybe before that, because I was buying gold before that. So I was always said, okay, this is not making sense. I should prepare at least for what should be a pretty big crash. Now that it's finally happening, it's really gaining momentum. I seem even more bearish because I also think it's going to last for a long time. However, I have always considered myself to be an eternal optimist. The other side of this is that, hey, yeah, the world could be going to shit and it could be getting really bad for a lot of people, but we can make money off of this at best. And at the very worst, do things to protect ourselves. And I actually think that's pretty exciting because even the things we use to protect ourselves can make us money. And if we can stay afloat while the whole world crashes, once we finally do get out of this, and we will get out of this at some point, we can all end up in a really good spot. So with something like that, I don't even know where my biases are because it seems like I'm a little bit of this and a little bit of that. But I would like to know because I, again, don't want it affecting anything I do down the road, just because as traders, we know how neutral we have to stay. Am I too heavily invested into my own bias? That's a question I'm constantly asking myself.
And it's a good thing to constantly explore about yourself. After 25 years of trading, the thing I am the most proud of all the things that you need to overcome to be a professional trader, the thing I'm the most proud of is I no longer trade my opinion. At Maverick, we always talk about all these things. We talk about the Fed, we talk about gold, we talk about all these things, but in the end, we call it cocktail talk. So we always say, look, this is just cocktail talk. What that means is this is when you and your buddies are having some drinks and you're talking about whatever it is we talk about. That's all it's good for. All this cocktail talk is just for fun. When it comes to trading, none of this should be in your trading. None of it.
You literally say the cocktail talk line all the time, and it doesn't get old because it's always relevant. You're right. There's a time and a place, and when you're in front of when you're in front of your computer, that's not the time or the place.
A true trader has no bias. At Maverick, we always say that we are market agnostic. We don't care. One of my favorite lines from any trader. I've been trading with my friend Joe since 2000, and early on, him and I were arguing about a trade, and I said to Joe, I know I'm right. And Joe looked at me like I was crazy. He said, I don't care if I'm right. I just want to make some money. And I realized, holy shit, like I am so wrapped up with being intellectually superior. He doesn't care. He just wants to make money. And I realize I'm wrong. I'm wrong. Even though I might be right in that one trade, I'm wrong. And I had to learn how to humble myself and just say, look, I just want to make money. I just want to be on the right side of the trade. I have no more bias anymore. Just the bias of being on the right side of the trade.
You want to hear an opposite story completely? And I think this actually does tie in. I talked to somebody last time I was in the States. I remember this. I was sitting right next to somebody I didn't know, and we started talking about gold. And I said, do you hold gold? Do you trade gold? And he goes, I hate gold. I'm like, why do you hate gold? He says, every time I try and trade gold, I just get murdered every time. And in my mind, I thought the opposite of what you thought. I thought, man, this guy doesn't trade with a system. And therefore, I'm freaking elite when it comes to this because so many people don't use anything that they can default to. There's no way this guy is ever going to make consistent money trading anything. And I knew that just by what he told me, just by that one sentence. I knew that who I'm talking to right now is the majority. And I think that leads in really well to the overall solution for this. It's not going to be something completely out of left field and creative like Rob usually brings to the table. This is actually something pretty obvious. Rob, you want to kind of take us home with this?
Absolutely. It's simple, but it's not easy. It all starts with self-awareness. If you're a far left Democrat, embrace it, love it, go on your marches, do your thing. If you lean to the right and you think that you don't trust the government and taxes should be lowered, that's great. Go do all the things with your buddies that you usually do. Go have some fun. But do not bring it into your trading, ever. You need to be aware that you are going to bring it in. And as long as you're aware, you can actually change it. And once you can change it and wipe away that baggage, all the things we talked about getting rid of baggage, then all of a sudden you can literally trade the data, which is the charts, period. Once you can get to that point where you literally have no bias whatsoever, you sit down, you look at a symbol, you look at the chart, you look at the support and resistance points, you enter your trade only based off of what's on the charts, you're going to be really good at trading. But it takes a while to get to that point. Self-awareness is the first step. And remember, We said this in one of the podcasts, and this is something that you should always be thinking. You don't know shit.
You don't. No, that's just it. That's why we put these systems together and test them just to see, does my system know shit? Oh, it kind of does. Okay, well, then that's what I'm going to use, because not only do I know that it can perform, I know what it's capable of. So if I can just get myself to get my results closer to that result, then the better off I'm going to be. It's really no more complicated than that. And we always say, these answers do sound relatively simple, but you and I both know it's hard to make that happen. So we do our best here.
Mike Tyson famously said, everyone's got a plan until they get punched in the face. You will get punched in the face. Can you follow the plan?
100%, because you're like, okay, I'm going to take all these biases, all these emotions out of my way. I'm going to sit down and I'm going to trade. And then something happens. And then it all falls apart.
Recency bias.
So we know, yeah, it is. It's, we know it's tough, guys, but the best we can do is A, identify it, and then B, give the most reasonable solution we can. And then it is up to you to take it from there. So thank you, everybody. This has been